On the NASDAQ down 79. That means a loss of right now 5.8% on the open. Here's what the big caps are looking like. Cisco's giving back 7.5%. We're at 1335. Microsoft down 6% to 5391. Intel almost 7% weaker. Sun down 7.5%. Dell down 7.5% to 2090. Cisco, as I mentioned, down 7%. On the bottom, we got Ciena down 5.25% or so to 1268. Amgen down 4% to 6155. And lastly, IDIC Pharmaceuticals down 3.5% to 5419. Even though they have positive news out of an FDA panel. The opening bell just a few minutes ago, and we have pressure on the opening bell. Back to you.
Okay, thank you, Tom Costello. We would hasten to add that almost all of those are technology stocks. Let's check in with Maria Bartiromo. She's at the big board.
And those who took those buildings down will hear from us.
Hearing Dick Grasso speak.
Soon.
Introducing everyone on the podium. He's introducing Carl McCall, comptroller. He's introducing Hillary Clinton, senator from New York. He's introducing Mayor Giuliani, Treasury Secretary Paul O'Neill. This is a very emotional morning.
9:30. Pause. Reflect for 2 minutes on those whom we've lost. On those
the chairman of the New York Stock Exchange took the podium a few moments ago.
Still alive.
To basically encourage the trading floor.
Who were killed or injured in the Pentagon in Pennsylvania. Those wonderful people on the planes. This is a moment of reflection. So at 9:30, we will single stroke and pause for 2 minutes. We will then be led in God Bless America by Major Roseanne Scrignoli of the United States Marine Corps. After which, our heroes, representing the fabulous men and women who are crawling through the rubble as we speak, seeking survivors, representatives of the New York City Fire Department, Police Department, the emergency services and rescue teams, and the Port Authority Police. Our heroes who make today's resumption possible will ring this opening bell. And make no mistake about it, these wonderful men and women who put their lives on the line, all of the agencies, police, fire, emergency rescue, all of the varying neighboring police departments who are here, allow us to do what we do. This couldn't happen without their great guidance and help, and certainly their love and affection for this great country. Let us celebrate these wonderful men and women. Ladies and gentlemen, each of the wonderful public officials who are with me on the podium will join me on the trading floor, and I know you will join me in extending the traditional NYSE welcome, a hug, and a job well done. We wouldn't be here today without this fabulous partnership. Let us all pause in a moment for a reflection of 2 minutes, followed by Roseanne singing of God Bless America. gentlemen. Ladies and gentlemen, our heroes will now open the marketplace. The green button.
All right, as you can see, the New York Stock Exchange is a place where people have still a great deal of sorrow, but are also filled with a great deal of purpose as we begin trading on American stock markets once again. Let's go to Maria.
Thank you very much, Mark. It was an emotional opening, as we all just witnessed. I can tell you that you could not hear a pin drop down here on the floor of the New York Stock Exchange during that moment of silence. At the same time that we did see people praying and people really saluting all of the dignitaries up on the podium where they rang the opening bell, you also had a number of indications coming across Dow Jones wires and a number of indications coming across the tape indicating a weaker opening for the broader stock market. We have been telling you that there has been testing going on throughout the weekend here at the exchange. Everyone is watching to see if the systems can handle what is expected to be a heavy amount of volume this morning, and not only a heavy amount of volume overall, but a heavy amount of volume to the sell side. I myself am looking at a number of indications within the financial services segment. Charles Schwab, JP Morgan Chase, Citigroup, all indicated lower, despite the fact that earlier Citigroup actually came out and said that earnings would be coming in above analysts' expectations. Certainly overall, you have seen a number of corporations come out today and over the last couple of days announcing that they would be buying back their own stock, basically supporting their stock prices in what is expecting to be a pretty heavy decline at the opening of trading. The Dow Jones Industrial Average right now, 2 minutes into the trading session, we started at 9:33 officially, is down about 85 points. But I am here to tell you that a number of companies are not open just yet. So that is really not reflecting what may very well take place here. In particular, the financial services, the major banks, the major brokerages are not open. They are indicated lower. I will tell you that General Electric, Honeywell, also indicated lower. They are not yet open. I'm watching a couple of companies actually poised to open higher. However, I am looking at shares of Boeing indicated about 4 points higher right now. Of course, it is expected that Boeing will see increased demand because of government spending. I'm also looking at other defense companies also indicated higher. Northrop Grumman, for example, is indicated about $3 higher here. Again, expected to see increased spending on the part of the government. In fact, that really has been the trend. If you talk to a number of strategists and people really watching this market and really watching to see what happens next, people are expecting that we will see an increased amount of government spending, and that will help business overall, and that will help this economy. Of course, I don't think anyone would argue that given this disaster that has occurred, we will see a weakening economy over the near term. So it does appear that so many corporations have been coming up, stepping up to the plate and waiting and trying to help with any way that they can by buying back stock. The other group that is looking quite weak today, in addition to the airlines and the insurance companies, in fact, Allstate is looking about $3 lower, but in addition to the insurance and the airlines are the media companies. Viacom is not open yet, as are so many other media companies. Lucent Technologies just opened. We have the crowd from the podium walking over my way, and we are going to talk to those people who just rang the bell. That is the crowd that you're seeing surround me right now. I am standing, just to give you a little geography, between the posts of Lucent Technologies and the posts of DuPont. Lucent just opened, it's down. DuPont is indicated to open fractionally lower. Not a major deal, though. Overall, as I mentioned, a number of the stocks within the Dow Industrials are not yet open, and a number of companies within the financials and the financial services are also not yet open just yet. Good morning. How are you? Nice to meet you.
Thank you.
Thank you so much for being here. Nice to meet you.
Good morning. How are you doing?
Nice
to meet you.
You rang the opening bell with Dick Grasso. I salute you for your heroism and for everything that you've been doing. I'm waiting for the police commissioner here, walking right next to me is the police commissioner, and Dick Grasso is on his way as well with the other dignitaries. How is everything going? What can you tell us, Mr. Commissioner?
It's going okay. We got a lot of people down there working, and you know, we're hoping for the best. Hoping for the best.
Mayor Giuliani also approaching us. Mr. Mayor, so nice to see you.
How are you?
Good. We are on live. If you turn around, the camera is right over there.
Right over there, okay.
Let me just, Mayor Giuliani, let me just salute you and praise you. You have done such an unbelievable job, and the world thanks you. And certainly,
the stock exchange has done an unbelievable job. Dick has done a terrific job of getting this open. This is a monumental, heroic task to get this market open, and I'm so happy that we've been able to do it, and the state and the city.
Governor
but the
Pataki
market gets the credit for getting this open. Unbelievable, Dick.
Yeah.
why don't you? We have a camera here shooting us right behind you, Governor. If how are you feeling?
This is just a great day. The mayor's been spectacular throughout this, and Dick Grasso and his team has done a great job. This is a symbol that we're back, and we're going to come back stronger than ever.
And of course, corporations across the board, Mayor Giuliani, have been stepping up to the plate, buying back stock. The Federal Reserve coming out, lowering interest rates. A real concerted effort around America of support.
Well, they should. I mean, this is an act that unites all of America. This cowardly, vicious attack on the United States has to be responded to in many, many different ways, including financially. And everybody should step to the plate right now and show the strength of the American economy. We depend on this. A lot of jobs, and the future of America and the world rests on what happens here.
And the world has been watching. It seems as if it was a very smooth opening, Dick Grasso.
Maria, it was a smooth opening because of the thousands of wonderful people from the city and the state and the federal government who locked arms with the private sector. Our great senators, our Treasury Secretary made certain that we sent a message this morning to the criminals who inflicted this heinous crime. You've lost. America is back to business, and this economy will lead in the 21st century. This city is the capital of capital, and we will be that going forward.
Senator Schumer.
Yeah, you know, we were the #1 financial market in the world last Monday, and we're the #1 financial market in the world this Monday and forevermore. God bless Grasso, the exchange in America.
Senator Clinton.
Oh, I'm thrilled that this day has come and the bells rang and we're back in business, and I can't thank everybody enough. You know, Dick and his whole team were really on top of it from the very beginning.
Treasury Secretary O'Neill, you must have been pleased to see the Federal Reserve lowering interest rates today.
Greenspan is always there. He always does the right thing. And this is really wonderful to see those of us who had spirited arguments a week ago were all together.
Clearly,
That way, too.
Maria, the governor, the fire commissioner, and the police commissioner. Incredible partnership.
incredible. Can you tell us what's going on down there at the site? You've had a harrowing week.
Well, there's a lot of hard work going on. We have a couple thousand people down there still working on the rescue effort to see if there's anybody down there that we can get them out alive. The city, as you know, as you could see, is cleaned up all around the site. Businesses are opening. The city's on a comeback, stronger than ever before.
Governor Pataki, do you think that at the end of the day, this we will actually see a resurgence in the economy? I mean, there's two schools of thought that this will worsen the economy to the extent of recession, and then the other school of thought that at some point things will be more vital than ever.
This is America. We're a strong people and a strong country. And sure, we're going to have our economic ups and downs, but I've never seen the people as unified. I've never seen the spirit higher. Everybody's going to work a little harder, work a little longer, and we're going to get through this. We're going to not just be stronger in spirit and stronger in commitment. We're going to have a strong, healthy economy. And as the mayor said, New York City's been the capital of the world. We're the capital of the world again today, and that is just going to grow and grow as well.
Mayor Giuliani, there's someone holding a sign up behind your head, 4 more years.
We're going to be a lot more than 4 more years. The city of New York is going to be the capital of the world forever and ever. And I can't tell you how happy I am for the city. And Dick Grasso and the Exchange has done a heroic act here. This is a heroic thing to do. You don't know the work that went behind this, and unbelievable.
Tell us about it.
Very much, Dick.
Thank you, Mr. Mayor. Maria, anyone who bets against America is simply wrong.
Anyone who bets against Dick Grasso is wrong, too.
Thank you. Fire.
This is our fire
Thank you so much.
Tom Von Essen.
Let me just bow to you. Thank you so much for everything that you've been doing, Fire Commissioner.
Well, that's not me. It's an awful lot of people out there trying to find the civilians and their brothers. So they're doing the best they can.
What's happening right now?
Just the same thing we've been doing the last 5 days. There's hundreds and hundreds of people working with an enormous amount of professional iron workers and welders and police officers, firefighters, rescue workers of all kinds. And the logistics support's been phenomenal. But we're working as fast as we can.
Thank you all so much. Mayor Giuliani, Governor Pataki, Police Commissioner, the Fire Commissioner, Carl McCall.
Hi there, how are you? Well, I'm here today as the Chief Financial Officer of the state, prepared to make a major...
Turn around, Mr. McCall, we're right on camera right there.
All right. Today I'm here to announce that our pension fund, the state's pension fund, is going to make substantial investments in the market. We believe in the market. We think the market has always been strong. It will bounce back, and we're going to be part of it. So I will be announcing later a very significant amount of money that we are going to invest in this market today.
How much?
Well, I can't say that until we've actually done it. But by the middle of the day, we'll be able to put a number on it, but it will be a very substantial number.
Thank you so much, Mr. Comptroller. Mr. McCall. Harvey Pitt, Chairman of the Securities and Exchange Commission, now with me. Mr. Pitt, so nice to see you.
It's good to see you. It's good
Your thoughts on this morning?
I think this is a great moment for American industry, capitalism, and it's a reflection on Dick Grasso's leadership in the securities industry.
Do you worry that America's confidence in the financial markets have been shaken?
I don't think so. I think Americans should be very proud of their markets and the fact that they are as resilient as they've proven to be.
What are you concerned about, if anything, at this point?
Well, we want to be as fully supportive as we can while we watch out for the interests of public investors. So we have people all over the trading areas in the city and elsewhere checking on things to make sure if there are any problems and we can be of help, that we can solve them quickly.
There was a concern that people would be shorting this market right off the bat, and I guess many hedge funds and corporations came out and said absolutely not.
I think we've done a lot to inspire people to feel comfortable purchasing. We've removed a lot of restrictions. We chose not to prohibit short selling because that would be an interference with the market. This market is strong enough to deal with both sales and purchases and short sales.
And you were pleased with the opening today?
I am absolutely thrilled with it. I think it's been great.
Mr. Pitt, thank you so much. Appreciate it. Dick Grasso, thank you again. Well, you've heard from all of the dignitaries at this point who rang the opening bell. They just walked away from me here. Now they're walking around the floor, giving people hugs and high fives and just really encouragement to get back to work, to try to send a message out to the terrorists that this business will not stop and that America will continue as a free country. Having said that, the market, as we expected, did open very weak today. The Dow Jones Industrial Average right now is down 237 points. On a percentage basis, of course, that is actually not very much at all when you look at how large this market is. The weakest groups today are the financials, as we expected, and the Dow components. General Electric down 4 1/4, Home Depot down almost 5, IBM, AT&T, DuPont, really all showing real weakness today. I will say that there are a couple of groups really trading higher, and those are the groups expected to see an increase in government spending. That would be the defense companies. A company like Boeing is opening higher as well. So we are seeing some pockets of strength in an overall tough market. A lot of show of support down here at the New York Stock Exchange. Mark, back to you.
All right, thank you, Maria Bartiromo. As you can see, the Dow down about 250 points right now. Curbs were in for a while. Not to scare anyone or rattle anyone, but you need to know that most of the Dow components are down between 5 and 10%. So the fact the Dow is only down 250 points, correct me if I'm wrong, Jack, is probably indicative of them not having opened some stocks.
No, I think that's right. I think that's right. And an adjustment down of about 5% would simply put the market in line with other markets around the world. And to the extent we do better than that, so much the better.
My point is you should not become alarmed if you see that number on the Dow continue to go down and get into the 300, 400, or 500 point range. That is what looks like is in the cards, and
well, the
it would not be surprising. Go ahead.
Stocks are trading.
Right.
Stocks are trading. There's a level at which there may be sellers, but there are also buyers. And stocks are trading. And that is the most important thing. The market will seek a level, but the point is it's a level for clearing. And from that point forward, I think we have some real opportunities here because you aren't going to make a lot of money in your money market funds.
No, you're not. Let's find out how things are going at the NASDAQ, where you know, Tom, usually all NASDAQ stocks open at 9:30. What is the story this morning?
They do, and they did today. All NASDAQ stocks open at the same time at 9:30, as opposed to the NYSE, where there's a trickle effect. NASDAQ's already off the worst levels of the session, 1586, the low of the session, but we're at a fresh 52-week low. Here's what the big caps look like. Intel's down 5.5%. Microsoft down 5.5% to 54.45. Sun down 8% to 934. Dell down 6.5%. Northwest Airlines down 36%. SkyWest down 50%. You're going to see these travel-related stocks getting hit pretty hard today. SkyWest, you've got Frontier Airlines down 41% right now. Travelocity down about 45% right now. Priceline.com down 43%. Travel-related issues are getting hit pretty hard today, as are insurance issues over on the big board, and also airline stocks on the big board. The NASDAQ right now sitting at 1599. We have a lot of sectors that people watch very closely. Let's begin with the chip sector and see how it's faring at this hour. Semiconductors have been in big trouble before this whole issue began with the World Trade Center. At the moment, the semiconductor index is moving to the downside. Rambus is up. It has expanded its agreement with Intel, but beyond that, Rambus is up. Xilinx, Altera, AMCC, and Connexent all giving back some ground this morning. Let's take a look at software stocks. Oracle last week, as you know, beat the street by a penny. This morning, ABN AMRO cut estimates, but we had First Albany upgrade the stock. It's giving back ground. Mr. Softy is down $3. Warburg this morning is making cautious comments about Microsoft. Centris Software, this is interesting. W.R. Hambert has come out today and said, listen, we expect demand for products like Centris that allow business collaboration to take place over the internet might benefit because of the reduced airline travel and therefore people moving towards more internet business. It's down, however. PeopleSoft and Advent also weaker. Let's check telecom equipment stocks. If you are a regular viewer, you know these stocks also have been getting hit very hard this year. The likes of Cisco, Juniper, Redback, Telab, Ciena, all down this morning, despite the prospects for a massive rebuilding operation in Lower Manhattan. We do have an acquisition to report to you today. It is not a big one, but it is Ashford.com, ASFD, being acquired by Global Sports. That's symbol GSPT. And with that, the stock is only an 18-cent stock, but it's one of those internet stocks that has risen, rather that has come down so hard. Lastly, share buybacks we want to check. We have a lot of stocks announcing share buybacks, including the stocks on your screen: Sanmina, Siebel, Starbucks, Cisco, BEA Systems. Page 2 includes Verity, Vignette, ITXC Corp, as well as Stellant and Introvigen. And Vitrogen, pardon me, there we go. And that stock's also weak. I did want to also check security plays because some of these security stocks getting some attention this morning based on the environment we're in right now. And if we have a hot board of those, I'll put them up for you this morning very quickly. Again, security stocks expected to benefit, and they are. There you go. Envision, as well as Magle Security, Visage, and Visionix. All of those moving to the upside today. So the NASDAQ giving back 96 points, fresh 52-week low, but we are so far off the worst levels of the session. The internals 27-4. Honestly, I've never seen internals that bad. 27-4, decliners over advancers, but the NASDAQ off the worst levels already. Mark, back to you.
Thank you very much, Tom Costello. Let's get to Carl Quintanilla on the Bear Stearns trading floor, check on the activity there. And once again, I want to remind people that some Dow components are not yet open. Right, Carl?
That's correct, Mark. In fact, that's one of the things that the traders here are really paying attention to. You'll notice on your ticker, for instance, that we're not seeing any of the major New York traded airlines open yet. They have not been able to open those airlines. When they open, obviously, that will affect the averages. And so the whole story hasn't completely unfolded here, as Mark, you have correctly pointed out. There are two stories here. One is from an operations standpoint. Things are operating normally in terms of glitches or buy orders matching with sell orders. Everything, according to one guy on the OTC desk, trading normally, not a single glitch. The other story, of course, though, is prices and what's happening to the market. Mark, you pointed out earlier that the day is far from over, and in fact, a lot of traders here saying that what they said earlier and what their clients were saying before the open was, let's sit out the morning, let's wait and see how things unfold. And because of that, they say the open has been a little bit more moderate than they might have expected. So They say, give us time. We may be looking at a test of this market. It might be in the next few hours. It might be in the next few days. But a lot of this is not really clear to us how things are going to go for the rest of the week. There is a sitting index, more or less. A lot of traders talk about the ratio of guys in their chairs as opposed to those who are standing up. For the most part, everyone is sitting down. That's generally considered a good thing if you're on the trading floor. As for the open itself, it was obviously very quiet. A lot of the big players here, Jimmy Kane, the CEO, a lot of the equity analysts who work upstairs, all on the trading floor, sitting around watching the opening bell. Very solemn moment. At the moment, though, from an operations standpoint, that's really what we care about right now. Things appear to be going very smoothly. We'll have more later on in the show. Mark?
All right, thank you, Carl Quintanilla. Let's bring David and Joe back in, and Jack. We have gotten the market open. It is trading. It is trading lower, but that's to be expected. It's pretty much in line with, so far, what the
Mark, you know, there are a number of factors that are specific
Honeywell
to today.
just opened. That was the most recent. Right. 4 points. It's down 4. That's why we went to 266. American Express, Boeing, Citigroup still not open. There's about 5 or 6 left to open, and that each time one opens, you'll see the market go down a little further.
We're not going to, of course, have a 50 basis point rate cut every day, and we may not have as much activity on the share buyback front, although, of course, these buybacks stay in place for quite some time, and we can expect increased activity from various corporations in terms of buying back their shares, especially with these relaxed rules. You can imagine the likes of a Sumner Redstone looking at a $31 stock on Viacom saying, I'm buying it all the time. In fact, I'm told he has told some people last week he will be in there aggressively buying. But, Joe, there is a question about whether today is a day that is representative of what we'll see in the future, given the fact that we've had a rate cut, given the fact of the increased buybacks, given the fact that we may not, as Carl just mentioned, see as much selling as you might have anticipated because people will be waiting to see what happens.
We just got one of the major airlines just moments ago opened. AMR down 14 at 16. And that is one of the hardest hit groups. In the Dow, we're still missing American Express, Boeing, Citigroup, Disney, and General Motors. All of them, at least at this point,
what kind of volume on American? Do you know, Joe?
On American Express?
Yes.
Not
no,
yet.
American Airlines.
Oh, AMR, yeah. At this point, 1.1 million already.
All right, so somebody bought 1.1 million shares at a price.
At a certain price where, obviously, UAL is closed at 31, bidding 16, asking $19 a share.
Jack, the people I've spoken to today, the portfolio managers who run large amounts of money, say, you know, if we're down 5%, maybe I'm not a buyer. If we're down 15%, clearly, as you pointed out, there is a market. It is going on right now. There is trading. But the question continues to be what ultimately will, when will the perception of value kick in for many people? And that's still somewhat
J&J and Merck are both up. J&J and Merck are both up along with Philip Morris.
Okay, gentlemen, I have to interrupt here for a moment.
And ExxonMobil.
Never mind. Now I'm told not to interrupt. So
Jack,
whatever you were going to say, Jack, go ahead.
I have no idea what
I blew it right out of your mind because I did that.
Jack, I have a question. I have a question I wanted to ask you earlier, and we're seeing the airlines down as much as 40, 50%. There is certainly a question in terms of the financial viability of some of them, whether the government will step in and perhaps even nationalize the carriers. But what about the financial system at this point, in your opinion? What about liquidity? What about the big banks who may be on the hook to some of these airlines and/or other industries that require a great deal of capital? Isn't there the possibility, certainly, that investors should be focused on the longer term here and what, if any, destabilizing events might occur as a result, of course, of the tragedy and the aftermath in the market?
Well, I think we have the system providing as much liquidity as is needed here, so I'm not concerned about that at all. This is very different to some extent from '87, where there was not a lot of information. People were concerned about who was going out of business and who was not. All the information is out there. The Fed has stepped up. Liquidity is there, and think about this: the cost of capital is quite cheap right now. The cost of debt capital and the cost of equity capital. There is an opportunity to provide capital to all segments of the market, and I suspect that that's what the system will do. That, to me, is not a concern at all.
And Joe, as Mark pointed out, we are seeing the Dow trade lower now as the various components are
open. I see that Disney's not open.
My point was that viewers should not be alarmed by this. This is not the market's suddenly turning worse. This is simply the opening of stocks that weren't open yet.
And I'll say it again. You only open stocks when there are buyers as well as sellers. Someone is buying these stocks at a level. And that
okay, Boeing just opened. That is, we're going to see that reflected down $8 at $35 a share, $7.81.
So that's worth about 50 on the Dow.
Yeah, and you'll see it go to 4 and change.
We just got the 50.
American Express is still halted. General Motors is still halted. That's the only two that aren't open at this point. AIG, for example, if you want to look at the insurers, that's down $7. St. Paul Corp, a big PNC company, closed at 41, bidding 32, asking 35. The transports are only down 50 points right now, but that reflects only a few openings so far.
The
as
media
far as the
sector
airline
appeared to be getting hit pretty hard.
Yeah,
I did not see an open on AOL.
Disney just opened down $4.58 at $19 a share, and we'll see that reflected in the Dow any second here.
Ultimately, though, Mark, as well, there are no easy answers today. I mean, this is going to be a process that's going to take quite some time for people to try to gauge the new reality and where we find ourselves both in the economy and in the world in terms of the war that is going to be waged and what that's going to mean. So this is going to play out over weeks and months, not just in one day. And of course, that's something people right now who are buying those stocks or selling those stocks are also trying to figure out.
We're almost out of time. Jack, would it be fair to say it's going to be, as David says, it's really going to be quite a while before things are clear? I mean, today that don't occur in normal markets.
That's right.
Tomorrow and Wednesday are Rosh Hashanah. So you are going to have a certain number of people who are not participating in the market. Right. It may well be next week before we're even close.
I think it may be 30 to 60 days before we sort of figure out exactly where we are. But the fact is the market will function, will reach a level. But again, no one should expect sort of instant clarification or instant gratification on all of these issues. We're in for the long haul here, and I think everyone has to realize that. And frankly, the long haul looks quite good.
All right, let's leave that as the last word. Thank you very much, Jack Rifkin of Citigroup Investments. Now we're going to continue our coverage. Tyler Matheson and Martha McCullough.
Thank you very much, Mark. As we are looking at the Dow, opening up those remaining Dow stocks, we do have the industrials down 490 points right now. The NASDAQ is down 100 points. We've had about 27 minutes of trading so far.
That's right. An awful lot of stocks opened very haltingly on the Dow, but as more and more do open, the downside pressure seems to have intensified, and we're down now nearly 500 points at 91.11 and changed. This is CNBC's continuing coverage of the resumption of trading on the New York Stock Exchange and all of the U.S. equity markets. Welcome. I'm Tyler Matheson.
Welcome from me as well, everyone. I'm Martha McCallum. Let's head down to the floor of the New York Stock Exchange where Maria Bartiromo is standing by. Maria.
Thank you very much, Martha. And things are bustling down here on the floor of the New York Stock Exchange. I'm waiting on a couple of things today. Let me tell you all about them. American Express, the #1 stock that I'm waiting on to open. The stock is indicated much lower today. And when the market does show another decline, you can assume that American Express opened for trading. Right now, the Dow Jones Industrial Average is down 495 points, pretty much in step with where people expected this market to open after being shut down for 4 days and, of course, witnessing sharp declines on international exchanges ever since the Tuesday attack disaster. American Express, one of the financial services company, not yet open. The stock right now is seeing heavy stock for sale. There's a huge crowd around that post, and it is looking lower. When it opens, the market will likely trade much lower because American Express
Group, thank you very much. Jim Reapy at T. Rowe Price in Baltimore, thank you as well. We'll see you again soon.
Thank you, Tyler.
You bet.
All right, let's take a look at the intraday action for the Dow Jones Industrials, which are now up 463 points. I would point out some of the harder hit issues within the Dow. Disney is one, down about 16% right now. Of course, concerns about visits to the theme parks and lots of parts of their business putting some pressure there. We're also seeing Citigroup under pressure, as many of the financials are. But look at that bounce back. It's quite profound when you look at sort of that V-shaped recovery, even though we're down 463 points for the Dow Jones Industrials right now. It is a testament to the fact that this market is up and it is working today. The NASDAQ composite is down 71 points at 1623 off the lows of the sessions, which was 1586.
All righty, Market Watch will continue in just a moment with Consuelo Mack and Bob Sellers.
Closed captioning is sponsored in part by Brokerage America.
I wonder how our home equity loan's going. I'll check.
Here you go, sir.
Oh, thank you. Lower, please. Mr. Bradley was in the lead, but now it's looking like Davis.
Want banks to compete over you? Come to lendingtree.com. Fill out one form and get up to 4 offers within hours.
Well, that's not going to help you, Bradley.
When banks compete, you win at lendingtree.com.
They're coming through town. Williams volunteers from all over the country, riding along pipeline routes, raising money for the United Way. Last year, $16 million. This year, even more. Please support your local United Way. We don't think of it as charity. We think of it as our investment in a better world.
AccuWeather.com.
Get the best weather on the web.
AccuWeather.com. Use it. Link to it.
Or get it for your site.
AccuWeather.com.
Get the best weather on the web.
AccuWeather.com.
There's a different way to look at your money.
What's it say?
ING. It's not an ending. It's a beginning.
Monday morning, everyone. Welcome to Market Watch as we continue our coverage of the reopening of the stock markets. I'm Consuelo Mack.
And I'm Bob Sellers. Good morning from me as well. U.S. equity markets have been trading now for some 90 minutes. So far, we are off our lows. We got a fairly sizable hit. Here's an intraday chart. Let's put this in perspective, though. If you look at 500 points on the Dow, I didn't mean to slow up graphics, but 500 points on the Dow back in 1987, when we were talking about having the crash, that was 22%. Today, we're down about 500 points. That's only about 5%. So even though those of you that may not watch CNBC on a regular basis look over here and see some large numbers, in perspective, they're not as large as something that would be something to be real concerned about. The NASDAQ is off its lows, as you can see, opening up lower, down over 100 points, now at 74 to the downside, trading now at 1621. Let's go to Tom Costello now. He is at the NASDAQ with a special guest to talk about some of today's activities. Tom.
Thank you, sir. I have with me Hardwick Sims, the CEO of the NASDAQ. Let me just point out, at the lows of the session, the market was down 109 points, and it has been coming back ever since the opening. In fact, frankly, we have had 74-point drops even before this terrorist event. I mean, it's not been a good year for the NASDAQ.
No, this is nothing unusual, Tom, but actually it's beautiful today.
Talk about that. You were up there in this show of unity and solidarity with NYSE Chairman Richard Grasso. You opened the opening market that rang the bell at the NYSE. That was a very moving ceremony. Talk to us about the symbolism and the importance that these markets are open.
Well, first of all, just the cooperation between federal government, the city government, all the private companies, what have you, has been awesome. And so I think we all wanted to be represented there this morning. Second, just to kind of get this symbol of capitalism moving once again and make sure everybody understands that we're back strong and resilient, I think was extremely important. Plus, when you stand there and you sing God Bless America, I mean, my goodness, that has to move everybody.
You are the CEO of the most heavily traded stock market in the world, and most of it's done, in fact, all of it's done by computers, and there was concern about the interconnectivity. You had a great test over the weekend. What's happening right now?
Everything is running, if we couldn't ask for anything better, Tom, at the moment. Everything's running very smoothly. Every institution, every member firm, every market maker, they all tell us they have the connectivity they need. They're able to get there via phone or electronically. I mean, it's just running very smoothly at the moment.
And I know that you are not a money manager, but to what extent do you attribute the fact that things aren't worse and the fact that NASDAQ's come up and the Dow's up off the worst levels? To what extent do you attribute that to a degree of a feeling of patriotism, that we can't let the terrorists, the murderers, as they were described by Richard Grasso, win?
I think there's some of that, but I think, frankly, investors are just reflecting on everything that's happened, and I don't think until you see next 2 or 3 days go by that anybody will make any major investment decisions. Right now, it's just wait and watch. You've got some companies in there with share buyback programs. They probably aren't going to buy now at these levels, but if the markets get a little bit lower, they may well come in. So right now, you've got a lot of people sitting there watching the market, and the market's performing admirably.
Well, our congratulations to you, and so far a great job, and you've managed to put together an incredible market opening after a horrific event. Congratulations to you.
Well, thank you very much, and Tom, everybody did their job this time. This was a great triumph.
Thank you, Mr. Simmons. Nice to see you. Hardwick Simmons, the CEO of the NASDAQ. Mr. Simmons talked about those share buybacks. Let's take a look at how some of those stocks are doing right now, because that has been the focus this morning. Many companies coming out and taking advantage of the relaxed SEC rules to buy back their shares, or at least announced that the board has approved the process to buy back their shares. And there you go, Sanmina, Siebold, Starbucks, Cisco, BEA Systems. They're weak today. This is a weak market, but you can see what's happening. Let's go to page 2. We have more of these to run through very quickly for you, and they include, as I cheat here, Verity, Vignette, ITXC, Stellant, and also TransSwitch. Just a few of the companies taking advantage of the share buyback program that Mr. Simmons spoke about. NASDAQ's down 76, worst levels down 109. The internals right now, on the advanced side, we have 7. On the decline side, 28 to 7. Consuelo, that is bad, but we have seen it much worse this morning. Back to you.
And Tom Costello with the NASDAQ. Tom, do you know if they're actually buying stock today, if those stock buybacks are in action today?
In other words, other companies?
Yeah.
Mr. Simmons said that he thinks that there are probably going to be some today, but frankly what's happening is the board has laid the ground. They've made the announcement, and they will buy back over a course of time, that they will, over the course of the next couple of days or weeks.
All right, fine. Tom Costello will be talking to you later. Thanks very much.
Okay.
We are now going to head down to the floor of the New York Stock Exchange, where Maria Bartiromo is in the middle of the action, as she always is. Maria, what's going on down there?
Thanks very much, Consuelo. The Dow Jones Industrial Average right now is down 478 points overall. There has been an attempt at a rally. You just asked Tom Costello if they're actually buying their stocks today. I think that's company by company. Some companies have their repurchase program in place already. For example, General Electric today came out and said they would accelerate their plan. Buy the stock of its company sooner, and that could be one of the impacts that we're seeing today on that stock. For example, GE, one of the most heavily traded issues in this market today, now down just about $2.50. It had been down almost $4 earlier, so that's one certainly improvement that we have seen over the last hour. And GE, of course, the parent of this network. Other companies which are heavily traded and have seen a bit of a bounce over the last hour include Disney and some of the other media companies. Of course, the media stocks is one group that a lot of people believe are vulnerable in this market. You turn on any TV, you read any newspaper, and really the focus has been this tragedy and not advertising revenue. People have not been taking commercials, not really worrying about advertising at a time when costs have gone up quite substantially in that business. So you also have the media companies under pressure, although, as I mentioned, off of their worst levels of the morning. EMC is one stock I wanted to mention to you because that's one of the winners on the session. It's actually trading higher right now. It is one of the most heavily traded stocks down here on the New York Stock Exchange. Traded already about 15 million shares on EMC alone. I have to believe that is near record levels, although I don't have the numbers in front of me. There's an intraday, and of course it did start the day lower and slowly but surely move higher, and now is at the highest level of the day for EMC. There is some speculation out there that companies like storage makers, as well as communications companies like a Nokia and some of the other phone companies like a Quest, will see an increase in business over the near term as companies try to spend more on communications and really making sure their systems are intact, particularly after this tragedy. Of course, Verizon was one of the companies that really saw a huge outage in business when the disaster first struck, because one of its main systems was at the trade tower scene. So that was what happened, and that's why so many people lost service. And now there's an expectation that people will be spending more money. You saw the defense companies, that's an obvious one. There will be an increased amount of spending by the government in that group. That's one of the reasons that that group is higher. And of course, your usual suspects are the ones leading the way lower today: the airlines, the insurers, and the financial services. The Dow Jones Industrial Average right now down 490, Tyler, but of course, it had been down 620 625. Bob, back to you.
All right, Maria, thank you. And folks, as you see on our bug there, a half-point lowering by the Fed today on a key interest rate. And when that was announced, the European markets turned around. We actually had, we've got the FTSE up 89 points now, the DAX in Frankfurt up some 106 points. So positive reaction there. Let's find out what the bond market reaction has been this morning. We go to Rick Santelli, who's standing by the CBOT. Rick.
Well, Bob and Consuelo, it was very interesting because at the time of that half-point rate cut, I was standing live in the middle of the 30-year pit, and traders on this floor did not get the word as quickly as CNBC was giving it to me in my ear. I had to scream behind me that they had indeed cut. The interesting point was the Treasuries virtually did not move. All the action was in this pit right here that I'm in. If the cameraman could open it up a bit, this is the Fed funds pit, and not only was it very aggressive, but most of the Treasury markets anticipated what the Fed did this morning by significantly having lower yields Thursday and Friday of last week. What is this pit telling us now? It's telling us that the new targeted rate of 3% by the Fed may be actually even higher than it trades, meaning that by the government and continuing to put liquidity in the system through repurchase agreements and other means, they are in effect lowering Fed funds rates below the target. And that's what this pit is pricing in. Not only that, but there's another quarter point on the table, and it's looking like October 2nd it still applies. Now, with respect to a macro view of what's going on, the flight to quality that really showed up in short maturities like the 2-year is holding. We've gone from early last week a 350 yield to around a 293 yield, but it's stagnant right now. The flight to quality, even from weak equities today, has been stable. Volume in the longer maturities, 2s, 5s, 10s, and 30s has been very quiet, and traders in the Treasury continue to look for equities and how they'll close today and how they look tomorrow to get more clues whether that parking lot of buying in government securities is something that's going to be long-term, or are traders going to put their toe in the water and start testing the equity markets. Consuelo and Bob, back to you.
Rick Santelli at the CBOT, thanks very much. Well, buy stock. It is time for all Americans to help defend the country economically. That is the view of our next guest. Joining us from Washington is Pete DuPont. He is former governor of Delaware, now the policy chairman of the National Center for Policy Analysis, or NCPA, which expressed that view in editorials in newspapers across the country this weekend. Governor DuPont, good morning to you. Can you hear me? Looks like we might have a audio problem. Governor DuPont, can you hear me? Guess we can't. We'll try to connect with him in just a moment, but we're going to check first and see how the markets are doing.
Well, let's do that. Let's take a look at our boards. It's an hour. See, I can't do math here on the air, but we've got over an hour and a half of trade here. We call that an hour, 41 minutes and 50 seconds. Finally, I did the math. Here's a look at our Dow components. I haven't looked recently. I haven't seen any trading higher, but there's a look at them in alphabetical order, all trading lower, AT&T. And we've talked about, Boeing hurt by the airlines and so on. Let's move on to the next board where we see some of those getting hit. Financials, we've got Eastman Kodak, DuPont, Citigroup, of course. One of the delayed companies in the early going today. The market wasn't down as much as it ended up being down because a lot of them were delayed. So when you hear about the opening of the Dow, sometimes it takes 10 or 15 minutes, sometimes a little bit more than that to actually get all 30 companies open. GE is off its lows of the day, but certainly solidly lower right now by 239. GM getting hit, Home Depot, just about everybody getting hit, some less than others. Hewlett-Packard not as much. Of course, they've been hit enough in recent months. IBM, Intel, International Paper, J.P. Morgan, Johnson & Johnson. And there we do have actually a positive. Merck, which is in the drug sector, by the way, which a lot of people would say that's where you put some of your money. The last time, not the last time, but one of the times we saw strength there was back in 1991, recession and the bear market then. We did see strength in drug stocks there. Procter & Gamble, SBC Communications, United Technologies, Walmart. As you see, United Technologies hit solidly. And Disney also fears that folks are not going to be going to amusement parks, etc. It's off 3 1/3 points at 2021. Consuelo.
All right, we have reestablished some contact with former Governor Pete DuPont, now policy chairman of the National Center for Policy Analysis. And I know that the headlines read of the editorials from your organization, Fight Back, Buy Stock. Why should Americans buy stock today?
Well, Americans ought to buy stock for really three reasons. First of all, just like you put a flag up in your window at the front of your house, you can buy some stock to show your patriotism in this difficult time. Secondly, you can invest in America, and that's important. A feeling that we're all going to pull together to lift this country up militarily, but also economically. And that's the third point. We had an economy that was pretty close to recession before the events of September 11th, and this is the events in Wall Street and in the World Trade Center in Washington are going to be a further blow to the market. And so we really need to get some liquidity into the market, to get some investment into the market, to lift this economy up so we can get back to where we were.
Now, you felt specifically that Americans should buy at the open this morning. We saw what happened at the open. There was a lot of pent-up selling pressure from last week's closure of the markets. Needless to say, if individual investors had done that this morning, they're sitting with paper losses. Now what?
Well, I wasn't suggesting that that you invest in the first 5 minutes, but invest today. The market's going to go up and down. The most important thing is that the market's open. The American market economy is working. Capitalism is alive, functioning, and people ought to have confidence in the market. We're going to pull out of this. We're going to grow the economy. The Congress is going to perhaps even take some tax reduction steps to help that growth. So this is a good time to get into the market, to show your patriotism, to help build the economy. And that's a very important thing, building the economy. It goes along with the thing we have to do to fight terrorism around the world.
Now, you also felt it was particularly important to buy stocks of companies that have world-recognized brand names. Why?
Well, I was just listening to your program, and the ticker shows that communication stocks are down, General Electric is down, but those are basic parts of the American economy that are going to grow. Communications is going to be very important as we undertake this war on terrorism. The big name companies like General Electric that have a wide range of products and interests are going to be solid in the American economy, and going with recognized companies at this moment is probably the safest investment if you're going to make one.
Did you buy this morning, Governor DuPont?
I did buy this morning.
Want to share with us what you bought?
Well, I don't want to give stock market advice. I have enough trouble with policy advice, but I went into some mutual funds this morning.
You did. All right. Now, one last question. Most professional investors say don't buy in emotions. It's the worst thing you can do. Many people have told us over time, not necessarily today. If they don't buy at times like this, why should individuals?
Because we're all in this together in America. We've had a national tragedy. We need to pull together emotionally. We need to pull together spiritually. And I think we need to pull together economically. So I think investing in the American economy at this time is something you can do to really help the country.
All right. Well, as our colleague Larry Kudlow also said in editorial pages this weekend, patriotism is profitable. We shall certainly see if that's the case. Thank you, Governor DuPont, for joining us. Pete DuPont, former governor of Delaware and now the policy chairman at the NCPA.
We are off the lows of the day, but back down under the 500 level, although we were down about 620 at one point. Let's find out from Bob Pisani what's going on the floor of the exchange. Well, he's not on the floor, back up in the chair. Hi, Bob.
Good afternoon, Robert. Well, we're running right now. Volume will probably be well over 2 billion shares. We might do a record day. Just talked to Art Cashin, who tracks that very carefully. So far, selling has been fairly orderly. The Dow was down over 600 points at one point, and it has come back several times here. As far as what's going on, I certainly understand what your previous speaker was saying there, your guest, concerning the patriotic duty of people to buy. I have to tell you, when I call trading desks and talk to the traders right now in the last hour, bring this subject up to them, I get a very different perspective. One of the best perspectives and the most common one was that there's been a peace dividend that's been out there for the last decade, over a decade right now. That peace dividend may be being unwound a little bit here. Certainly, what is the value of the peace dividend? Well, we're going to find out. The market is going to tell us that. But there is a slightly different perspective on the parts of the people who are out there professionally, and the fact that the peace dividend may or may not be starting to be unwound at this point. Take a look, and we want to just summarize the circuit breakers here. We have not even gotten, well, about halfway at one point for the circuit breakers here, and I want to summarize them. The first circuit breaker occurs when the Dow drops 10%, and these circuit breakers are reset or recalibrated every quarter at this point. An 1,100-point decline in the Dow is defined as a 10% drop in the last time this was recalibrated a few months ago. This would create a 1-hour halt before 2 p.m. and a 30-minute halt between 2 and 2:30 p.m. I know this is a little complicated, but this is a rather elaborate process. There would be no halt to trading after 2:30 p.m. There are also, of course, other circuit breakers that would kick in around the 2,100-point decline. That's about a 20%, and as well at 30%, which would be roughly a 3,200-point decline. If you want to look around and look at the stock market now, what's up and what's down, is not just indiscriminate selling. There are a few things that make sense out there. Let me show you a couple stocks. Take a look at Blockbuster, for example. I called around and I said, Blockbuster seems to be holding up fairly well here. What's the story with Blockbuster? And a lot of people said, well, look, people are anticipating that a lot of people are going to be staying home, quite frankly. Some other stocks, Hollywood Entertainment, for example, also doing fairly well at this point. Some of the tech stocks are holding up a little better. EMC, for example, or QLogic holding up a little bit. Called around, ask about that. People say there's a big need now for backup storage and redundancy at this point. So those kinds of stocks holding up a lot better at this point. Then there are stocks where the decline is eminently understandable. You have been hearing a lot about the airline stocks dropping on a regular basis and rather dramatically here in the morning. But how about the lodging stocks? That makes eminent sense. Take a look at Marriott. Marriott's down rather dramatically as well. In fact, lodging stocks in some places are starting to rival the airlines in terms of their weakness. This makes a lot of sense. People going out less, people taking airlines less, people using hotels less. Take a look at the Four Seasons as well. FS also rather weak today. So there are certain things that are making a little bit of sense. The need to get to go out and stay home, to get redundancy in your systems, the desire to stay home, and the desire to not go out to hotels perhaps as much. Consuelo, there is a little bit of sense here in terms of what's down and what's up at this point. Back to you.
Thank you very much, Bob. We'll talk to you later. We're going to head over now to Joe Kernen, who is our stocks editor, as you know, to find out what stocks he's watching this morning. Joe?
Consuelo, for this great move we're seeing in most of the defense group, I guess it's a little bit interesting that United Technologies is trading more like a Boeing or an aerospace supplier than some of the defense contractors. That's just one point. I mean, with Gendyne up nearly $6 and Lockheed Martin trading sharply higher, up $5. We've got UTX at this hour down $10 now, $10.30 at $55.90. Of course, the company has an aircraft engine business and other aerospace components. Probably not a shock that some of the big reinsurers based in Bermuda would be getting hit pretty hard today. Let's start with a quick rundown of all of them that we're following. XL Capital, based in Bermuda, $600 to $700 million expected of exposure. Ace Limited, also trading lower today, down $4.30. And Partner Re, also, these are three Bermuda-based reinsurers, $350 to $400 million seen as this company's exposure, down $10. Here's one defense contractor I left out last time. I don't think it was open at the time that I mentioned it. That's a new all-time high for Alliant Tech, up $15 now at over 80. Wackenhut is the biggest percentage gainer on the New York Stock Exchange. At this hour, up about 43%. This is the company that also provides facility design and development and management services to government agencies and security services to the commercial and governmental customers, up $7 on the news. I wanted to mention CACI, also on the NASDAQ, one of the big gainers. Looking at, let me trigger it one more time. I guess I didn't do that. CACI, here it comes. That's not showing a trade. Let me give you the trade on it. It is open now. It's funny that that's not being reflected. It's up $10 now at $51 a share, seeing some upgrades today. The company has a strong position in the defense and civilian federal government IT infrastructure. You heard Bob talk about Four Seasons and hotels. Check this out. Princess, P&O, Princess down $9.70.
European and Asian marketplaces. We saw airlines down 32%. You've got lodging down 17% and recreation down 14%. Let's break it down a little bit because you're getting big percentage moves in those airlines. Continental down 49%, losing almost half its value there. UAL, AMR, Delta, a little bit more than a third of their values. And Southwest Airlines, which is heavily weighted in the sector overall, losing a quarter of its value there. So that's the effect that we're seeing, and recognize that around the world. Air New Zealand, dropped 40% this morning. These are the kinds of percentage moves we're seeing everywhere. And the airlines are going in to meet with Congress to see if they can get some kind of a financial package, aid package put together there. Lodging is a repercussion. If the airlines aren't flying and people aren't flying, then where are they going to be going and traveling? Lodging, you've got Marriott Hotel in that group. You've got Starwoods, you've got the Hilton, you've got Prime, Hospitality and Extended Stay, all down. Marriott about 14%, and all the rest of them in the kind of 10 to 15% range in the lodging sector. And then you get the spin-off, of course, recreation. Recreation includes Carnival and Royal Caribbean lines. So again, it plays into this lodging concept. Walt Disney is double whammy here. They have theme parks that you would travel to potentially, and they also have advertising revenue dropping. A quick look at the best performers of the day: water, utilities, precious metals up 5%. And if you take a look quickly at precious metals, $289, $90 on gold, March 2000. There's Newmont Mining there. And a quick look at insurance companies that have been decimated across Europe. And we're not seeing the same kind of pressures. They're down, but we're only looking at 5% at American International Group. There's Chubb as well, MetLife. That one down at the bottom, Trenwick, has a market capitalization of $500 million, and they're going to sustain $50 to $75 million just from the incidents last Tuesday. Bob, back to you.
All right. Thanks, Pat.
And we're going to wrap it here. Head over to Power Lunch. And we've got a special guest. Treasury Secretary Paul O'Neill is going to be on Power Lunch with Bill Griffith and Sue Herrera. So that's going to start in just a moment.
Before then, let's take a look at how the Dow 30 are faring today. Stay with us.
Closed captioning is sponsored in part by Brokerage America.
For everything she's been, everything she is, and everything you'll be together. The 3-stone anniversary ring. For your past, present, and future. A diamond is forever.
For me, Investors Business Daily is an indispensable resource.
Call now for your free 2-week trial of Investors Business Daily.
It gives you information that is yet to make it out into the public realm. Some information that many companies have spent hundreds of thousands of dollars on acquiring.
You'll also get exclusive access to powerful tools on investors.com.
Investors Business Daily has helped me to become a better investor by leading me to better opportunities.
Call 1-800-423-0312 for your free 2-week trial of IBD.
What is a hero? Are heroes born, or are they made? In after-school programs, your kids will uncover hidden strengths, discover they have the power to change their future, and find the hero inside themselves. Let us know you on after-school programs in your area. Call 1-800-USA-LEARN. After-school programs, helping kids find the hero within.
The home of the Senior PGA Tour, CNBC.
Greetings, everybody. Welcome to a special edition of Power Lunch. I'm Bill Griffith.
And I'm Sue Herrera. And as Bill mentioned, we are in a special edition because there are still some very special efforts going on in lower Manhattan right now. They are still calling it a recovery effort. The smoke, however, still continues to rise, although it's much less today than it has been in past days. Basically, everybody came back to Wall Street today, and the markets did dip to the downside. But, Bill, really, they've been rather resilient. We're well off of our lows.
Perhaps taking a cue from the European markets, which themselves opened sharply lower when they got underway this morning. And then actually we saw many of the European markets finish higher. The French market, the London market, a lot of them are closing right now, and we hadn't seen them trading higher. Joining us right now with the market still trading, and you know about the Fed cutting interest rates this morning. We've learned in the last 30 minutes that the European Central Bank has cut its key lending rate by 0.5%, just as the Fed did, and the Bank of Canada did the same this morning. We are pleased to be joined by Treasury Secretary Paul O'Neill, who joins us from our studios in New York City. Secretary O'Neill, welcome.
Hi, Bill. How are you?
Doing fine. How would you characterize the day on Wall Street so far?
Well, we're trading again, and trading is normal. It's wonderful to be back in business and to see the spirit of enthusiasm and sticking together that I saw when I was downtown for the opening this morning. So it's really good to be back in business.
Mr. Secretary, Sue Herrera here.
Hi, Sue.
A pleasure to see you again.
Thank you.
I know that you were downtown early this morning. We all saw you. Your reaction to the events of the last couple of days and the devastation that we've seen, and the talk on either side of the debate about where this puts the economy, in recession or perhaps a little bit more resilient?
Well, first on a reaction to the events. You know, this morning I had an opportunity to go to the American Stock Exchange building and look out their side window at what had been the trade towers, and it was the most up close and personal view I've had. It's just unbelievable, the destruction that's taken place. With regard to where we're going, our economy is resilient. We're going to move back into a reasonable growth path, I think, in the near future. I was glad to see the action by the Europeans today in moving on their interest rates, and Alan Greenspan's action seems to me perfectly appropriate. We're seeing a little bit of a sell-off. I tell you what, if they'd let me trade, I'd be buying a lot of stock today. I can see stocks I imagine I could see a 50% yield on in 24 months if I could buy them today, but Treasury Secretaries don't get to do that.
Welcome to our world.
Yes,
News anchors don't get to do it either, so we understand your thoughts.
Mr. Secretary, just in the last 30 minutes, the President was on the wires. He was speaking with reporters. He mentioned that he would be meeting with his economic team today to discuss a possible economic stimulus package. Can you provide a little guidance on what the thinking process is in the administration on that front now?
Well, we've been looking at a range of things that we might do that would be helpful to the economy. And there are an endless list of possible things that one might do. I think we're off to a good start with the special $40 billion supplemental that's been voted by the Congress to help with the immediate crisis here in New York to begin rebuilding and bring back the tip of Manhattan to what we all want it to be. That's a good beginning. We're looking at sector by sector at special cases. Many people have mentioned the huge impact of airlines being out of business for so many days. We need to look at that. We need to look at other sectors that may be severely impacted. We'll do that. And then we'll look at whether or not stimulus is indicated. I myself believe we're bouncing along and we're headed up. You know, when you look at people going back to their factories and farms and small businesses and shops today, we're going to bounce back and we're going to be fine.
Well, if I may, are we thinking of another tax cut of some kind? I mean, already we're seeing tremendous monetary stimulus by the Federal Reserve with the injection of liquidity into the banking system and into the economy over the last week. Now we get rate cuts. In terms of fiscal stimulus, are you looking at that kind of economic stimulus? I'm just trying to get a better sense of what you're thinking about.
Bill, we're looking at the range of possibilities from the spending side to tax reduction side. And, I think as in what we're doing in national defense policy and in bringing these murderers to justice. We're looking at every possible way that we can accomplish our objectives. And if after we've reviewed all the options with the president, he decides that we're going to proceed on one course or another, then we'll be announcing that. There is a meeting this afternoon, and my views will be represented. But the president is keeping everyone on their toes and insisting that we look at every option, both in military field and in the economic field as well.
Mr. O'Neill, if I could go back to your comments on the airlines. In the last couple of days, I've talked to, and Bill and I have talked jointly to Gordon Bethune of Continental, one of the leaders in the airline industry, and he has been very strident about his opinions about where his industry is going, mostly into bankruptcy. The economic, first of all, do you think that the situation is that dire? We have seen Midway cease operations. And second, what are the economic ripple effects from that?
Well, I don't know so much about the ripple effects. From looking at the balance sheets and the income statements of airline companies, quite a few of them have had economic problems, in spite of the fact that, as I remember, last year was the best earnings year in airline business for quite some time. There are some major companies that have cash flow and income problems, and being out of business for 4 days doesn't help that kind of a situation. So I think we can't allow an industry to be completely devastated because of this kind of an event, and so we're going to have to look and see if indeed it makes sense for the American people to provide some cash assistance to get them through this crisis.
A package of about $2.5 billion was discussed last week. Can you give us a ballpark figure? Is that in the ballpark? And how about a timetable of when that might happen, if in fact it does occur?
I don't have a number in my head that I would rely on, Bill. But one of the things I think you've seen, and it's a wonderful thing, Americans have responded, as they always do, to crisis situation. People have come together. Last week, the Congress acted quickly. The president provided leadership to move forward quickly with a $40 billion supplemental. And as soon as the facts are clear, you can be sure the president will say, this is what we need to do. And I tell you what, from the marvelous spirit I saw across political lines on the floor of the stock exchange this morning, we're going to be able to get done things that are merited. The president will provide the leadership. The Congress is with him every step of the way. We're going to move.
Mr. O'Neill, if I could turn you to the U.S. dollar, I know one of your favorite topics, and talk a little bit about the volatility that we've seen in the currency markets. It's kind of an interesting situation because the dollar has dropped today, came back off of its lows, but it seems as though this whole situation has really favored the euro, which in a perverse way is what a lot of people were looking to have happen. They were looking to bolster the euro. Can you give me your take on where we go from here in the currency arena?
Well, I don't know. I'm glad you put the screen up. The yen's at 117, the euro's at 92.73. Right. And, it's very interesting. If you think back a year, well, I guess to the beginning of the euro was 117 and then traded down as low as 82. And there were hand wringers on both extremes. 92.73 is not far off of where we've been trading for the last 8 or 9 months. In fact, we moved from, I guess, the middle 80s to 92.73, and the yen has moved in a range someplace around 115 to 125. The thing I think is really kind of interesting is the ranges are not wider than what they are.
So
I think, the ranges are the ranges, and we continue to have policy that has a strong dollar policy, and as you know, out of blackboard scratching experience, I don't talk about dollar policy except to say it's strong and it's good for America.
Let me try it this way. You would disagree then with those who would say that this event has had a fundamental weakening effect on the dollar. It has changed the dollar's safe haven status.
And I would say what I've been saying all day, Americans are a resilient people. Our economy is a resilient economy. We're going to persevere. We're going to prevail over the murderers.
And our economy is going to continue to be the envy of the world because we will have higher productivity growth and more rapid improvement in the living standard in our country than any place else in the world. And that's what we need to do, and that's what we will do.
I have two more questions. We don't want to take too much of your time. I know you're busy and you do need to get to your economic policy meetings with the president, but you've mentioned the airlines. Everybody, that's the highest profile industry that has been hurt by this tragedy. You say you'll take it on a sector-by-sector basis. Are there other sectors of the U.S. economy that you are thinking about, perhaps insurance or others that we haven't discussed?
Well, there's been lots of speculation about insurance, and I don't know, we'll see. You know, I think for the insurance companies who sold policies, knowingly sold policies and took risk, and now they're being asked to fulfill their contractual obligations, that's what they ought to do. That's what free markets are all about. You make a market in something, you sell a product to someone, and the contract terms come due, you meet your end of the bargain. But we'll see. You know, I think we still need some more data before we know whether any of the insurance industries in trouble that they didn't contract for.
Last question from me, and I don't know what Sue has, but we know Energy Secretary Abraham has said that he hopes that OPEC will see fit not to cut production as had been anticipated by 1 million barrels per day. OPEC has not committed itself one way or the other, but they do say they are still committed to a price range of between $22 and $28 per barrel, a price that has been exceeded, by the way, in the markets to some degree, as we saw prices around $29, $30 a barrel. What would be your hopes for OPEC and for oil production in the world?
Well, I tell you, Bill, the president's gotten an avalanche of mail and telephone calls from leaders all over the world. I've gotten the same kind of avalanche from finance ministers around the world saying to me, we're with you, we're with the American people, we will do whatever necessary to be helpful to you and supportive of you. And my guess is, you know, the whole civilized world is going to stand up to these murders, and in the case of oil, I think the oil producing community will make sure that we don't have spikes outside the range, to make sure that we don't have the added burden of rising energy prices in this time. You know, from what I'm seeing and what I know the president's seen from all of his telephone calls and mail, the world is with us.
Mr. O'Neill, pleasure to have you. Thanks so much for coming by.
Thank you, sir. Really nice to be with both of you. Thanks.
Come by anytime.
Thank you. I will.
Paul O'Neill, Treasury Secretary of the United States. Let's go to the floor of the New York Stock Exchange. Our Ronan Sana, of course, was there. We'll talk about that in just a second. Let's go to the Dow Jones Industrial Average, which is down 506 points, almost 507 points, but we should note that's off the worst levels of the day. 9,097 is the last trade there. In terms of some of the other markets that we follow, Bob's there. I almost called you Ron, Bob. No offense. I'm sorry.
Take it as a compliment.
I consider it a compliment. Thank you,
You know how much I love you, but I got you confused.
No, it's a compliment without a doubt. Listen, I just want to, before I get to the markets, I just want to tell you that I saw a flash come across. United Technology was halted for news. UTX, United Technology, a Dow stock, halted for news, and all I saw was a flash just 5 seconds ago. So I'll confirm that with you in just a moment here. But I do see flashes from the wire services here right above our head. So far, you know, a lot of people have been saying it could have been worse. I know you're looking at those numbers and saying it's pretty bad. Yet we were only down a little more than 600 points. That's not even just barely halfway to even triggering circuit breakers that we had. We are on track for a potentially record volume day, 2.1 billion shares we could possibly do today. Let's look at the markets today. And some very interesting things happening. First, we're sitting right at the March 22nd lows.
People who are fluent in various languages that might be able to help them in their continuing efforts to track down the terrorists who Attorney General Ashcroft admitted some of them, associates as he put it, might still be here in the United States. Just a heads up, we are told the White House press briefing will get underway in about 15 minutes, so we want to spend the time now to get you caught up again on what's been happening on Wall Street so far today. As we continue this special edition of Power Lunch, I'm Bill Griffith along with Sue Herrera. Michelle Caruso-Cabrera joins us now with a sector watch to give us a sense of what's been up and what's been down so far today. Michelle?
Hello, Bill. There was a lot of talk about how hard hit the airlines would be when the markets open, and we're definitely seeing that right now. They are the worst performing sector in the markets at the moment, down 33% today. What is probably startling about that number is that accounts for almost all of the losses of the last year. The stocks are down just 39% for the entire 12 months. So a huge, huge chunk coming today. It is followed by lodging. And really, there's this huge focus on how consumers are expected to pull back on their pocketbooks and their spending. Take a look at some of the airline stocks. We've been showing you some of the major airlines. Here are some of the secondary, second-tier, smaller airlines. They, too, getting hit at least 30% each. And, in fact, the International Air Transportation Association estimates that losses for the industry will amount to at least $10 billion. An interesting piece of information on the bottom stock there at the bottom, AirTran Holdings. The pilots have accepted contract changes in order to cut costs. That's going to save the company 22% in pilot-related costs, and importantly, that means no pilot layoffs. You may start seeing more of this as more employees come forward saying they're willing to take pay cuts to keep the business going. Take a look at Starwood Hotels within lodging. This is just one example. You know, when people stop traveling as much, one industry source says that every city loses $1,200 every time a conventioneer attendee decides not to go. Starwood Hotels off more than $7 or 24%. Other areas doing poorly today, we're going to show you two sets of the worst performing sectors, recreation products and also casinos. Again, a lot of focus on how people are just not going to spend money on luxuries. Disney is off 16%. Carnival and Royal Caribbean both off more than 30%. And in fact, we've just heard from Royal Caribbean that they expect the losses from last week of not putting out any ships at least $20 to $25 million. And analysts are estimating that Carnival, for example, between reduced passengers and higher costs due to fuel and security costs, their earnings could go from $1.96 to $1.66. Harley-Davidson also getting hit. That had been one of the more resilient leisure stocks out there. Take a look at areas that are doing well. We do have one merger. Water Utilities, American Water Works, a bid for that company from a German water company, and that is why Water Utilities is up 17%. Precious metals up 5%, perhaps not a surprise. A lot of people still see gold as a safe haven, even though gold has not responded as well as you might think. This chart's a little interesting. This is, of course, where you saw trading halted for a while here in this country. If we could include on this chart European trading, you would see that gold has come up and then back down again. So that is the situation there. Gold it looks to be up $9 here in the U.S. That's from the last U.S. trade. But in fact, in spot prices overseas, gold had actually gone higher and is now pulling back from those levels. Take a look at some other areas that are doing well. Normally, we wouldn't show you this. Normally, my rule is you have to have at least a 1% move to make it on a full screen. But the fact is, I did want to highlight how pharmaceuticals, even though it's not moving up sharply, it is holding on and definitely playing its role as a defensive sector. And then also savings and loans up 1.2%. That is kind of interesting. All of the brokers getting hit very hard. Many of the financial services companies getting hit hard. But the savings and loans are holding on. They had gotten hit extremely hard about a week ago because people thought the interest rate cuts were at an end. Then we saw all the events of last week. Sue, Bill?
Michelle, thank you very much.
Well, in the aftermath of last week's World Trade Center terrorist attack, Wall Street firms have pledged millions and millions of dollars in humanitarian aid to the families of the victims, and among them is Goldman Sachs. The company is donating at least $10 million to help those victims and their families. And here to bring us up to date on those efforts and also the efforts to get the business back up and running as well, we're joined now by Henry Paulson. He's chairman and CEO of Goldman Sachs. He joins us from our offices in Manhattan. Mr. Paulson, welcome. It's nice to have you here.
It's nice to be there, Sue.
How are you doing so far today?
We're having a terrific day today. We've got all our people back. All of our businesses are going. And we've had I think, a very strong day in the market, all things considered.
Yeah, and you know, you deal both with stocks and bonds, Mr. Paulson. Bonds have been able to trade. How would you characterize the kind of day we're having, though, in the stock market?
I think it's a very positive day. I really think it shows the strength, the liquidity, the breadth, the depth of the U.S. equity markets. And I think it shows the confidence that investors have in the U.S. market and the U.S. economy. As we had anticipated today, if we extrapolated from what we had seen in Europe, you might have expected that the S&P could be down as much as 10% and NASDAQ down more. But I always felt more comfortable recognizing that the U.S. investors were going to be a good deal more confident than that.
And how are your employees handling today? I know it was hard for a lot of them to come back to work. Have you had a chance to poll them at all or talk to them?
I've been around. I visited most of our floors, most of the businesses today. They have been absolutely great because, you know, as you mentioned, Sue, that although we had been very fortunate in that all of our employees were safe, and our facilities, our basic facilities, are untouched. But, you know, this has hit us all in very, very personal ways. Many of us knew people, some of them times friends or loved ones that were victims of this of this tragedy. So it's you know, our prayers and our hearts have been going out to all of the victims and to the firefighters and the policemen who were so heroic. And so our people have been touched by this very, very deeply, but it's been gratifying the way they've all worked to get us up and running, and it's really gratifying to see the energy on the trading floors today and the way the markets are working, and it's been really quite an upbeat day for all of us.
I realize I'm on thin ground when I ask this kind of question, and I hope no one takes it in the wrong vein, you especially, but it is known yesterday that Bob Hormats, who's vice chair of Goldman Sachs International, said on another network that Goldman Sachs was calling clients and sort of counseling them, hoping that they don't sell in a panic sort of way. And I know that there has been a lot of a groundswell of support in the on the internet by many investors to buy American, if you will, to buy stocks almost as if they were U.S. savings bonds a la World War II. But I wonder, in a free market society, if some individual investors don't buy, perhaps for the wrong reason, buy into a down market and get caught in what has been a downdraft so far today. You know what I'm saying?
Yeah, I know exactly what you're saying, and I don't view this way. I really think it is a free market, and patriotism is a wonderful thing, and it's been great to see the way this whole country is pulled together and the whole financial community is pulled together. But I think what's impressed me about the market today is there's been balanced buying and selling. We've done a couple 5 million share blocks. There's just been, it's a good volume. It's not a huge volume, but a very, very big volume day. And you need to recognize when you consider what we've been saying to investors, it's very important for us to talk to investors throughout this period. Even though the equity market has been down, we've still been talking to investors. And we begin, you know, prior to the terrorist attack, we believed that the U.S. equity markets were somewhere between 15 and 25% undervalued. And which is not that uncommon when you're getting near the bottom of a bear market. And so what our message has been is a very, very independent message coming from our research area, which is the economy was weak and deteriorating prior to the terrorist attack here and around the world, number one, but the market had traded off 5 to 8% in the weeks preceding that attack. And we believe, although the short-term impact on the economy is going to be negative, looking out to the intermediate term, again, as horrific as this thing has been, and it's really sort of, in some ways, crass to talk about it in economic terms, right, given all the life that has been lost. But looking out in the intermediate, we see a positive and much more certainty given the stimulus that's going to come into the economy. And so we believe, and this is not just patriotism, we sincerely see this economic cycle being telescoped, and we have much more certainty about the V-shaped recovery looking to the intermediate term. And again, we believe that the markets look ahead.
And Bob Hormats, we should mention, is going to be joining us on Street Signs here on CNBC in a short while. Mr. Paulson, just to finish up, you kind of touched on the economy there. We had the Fed come in today as expected, and they moved once again aggressively on interest rates. Do you think, given what you just mentioned on the economy, that they need to do more, or do you think this is going to be enough?
Let me say, first of all, I'm I'm not Alan Greenspan, but I will step back and say that we've been really pleased with the Fed and the kind of leadership we've seen throughout the government. I mean, it's just been terrific, from the president, from the Fed, from the governor, from the mayor in particular. I mean, it's been terrific in the way the industry's pulled together here. I think our expectation is that there will still be more easing as we look ahead. So when I was talking about the positive in economic terms in the intermediate, over the intermediate time frame, built into my comments was there would be more easing, there would be plenty of liquidity, that you would see in more expansive fiscal policy. There'd be stimulus there, and then the whole program to rebuild was going to be very positive for a number of industries. So I think you're going to see all of those things looking forward.
Mr. Paulson, thanks for joining us. I'm glad that today is going as well as it could possibly go for you.
Well, it's a great day, I think, for this country and for the free market system. So thank you very much.
Hank Paulson of Goldman Sachs.
Get you a sense again ahead of the White House press briefing, which we are told will get underway in about 5-10 minutes. Back to Bob Pisani now at the New York Stock Exchange with the Dow down about 553 points. Bob?
Yeah, William, we are drifting is the word, towards the lows of the day. We were down 615, 620 points at our lowest level, rallied a bit and have been drifting a little bit lower for the last hour to hour and a half. Just a couple quick comments on Mr. Paulson's thoughts. He said that this was a great day for the markets, and I think that's the way everybody feels on the floor. They're not happy about the fact that the Dow is down so much, but they point out that just getting the markets open is a victory. I know that's not a consolation to people who are losing money, but these are extraordinary times, and the traders point this out to me over and over again. We don't like the markets being down, but just getting it open is a victory for us. He talked about the volume being not too big. We have a pretty good shot, folks, at an all-time record volume here. That was this year, January 4th, 2.1 billion. We may do that, and I think very likely, in fact, do better than that today. Let's take a look at United Technologies. I had mentioned the last hour I was on, they issued a warning, essentially. And here is a good example. Here is collateral damage associated with the problems in the airline industries. United Technologies came out and said, our third quarter, this quarter, would be in line with expectations, but the fourth quarter, we've got problems. The fourth quarter, it's under pressure due to what they call disruptions in the commercial airline industry globally. So here's a casualty of the airline industry's problems. This is a big company that makes very big in the aerospace industry and in the building systems industry. They went on, and I read their press release pretty carefully in the last 40 minutes. They said reduced airline traffic and grounded aircraft and the impact of these on the aerospace aftermarket will reduce operating income in the fourth quarter. Specifically, they were talking about, if you want to know what this means for their earnings per share, the bottom line, 30 cents lower than analyst estimates, and the estimate I have from First Call, just spoke with them, 97 cents. So it looks like they're talking about earnings in the fourth quarter about 30% below what their previous estimates were. Here's a chart of United Technologies here the last 3 years, and UTX has not opened as of a couple of moments ago. Be honest, see if UTX has opened here. It was 55.81, down $10 here, and you're looking at a 3-year chart. A couple other stocks that are to the upside today that are interesting to look at. It's interesting to see Blockbuster up, for example, and the obvious explanation I got from the traders are people are going to stay home. They're going to rent movies and stay home. Blockbuster up a little bit. There's going to be an additional need for more storage space, more backup systems that are out there given what happened. Not surprising that a stock like EMC is up just a little bit today, and obviously those of you who've been following EMC, we're sitting near multi-year lows for EMC, so it's not a dramatic rally going on, but it is up today. I see QLogic on the NASDAQ also up a little bit here today as well. United Technology, by the way, resumed trading. Bianca, give me a price quote on UTX here. Just resumed trading a minute ago. Drug stocks to the upside. Glaxo, SmithKline up, American Home Products, Merck, Lilly, and Pfizer. Right now, United Technologies is trading at $54. That's down a little more than $1 from the 55 and change that it was trading at just prior to halting for news dissemination. So UTX now trading once again. William, back to you.
Thanks, Bob. See you later. Bob Pisani at the New York Stock Exchange. To Tom Costello now at the NASDAQ MarketSite, with the composite index heading back toward its lows of the day as well.
Yeah, we're still about 15 points off the worst levels, but here's where we stand right now. 1,600 dead even on the NASDAQ comp, and also we're on 1.36 billion shares already. Let me show you, however, the volatility index for the NASDAQ volatility. Well, apparently we don't have it, but I wanted to tell you that the NASDAQ volatility index hit 99 today, an extraordinary number. As you know, we've been watching these volatility indices very closely. That's the first time it has hit that level since spring of 2000, the highest reading since the spring of 2000, indicating a tremendous sense of nervousness in this market on the open, but then it came back dramatically and back down to about 75 or so. Just interesting to see how the options players are playing this market. You know, I wanted to talk about some news of the day in the stock market, just a chance to talk about what's moving stocks beyond the obvious. And how about Rambus? Rambus is moving to the upside today, and that's because, in part anyway, they signed a comprehensive patent licensing agreement with Intel, and it in fact is a new agreement. It supersedes the old one, and with that, they are up 6.6%. Let me show you IDIC Pharmaceuticals, IDPH. They say that their radioactive cancer drug Zevalin has won the back even of an FDA panel for use in treating an advanced form of lymphoma. Stock's down 2%, but holding up relatively well in this market. Oracle, you know, last week Oracle decided that they were not going to give it to terrorists, and they went ahead and they released their numbers, and they beat the street by a penny on flat sales. Well, today we have ABN AMRO cutting their revenue estimates. FAC Equities upgrades the stock, and we are looking for them to come in with their conference call tonight at 5:30 Eastern Time. Also wanted to talk about Abiomed, ABMD. This is the company that about 3 months ago or so, they implanted the world's first artificial self-contained heart. Well, now we've learned that they have installed a second device in a 70-year-old man in Kentucky, and also a German hospital will serve as a European clinical trial site for their implantable replacement heart in Europe. They're down 3%, but again, they've had a pretty good run of late. Abiomed in the news. And how about WebEx, WEBX? They got an upgrade today from Jefferies. They went to a buy from an accumulate, and with that, they are up 36%. Now, the upgrade was based on valuation. However, they say in light of last week's attacks, they believe that the reduction in airline travel, and they say that the service that they provide offers perfect business solution to complete time-sensitive business. They think that increase in demand will allow him to raise his current estimates over there at Jefferies and Company, but nonetheless, that's what's going on. The stock's up 36% right now on the NASDAQ. So we're down 94. We're holding at 1,600 levels we haven't seen since about October 15th or so of 1998. The internal's not encouraging right now at, 30 to 8. But again, the NASDAQ holding in relatively well given the scope of things on the NYSE. Back to you.
Thanks a lot, Tom.
Okay.
We'll see you a little later. Let's go to Chicago now, the Chicago Board of Trade. That's where we find Rick Santelli, and he's going to update us on how things are trading so far in Chicago. Hi, Rick.
Hi, Sue. Well, it's been an interesting session. Let's paint the picture in broad strokes. The U.S. Federal Reserve cut interest rates a half a point around 8:20 Eastern. We've now seen the Canadians cut a half a point, the Swiss cut a half a point, the European Central Bank cut half a point. The Bank of England, not spoken yet, but there is an inclination that we will be hearing from them. At least that's what traders believe. The Treasury markets really had it right, Sue. They facilitated trade on Wednesday, Thursday, and Friday, but even more than that, the flight to quality in the short maturities, and the reason that occurs, of course, is because when in doubt, the U.S. Treasury is the credit of last resort, and the yield dropping in the 2 years specifically has basically held. But if you do look at yields, where they were Friday late in the day, where they are now, they're only incrementally higher, meaning that the fixed income market truly anticipated and correctly priced securities, which is a good thing for the end users using these markets for a risk avoidance scenario. What will ensue the rest of the session? Well, you do have all maturities outside of Fed funds and Eurodollars, basically the very short maturities, down on the day, as I just pointed to, but not down dramatically. And the issues of credit have been holding up well. We see spreads that reflect that in the markets holding in well, especially after all the central banks have lowered rates to give liquidity to the system. momentum, and traders are left with one final thought, and that is with a new Fed funds target of 3%. Traders are saying to watch what Fed funds are actually trading at. The fact of the effective rate versus the 3% target, there may be some discrepancy there, and what the Fed funds contract is now telling you in broad strokes is a 2.5% rate by the end of December, a 20% chance of an extra quarter for cumulative 50 on October 2nd, and the fact that there will be trading under 3% based on how September Fed funds are trading. Back to you, Bill and Sue.
Rick, thank you. Rick Santelli there at the Board of Trade in Chicago. Just a heads up once again that the White House press briefing is set to get underway any moment now. It was scheduled for 1:15 Eastern 5 minutes ago. Presumably, we will see spokesman Ari Fleischer at the podium in short order. In the meantime, insurance stocks among those getting hardest hit today on Wall Street for every apparent reason. Mary Thompson joins us now with more on that story. Mary?
Thank you very much, Bill. Well, as you said, predictably, insurance stocks are under pressure today as last week's attack on the World Trade Center and the Pentagon is expected to be the U.S.'s most costly catastrophe. Dr. Robert Hartwig of the Insurance Information Institute says firm figures probably won't be available for months to come, but some forecasts put the number as high as $30 billion. Official estimates of the property damage are likely to be known in the next couple of weeks, but keep in mind it could be years before liability issues are sorted out. One thing is certain, though, the insurance costs associated with what happened in New York and Washington on Tuesday will exceed the $15.5 billion in payments associated with 1992's Hurricane Andrew. Still, the industry is well capitalized and can absorb the costs of Tuesday's attacks.
But even if it is significantly above that, the industry with about $300 billion in capital should be able to see their way clear of this. Specifically, the industry was viewed as being overcapitalized coming into this catastrophe.
Now, property and casualty and reinsurance firms are expected to bear the brunt of the costs. Chubb forecasting pre-tax losses will be between $100 to $200 million, while reinsurer Bermuda XL Capital forecasts claims of $600 to $700 million. Rival Ace Limited expects the disaster to cut third quarter net by about $400 million, and AIG forecasts net pre-tax losses of $500 million. The list goes on. Chicago-based CNA expecting its exposure to be $200 to $350 million pre-tax. Life insurers' exposure, though, will ultimately depend on the final death toll and how many of the victims were covered by life insurance policies. John Hall of Prudential estimating life insurers will experience a loss of $2 to $3 billion. Last year, the industry paid out claims of $44 billion. He does expect the payments from Tuesday's tragedy to be concentrated among group life insurers and reinsurers who write group coverage. But overall, he does expect the industry's fundamentals not to have been challenged by the disaster and says the life insurance companies are good defensive holdings at this time. Still, as you can see from how the commercial underwriters who service the business community are performing today, investors are expecting, of course, their results to show the effects of Tuesday's events in the near term. So, and Bill, back to you.
Can't imagine why they wouldn't.
Exactly.
Mary, thank you. Mary Thompson.
All right, we're waiting on the White House press briefing, and before we go to that, David Faber joins us now. It's time for the Faber Report. Rather a unique day in many ways on Wall Street, and David's here with some perspective on that. David?
Thanks, Sue. That's right. It is without a doubt a day unlike any other in the long and storied history of the U.S. capital markets. But because of that fact, money managers tell me there is little to be learned about the future from what occurs in the market today. Days in which the Fed and ECB cut rates by 0.5%, where corporations are at least talking about, if not actually buying back their shares aggressively. And days when trading has not occurred for the previous 6 days, well, those days do not occur with much frequency. And that is one reason why money managers tell me they're uncertain if much can be gleaned from the market's performance today in terms of predicting the future. That being said, it is also a very difficult task to try and understand the challenges that lie ahead for the economy and the markets. Questions about things such as consumer confidence continue to circulate. The latest numbers released last week and tabulated prior to the attack were weak. But what Christmas sales will look like is anyone's guess. How well the nation's lenders stand up to potential losses on loans to industries that have been severely impacted by the crisis needs to be assessed. While early signs from the mutual fund industry show few redemptions, it is likewise too early, say many fund managers, to gauge the full impact of the crisis. Certainly, we will see many companies issue profit warnings about future quarters if their business is connected to things such as airlines and travel like we've seen today from United Technologies. Treasury Secretary Paul O'Neill sounded an optimistic note in an interview on CNBC about 1 hour ago.
I think we're off to a good start with the special $40 billion supplemental that's been voted by the Congress to help with the immediate crisis here in New York to begin rebuilding and bring back the tip of Manhattan to what we all want it to be. That's a good beginning. We're looking at sector by sector at special cases. Many people have mentioned the huge impact of airlines being out of business for so many days. We need to look at that.
All right, we are going to now go to Ari Fleischer, who is beginning a briefing at the White House.
Families who we know will be making a sacrifice to allow the reservists to come serve our nation. The President is about to make a phone call to the Chancellor of the New York City Public Schools, Harold Levy, to discuss how the federal government is prepared to help the school children and the parents in New York City deal with this tragedy as children go back to school. The Secretary of Education is with the Chancellor right now. He will be there for the phone call, and he will be making an announcement about additional millions of dollars which will be provided to New York City Public Schools to help them in this effort and to help our children and to help their parents. A little later this afternoon, the President is going to be departing the White House to go to an Islamic center in the Washington, D.C. area, where the President intends to speak out very strongly about the need to remind all Americans that Arab Americans and Muslim Americans love the American flag just like everybody else who's a citizen of this country. And he's looking forward to that visit. He'll spend some time with the leaders of the community as well as various members of the community. The President considers that a very important meeting. Later this afternoon, the President will return for a meeting of the economic policy team where they will discuss the consequences of the terrorist attack on the United States from an economic point of view, as well as discuss the airline industry and the position the airline industry is in at this moment. Mrs. Bush will be in Pennsylvania for the memorial service for those who lost their lives in the crash of the airline in Southwest Pennsylvania. Two announcements for you, and they'll be more than pleased to take questions. President Bush will welcome French President Jacques Chirac for a meeting and a private working dinner on September 18th, tomorrow. The visit is part of President Bush's continuing consultation with key allies about our global agenda, including the war on terrorism, and I note that this was a previously planned meeting. In addition, the President will welcome Amir Sheikh Hamad bin Khalifa Al Thani to Washington. He is the Amir of Qatar, QATAR, for a working visit on October 4th. And with that, I'm more than happy to take questions. David?
Economic front, the President talked about working with Congress on an economic stimulus package. Is he specifically preparing to back another tax cut? Do you think the country needs that right now?
Too soon to say, David. But the President will continue to keep his eye on the economy, and he will continue to listen to members of Congress in both parties about what steps, if any, they believe need to be taken to help the economy, if any need to be taken.
Can I follow up on that? Can you be more specific? Is that one of the ideas that's currently being discussed, both in Congress and between Congress and the administration?
That is one of the ideas being discussed, correct.
And what kind of tax cut? Are we talking about capital gains?
No, it's too soon to say. Too soon to say. The President will have the briefing later this afternoon, and so I would hesitate to speculate until the briefing.
Let me follow up that further. Does the administration support the bill in Congress to provide assistance to the airline industry?
That's the topic that will come up at the meeting this afternoon. The best form that assistance, if any, is to be coming could be available. So that's a topic the President will review, and he's very concerned about the health of the airline industry.
Will there be a decision on either one of these matters out of this meeting?
Let the meeting take place, and I'll try to keep you informed. And again, this is the beginning of a process where the President will keep his eye on the economy in the aftermath of the attack on the United States. So I'll keep you updated.
The Taliban is now saying that its Supreme Council will meet tomorrow to discuss the U.S. demand to turn over bin Laden. What's the administration's response to that? What are you looking for?
The President's response will be he will see what they say, but this is much bigger than that. The President has made it clear, the Vice President has made it clear, the Secretary of Defense has made it clear that this war on terrorism is bigger than any one person. The Al-Qaeda organization is a network that is represented in some 60 countries around the world that exists beyond any one leader. And this war on terrorism is a war that the President said he is committed to taking throughout this organization that engaged in this attack on our country.
And the Pakistani officials are saying that they told Afghani leaders, the Taliban, they had 72 hours to turn over bin Laden. Is that a U.S.-sponsored deadline?
Yeah, anything involving any specific actions that may or may not have been taken by our allies in this matter, I'm not going to get into. And let me try to shed a little light on the reason for that, because there have been many questions about what have you asked your allies to do, and I've indicated to you the broad areas. We've asked our allies to cooperate with us in military areas, in financial areas, in economic areas, in political, and in diplomatic. And I understand why you want to know more. But for me to indicate to you anything more than that would also be an indication to our enemy about what concrete steps allies may be taking. And one of the easiest ways for them to get around any steps our allies may be taking is for them to know about them. So I wish somehow there was a way that I could share this information with people here and with the American people. But as you know, any answer I would give to that would also be directly provided to our enemy. And I will not do that. Rebecca.
All right. Two things. One is, we're hearing reports of an American airliner that had to make an emergency landing in Chicago today. FBI came on board apparently and took away 3 gentlemen. What kind of state of alert is the White House at and law enforcement about people who may still be flying that may be of danger? And secondly, has the president rescinded the order for the military to shoot down commercial airliners if necessary?
Okay. On the second point, I'm not going to address the exact status of the defense operations to protect the American people. Suffice it to say, the United States remains on a very heightened status of alert to protect the traveling public. But that's an operational question, so therefore I'm not going to get beyond what I've said. On the first part of it, you know, the president has tried every day in every way to warn the American people that this is a war and we are an open society. And obviously the events of September 11th, a terrorist organization was able to penetrate our country and to attack. And being an open society, everybody does still need to be vigilant. People still need to take care and to remember that we are in a war footing. And it is a different time and a different era, unfortunately.
Does law enforcement already in the United States, does law enforcement believe that there may be a number of suspects still at large in the U.S. that may have participated in the Tuesday attack and may be planning future attacks?
Concerns remain dealing with ongoing security, and that's why I think you've seen steps that are being taken by the Department of Transportation, the Federal Aviation Administration, to do everything possible to secure the traveling public, particularly in the air. So there's a reason for the stepped-up vigilance and for the stepped-up security. It's because there are causes for concern that remain.
Harry, on that point, there's a news report today that there's a division among the president's advisors about whether or how much to help the airline industry. As the president goes into this meeting, what's the current thinking about that? And is ironing this out one of the purposes of the meeting?
Well, I think, as you can imagine, in any major issue where it involves the health of an American industry, there's lots of factors that need to get considered, and the president will have a good opportunity today to start to address what the facts are. And as I indicated earlier, the meeting hasn't taken place yet. It'll take place mid to late this afternoon, and you may want to check back with me after that.
White House spokesman Ari Fleischer continuing the White House press briefing. We are told that Secretary of State Powell will be conducting a briefing as well, and we welcome you back. I'm Bill Griffith.
And I'm Sue Herrera, and the markets are having a little bit of a struggle right now. We're near our lows rather than where we were about an hour ago when we had bounced off the worst levels of the day. There's a live shot of the New York Stock Exchange. And of course, this is the first day back of trading since the World Trade Center disaster, which occurred last week. They continue the search and recovery efforts there as you look at that live shot of Lower Manhattan.
Let's show you what's happening on Wall Street at this hour. As Sue said, we are near the lows of the day on the Dow Jones Industrial Average. In fact, those may be the lows right now at 8984.49 for the Dow. The NASDAQ, a similar trading pattern today, had been down more than 100 points on the open this morning, now down 96 at 1598.69. The Transportation average very hard hit today. The airline stocks, as you can imagine, down sharply. As we heard Ari Fleischer at the White House say, the president will be meeting with his economic team today to discuss, among other things, any potential government aid for the airline industry. And the utilities average is down over 5 points at 329.77. On the New York Stock Exchange, it shows the index unchanged. I can't believe that would be the case. We've been getting some bad data today, as might be expected, as we get the computers back up and running. But you saw the volume there, which I can imagine would be a correct number at about 1.5 billion shares so far. And the declines do lead the advances by a wide margin. The S&P 500 index down almost 50 points now. The Russell 2000, the small cap index down 16.5, and the American Exchange Index is down 4.2 points today. A bit of selling in the credit markets today. Even in the face of lower short-term interest rates. If you joined us late and you don't know, the Fed did cut interest rates before the open of trade in the stock market today, bringing the Fed funds rate down 0.5% from 3.5% to 3%. That was followed by a similar cut by the Bank of Canada and by the European Central Bank.
Let's check in now with Michelle Carusa Cabrera and find out exactly what stocks are moving in Sector Watch this hour. Michelle?
Hello, Sue. The expectation that people will travel less, that airline travel will decrease markedly, is really dominating the worst performing sectors right now. Airlines remain at the very bottom. They are off more than 30% right now, down 32%, followed by lodging down 18%. Take a look, for example, at AirTran. This is a smaller company. We don't often talk about it within the airline sector, but the situation is so bad that 650 pilots who work for AirTran have agreed to a temporary cutback in their pay. They are willing to work more hours in order to prevent layoffs and also to get through the current situation and the expected decline in air travel. It's not helping the stock a whole lot right now, down 42%, but that is the situation that we've come to, that a number of these companies are going into contract negotiations, temporary contract negotiations with their pilots just to deal with this kind of situation. If you take a look at lodging as well, if you're not going to travel as much, if you're not going to fly as much, then you can expect that you're not going to stay in hotels as much. And we are just seeing very, very sharp declines in companies like Marriott and Starwood and Hilton, et cetera. Take a look at other areas doing poorly today: recreational products and services, and also casinos. So again, leisure getting hit very hard. Disney is at a 52-week low, fully 1/3 of all members of the Dow Jones Industrial Average right now at 52-week lows. Disney today, however, in a surprise move, they issued $1 billion worth of debt in 2-year and 3-year notes this morning. And Mr. Staggs, this is the financial officer, Thomas Stagg for Disney, came out and said, we feel that it is the right thing to do to be in the market to show that we have confidence. And he said that some of the money may be used to repurchase shares of the company. So again, they're issuing these bond notes because they want to show they have confidence in the financial markets of the United States. Take a look at areas that are doing well today. Precious metals, not a surprise, and also savings and loans. This may be interesting because we see so many of the financials getting hit hard today. But remember, these stocks had already been selling off surprisingly and sharply. Take a look at Washington Mutual, for example, over the last month. And here's what I want to point out. We really saw this big decline here in numerous savings and loans because a lot of people were assuming, you know what? We think the Fed rate cuts are basically at the end of the cycle and they're going to get fewer and farther between. And as a result, that's seen as negative for the savings and loans companies. But take a look. We're now getting a little bit of rebound today because you saw the Fed cut rates this morning. And now there are projections that the Fed rate cuts will continue coming in order to keep this market liquid, to keep the economy liquid, and also to support the economy. So got a little bit of a change in fortune there for the savings and loans companies. Bill, Sue?
Michelle, thank you very much. You can see the Dow continues lower at this hour, now down 639 points, about 6.6%. The lows for the session there. In Washington, the guidance we are receiving is that Secretary of State Powell will be holding his own press briefing at the State Department there. I'm going to guess that he may wait until the White House press briefing is over. They don't always like to overlap, and I can see that Ari Fleischer is still briefing reporters at the White House at this hour.
We've seen how Wall Street's been reacting today. How about Main Street? How are people feeling now that the market is open? Sharon Epperson is live in Frederick, Maryland with more on that part of the story. Hi, Sharon.
Hi, Sue. Well, you know, I'm about 250 miles from Wall Street, but still what has happened in New York City and around the world is very close to those people here in Frederick. One of their own was among those in the World Trade Center, and he is still missing. They're also very focused on Wall Street because there are many investors here. We've been all around the downtown area this morning, and we've talked to people. We went to a local barber shop. There they were watching Dick Grasso, and they were watching the Treasury Secretary doing a briefing. And they were not panicking. They said that they're confident the markets will come back, and they were looking for possibly a buying opportunity. We also spent some time with some members of an investment club. When the market was down 600 points earlier today, they were actually picking the stocks that they're planning to buy at their meeting tomorrow. And then we went to First Union Securities, and there we talked to a number of brokers, and they were fielding calls, but they weren't really getting panic calls. They were actually making calls themselves. They were trying to calm down investors, trying to tell them what's going on in the markets today and give them some perspective. And one of the financial advisors that we spoke to, actually the branch manager there, said that while people are not very panicked, older investors, those who have the bulk of their retirement savings in the market, are certainly concerned.
Emotions run very high right now, and we do expect realistically for the next 6 months or so to be pretty rocky. However, we do expect to come out of this just like we do every crisis in the past, and history can help us to keep things in perspective. So that's the important thing is that we believe we're a very resilient country, and we believe that, that things will look much better a year from now.
Now, that's exactly what she wrote in a letter today that she's issuing to her more than 300 clients, telling them to pay attention to history. Look at what happened after World War II. In the years after that, when there has been a market crisis, a year later, stocks have rebounded. In some cases, the S&P 500 has been up 25%. She's telling them perhaps that won't happen. It won't be that much of a gain, but look for the markets to move higher. And she's looking down the road 10 years or so, and she's saying stay in the market. And many of her clients and many of the folks that we've talked to here today are doing just that. Back to you.
Thanks so much, Sharon Epperson in Frederick, Maryland.
Let's get back to Tom Costello with the NASDAQ MarketSite. Tom?
For 48 hours. Can you hear me now? We've had a lot of breaking news over the last 48 hours, and we want to clarify comments that we may have misled our audience earlier in the day, and that is this. Former attendants of the World Trade Center, stand by 1 minute. We have to go to Secretary Powell, who I understand is at the State Department.
Giving to us in this crisis. They have been very helpful recently in the continuation of the coal investigation, and now are helping us with respect to leads in this current crisis, the September 11th incident. He also mentioned to me that the president of Syria is visiting, and that later this afternoon the two presidents will issue a joint statement, once again condemning the actions of last week, condemning those who are responsible for it, condemning terrorism, and committing themselves to work with us in the days and weeks ahead as we deal with this problem. This expression of support is characteristic of the expressions of support we have continued to receive as we call leaders around the world and as we begin this building of a coalition that will be conducting a campaign that will have many parts to it, as I have said to you before, legal, political, diplomatic, law enforcement, intelligence collection, and military as appropriate. And so I'm pleased that the coalition is coming together. I think everybody recognizes that this challenge is one that went far beyond America, far beyond New York City, and far beyond Washington. 37 countries lost citizens in the World Trade Center. And what we have to do is not only deal with this present instance, but the whole concept of terrorism, deal with it as a scourge upon civilization and go after it. But in the first round of this campaign, we have to deal with the perpetrators of the attacks against America in New York and in Washington. And it is becoming clear with each passing hour, with each passing day, that is the Al-Qaeda network that is the prime suspect, as the president had said. And all roads lead to the leader of that organization, Osama bin Laden, and his location in Afghanistan. And that is why we are pleased that the Pakistani government sent emissaries in to try to persuade the Afghans, the Taliban leadership, that they should do what they have been required to do for a number of years under UN resolutions and reject this presence in their country, this invasion of their country by a terrorist organization. We mean no ill toward the people of Afghan. They are a suffering people. They are a poor people. And it is for that reason alone they should not allow these invaders to put their society at risk and to connect themselves to the government of Afghanistan. So I'm very pleased that more and more people around the world recognize the nature of this campaign, recognize that we have to get involved, recognize it's not going to be solved in one day or 1 week, but it'll be a long-term campaign. And as the president and other government officials have indicated earlier, we are also doing everything necessary to protect ourselves here at home and to put ourselves on the right kind of security footing so that we can be vigilant and alert to the threats that still exist within the country or may be directed at us in the future. With that, I will take a few questions. I'm once again under a time limit.
Is it too early? Do you have any indications of how the message is being received by Taliban? The Saudi foreign minister is coming here Wednesday, and could you tell us what you will ask of the Saudis, and whatever they do, would you prefer this time that they be explicit?
I always like explicit rather than vague, and I look forward to seeing Foreign Minister Saud when he comes here. And I have spoken to him, I guess it was last Thursday or Friday. I'm losing track of the days. And so I expect he will be forthcoming, and I expect he will be coming with a message of support and commitment. And I know that they are looking at a number of ways in which they can help us, and we will welcome that help and assistance. They are good friends of ours. They have condemned this act from the very outset, from the very beginning, from last Wednesday morning on. And I'm sure he is coming with a message of continued support and commitment, but I don't want to get into what specifically we might be asking of them.
Any
Robin?
early indications of what Taliban is saying?
Oh, I'm sorry.
I'm sorry.
The Taliban, of course, is responding in the way that it always has, that Osama bin Laden and his associates are guests in their country. Well, it's time for the guests to leave. Rogan?
Two things. First of all, the Pakistanis are saying that there was a deadline of 3 days to hand over Osama bin Laden. Is that true?
Whose deadline?
That the deadline for the Taliban to turn over Osama bin Laden.
The Pakistanis gave them a deadline? Yeah.
Well, that's what I'm asking. Is it a Pakistani?
I don't know that I don't know if that is the case, that the Pakistanis actually said that, and whether they said it in their own name or whose name, but it wasn't in our name.
It wasn't your name. And secondly, on the front line, have you made specific and formal requests to all frontline states around Afghanistan, including Iran?
No, we have not made specific requests for assistance. Those requests are being considered now by our intelligence, law enforcement, and military communities to see what might be needed as we put our contingency plans together. Nothing has been asked of Iran in particular. Yes.
Mr. Secretary, can you say whether this government intends to contact the Taliban and to give either an ultimatum or whatever word you care to choose of the language? Can you deal with these people?
I'm sure there will be some communication in the future, but I'd not like to characterize what that communication might be yet.
Mr. Secretary, as you put the pieces of your diplomatic puzzle together, could you sort of elaborate for us on the importance that Saudi Arabia, Morocco, and other Islamic states play within the Arab world in sort of building this international consensus?
I think they are important, not only those specific countries, but all countries, Arab and otherwise, but especially Arab, to come out and condemn this kind of activity, because it's a threat to their own countries. There isn't one of them you mentioned that hasn't faced some kind of terrorist attack against their legitimacy, against their own sovereignty. And so it is important for them to speak out, especially when we have seen strong statements from Pakistan. And I think Pakistan would like to see other Arab and Islamic countries speak out and act in as strong a way as Pakistan has. And, you know, Uzbekistan has been rather forthcoming, and others have been rather forthcoming. And I think as the days go by and as the various plans come together, you'll see more and more of them speaking out. The UAE has said it is reviewing its relationship with Taliban activities within the UAE, and we'll see where that leads. The Sudan has become suddenly much more interested and active in working with us on various items. So there are a lot of things that are going on that will become more manifest as time goes on. Let me go in the back, all the way in the back.
Mr. Secretary, did you get the chance to talk to the Greek foreign minister?
Yes, I did.
For this crisis?
I did. I talked to my colleague George Papanadeo over the weekend. I can get the specific date for you. Richard has a rather imposing list of phone calls, but I can no longer remember which day. It was over the weekend, both to my Greek and to my Turkish colleagues on the same day.
Is turning over Osama bin Laden enough? Are there other things the Taliban will also
We are
have to
after the Al-Qaeda network. It's not one individual, it's lots of individuals, and it's lots of cells. As I said on television yesterday, Osama bin Laden is the chairman of a holding company, and within that holding company are terrorist cells and organizations in dozens of countries around the world, any one of them capable of committing a terrorist act. So it is not enough to get one individual, although we'll start with that one individual. It will not be over until we have gotten into the inside of this organization, inside its decision cycle, inside its planning cycle, inside its execution capability, and until we have neutralized and destroyed it. That is our objective. Yeah.
Mr. Secretary, the Taliban today is apparently offering that a court of Islamic clerics would determine the fate of bin Laden and that they would accept that outcome. But this is something they've offered before, and the U.S. rejected it before. I want to know if that's still your feeling, if that is any kind of flexibility. And also, is there an interagency team planning to go into Pakistan anytime soon?
On the first point, I'll wait and see what they end up doing and what that court decides once it is convened in whatever fashion it convenes itself and what action it takes. I don't want to prejudge what we might do in response to what it might do. With respect to an interagency team going to Pakistan, we are making a determination now, and it'll take a day or two or a couple of days as to what we might want to ask the Pakistanis for, and when that has been determined, then we will form a team appropriate to that task.
Mr. Secretary.
Yes, sorry.
Are you certain that Osama bin Laden is still in Afghanistan, and are you confident that the Taliban could actually find him?
I can't be certain of where he is. I'm reasonably confident and certain that if the Taliban government wanted to find him, they would know where he is if he is still in Afghanistan, and I have seen nothing to indicate he is not still in Afghanistan. Yes, sir.
Mr. Secretary, how do you plan to follow up on the positive signals being sent from Iran?
From Iran?
Yes.
As I said yesterday, these are positive signals, and I've had it reinforced that it is a positive signal, and it's worth exploring. And that's where I would leave it right now, not move it any further than that, worth exploring. Remember now, as you surely do, that Iran is a nation we have designated as sponsoring state terrorism. And they may want to make cause against the Taliban, but will they make cause against other terrorist organizations that they have provided support to? And I'm willing to explore that. But let's not get any further than that. I'm not, some suggested that they're part of the coalition, they're going to be partners. Not so fast. We recognize the nature of that regime. They have said something that is different than what we have heard from them previously. They too are shocked by what happened, they tell us. And so it seems to me that is an opening worth exploring, and that's as far as we go right now. I'm running out of time. Yes, sir.
Who has not responded well? What countries have disappointed you in their response? And secondly, last week, Deputy Defense Secretary Wolfowitz used the phrase ending regimes that sponsor terrorism. No administration official has repeated that formula. Are we really after ending regimes, or are we simply going to try to change their behavior?
We're after ending terrorism. And if there are states and regimes, nations that support terrorism, we hope to persuade them that it is in their interest to stop doing that. But I think ending terrorism is where I would like to leave it, and let Mr. Wolfowitz speak for himself.
Anybody has what countries have fallen short, let's say?
Oh, I really don't have a list of fall shorts. Some have been able to do more than others. Some, it is rhetorical in nature. And they really don't have much else to give us other than words of support and encouragement. Others, it is far more than that, to the point of, if you have to do something militarily, ask us if we can participate. So it is a full range. But within the capabilities that they have, I am satisfied, very satisfied, with most of the responses that I've received. Where there is an opportunity for a country to do more and they haven't yet offered to do more, I'd rather deal with them rather than single them out. One more, then I got to go. Okay, Barbara, sorry.
Secretary, NATO said they would be with us, but apparently Italy, there was a statement this morning that Italy would not participate militarily in any sort of action. And there have been some countries in the Middle East and elsewhere that have expressed concern that this is going to be too broad a campaign and they want it to be very narrowly focused, and they're nervous. What would you say to them?
Sensitive to all those concerns. I heard something quite different from Italy, but my Italian colleague will be here this week, so Renato and I can talk directly. And we
following that on the Middle East.
Hold on. Pushy.
I'm in New York.
I forgot the question. Next.
The question was.
Jane, pick it up.
No. Taliban. You just said a little earlier that there will be communication, but you would prefer not to characterize it. Yet yesterday, I think you said that in a couple of days, the United States would be talking to the Taliban. Are you suggesting here that the first communication will be military rather than anything else?
No.
So
I think both statements are consistent.
So
communication, contact.
When will the United States be talking to the Taliban? Will we be sending someone in from Islamabad?
That's what I also said today, that I'm not prepared to comment on the modalities or when or under what set of circumstances, what the nature of the communications will be, because that's still being resolved. Okay, Barbara, do you remember what the question is? I'll try to remember the answer.
The second part of the question, forgive me as an ex-New Yorker, was about Israel. Ariel Sharon has not been terribly helpful, it seems, in this. A lot of Arab countries are saying we have to do something about this conflict and we have to restrain Sharon or a coalition isn't going to fly.
I think we do have to do something about the situation in the Middle East. I carve out part of my day to press and work on that. Prime Minister Sharon and I had a very long phone conversation last night, and we talked about his latest approach of his son and an official from the ministry visiting with Chairman Arafat and talking about how this series of meetings could get started. And I never lose sight of the fact that one of the underlying continuing problems we will have, we had it before 11 September, we're going to have it for the foreseeable future, is that we have to get into the Mitchell plan and we have to get back to negotiations in due course. And so I can assure you I haven't taken the United States' eye off that ball. I do have to go. Thank you.
Secretary of State Powell wrapping up his what has become a daily press briefing there at the State Department. Let's get back to Tom Costello. You had a quick, and I have to emphasize, quick clarification there at the NASDAQ MarketSite.
Earlier today we were talking about the firm Sandler O'Neill and Partners and the fact that they were suspending market-making operations. We want to underscore they are still very much in business. They are suspending market-making operations. This is a company that has really been hit hard by the World Trade Center attacks. They have 3 confirmed dead, 63 missing out of 177 employees at World Trade Center number 2. Their losses were absolutely enormous on a personal level. I just got done talking to one of the senior executives at the company saying that they are very much in business. And as for their market-making operations in NASDAQ stocks, they will rebuild it. They say they are still trading out of Midtown. They've been doing a lot of fixed income work, they tell me. But again, we want to emphasize Sandler O'Neill and Partners only suspending market-making operations, not suspending operations as a whole. We want to make sure that we underscore that. NASDAQ at the moment giving back about 99 points, and we are about 9 points off the worst levels of the session. The volume right now, 1.5 billion shares. It is a heavy volume day. Back to you.
Tom, thanks very much. Tom Costello.
And that's it for this edition of Power Lunch. You'll be on Market Wrap. I'll be on Business Center.
Ted David's up next. Stay tuned.
This CNBC program is sponsored in part by O'Doul's.
Are you struggling to hear on your cell phone? Then try the internal antenna. Simply place under your battery and presto. It's like adding a 4-foot antenna to your phone. You'll be able to hear in buildings, hallways, even drive-in tunnels with better reception and less static. Watch, we put it to the ultimate test in an elevator. The ordinary phone doesn't work, but the internal antenna cell phone works. The sound is perfectly clear. Amazing. Best of all, it works on any mobile phone.
Before I used to get static, but now with the internal antenna, the calls are perfectly clear.
No more static or dropped calls. Competitive products cost $29.95. But now on this exclusive TV offer, you get the internal antenna for only $19.99. But wait, call within the next 10 minutes and get the Wave Scrambler, a $20 value free. Filters out 99% of electromagnetic waves, making it safe to talk on the phone. Imagine the internal antenna and the Wave Scramblers, a $50 value, all for only $19.99. Not available in stores. Order today.
The BMW Roadsters.
Closed captioning is sponsored in part by Brokerage America.
Ladies and gentlemen, our heroes will now open the marketplace. The green button.
The incredible scene this morning right here at the New York Stock Exchange as the markets come back to life after a week of darkness. Good afternoon. I'm Maria Bartiromo, live at the New York Stock Exchange.
And I'm Ted David at CNBC Studios in New Jersey. We'll be covering all the action over the next 2 hours as Wall Street gets back to work on this Monday afternoon. Maria?
Indeed, Ted. Today we are looking at sharp declines in the market. But truthfully, a lot of people believe that this is an okay showing, given the fact that we have seen very sharp losses for the international exchanges over the last 4 days as the New York Stock Exchange has been shut down. There are several groups leading the way lower today. The airlines, the insurance companies are the most obvious, and they are the ones being hardest hit this afternoon. 2 hours to go in the regular trading session left on Wall Street. Here's a look at where we stand. The Dow Jones Industrial Average has worsened over the last 30 minutes or so. A lot of people were looking for and continue to look for an attempt at a rally. So far, that attempt was made earlier, but people have been selling into that rally, and the market is once again near its lows of the day, down now about 641 points. 89.63, the last trade on the Dow, now below the 9,000 mark. The other averages look like this, and as you can see, it is pretty weak across the board. The big movers of the day include many financials. Of course, the Dow components, General Electric off of its worst levels of the day, but seeing a sharp decline as well. Transport index also under pressure. The transport index right now at 376 1/3, sharply lower on the heels of a huge sell-off in the airline stocks. Many airlines continue to look toward the government for some sort of a financial relief package. They expect that we will see bankruptcies in this industry as people are afraid to fly in the face of terrorism. Advanced decline line, as you would expect, sharply negative today. The number of declining stocks sharply higher than the number of advancing stocks. NASDAQ composite also under pressure. The NASDAQ currently down 98 points, just shy of its low reached just a few minutes ago. S&P 500 under pressure, as you would expect. There you see it, and the Russell 2000 index also participating in this sell-off as small stocks also take a big hit. Let's take you live now down to the floor of the New York Stock Exchange, right beneath this office where I am sitting. Bob Pisani live in the thick of things. Bob.
Good afternoon, Maria. We are just off our lows, which were hit a short while ago. We're only about 30 points off of our lows, but nonetheless, we are below 9,000 at this point. That is sufficient, more than sufficient, to break the recent lows of March 22nd. The Dow 91.06, the intraday low, that was back on March 22nd. We've broken through that. And the closing low, 93.89, also on that same date. And looks fairly likely we're probably going to break that as well at this point here. Here's a look at the markets today, and we're getting a very interesting commentary. So levels of different commentary, as you might expect on this rather emotional day. A lot of traders are not happy. Of course, no trader down here on the floor, no floor broker, no specialist is happy to see the markets down this much, but they are happy that the markets are just open. They consider that a victory, and this is a rather extraordinary situation, as I'm sure everybody understands. The bulls say, look, this is going to help the bottoming process. The heavy volume that we're getting, the heavy selling, we've been looking for some kind of bottom. This is going to help that along. The bears are saying, I'm sorry, I would like to believe that, but this is a totally different world. If this was happening a week ago and there was no disaster at the World Trade Center, then yes, everyone would be on board with the idea this is the bottom. But the world is a different place now, and we have to look at it a lot differently. And so people are scratching their heads trying to figure out what the possible loss of a peace dividend might mean. Hardest hit today, entertainment stocks, lodging stocks, airline stocks, some of the insurance stocks, and cyclical stocks. Now, let me just show you a few, but before I get to that, let me just note that one of the casualties of the airline industry is United Technologies, because they just came out less than an hour ago and said while their third quarter would be in line with expectations, their fourth quarter would not. They'll be under pressure due to what they're calling disruptions in the commercial airline industry globally. And remember, this is one of the large aerospace manufacturers that are out there. The fourth quarter will be 30 cents lower than analyst estimates. We're talking about somewhere around 97 cents, I think was the analyst estimate. The bottom line is the earnings per share in the fourth quarter are going to come in 30% below expectations. Take a look at United Technologies. It was trading down about $10, was halted for news. This was the news that I just gave you, and it resumed trading a short time ago. And you can see here now down $16.30, and obviously the trading rather heavy at this point. Here's a couple of stocks. Take a look at entertainment stocks, for example, America Online, Disney, Viacom, and I threw in a couple of oddballs here that you would normally think go in here. Callaway Golf also down rather weak. Even golf stocks considered weak. And IntraWest, I put this in there. This is the #1 ski operator in the country. Own a lot of ski resorts around the country. It too weaker on, I presume, the idea that people will be traveling less, skiing less as well. Airlines, of course, are weak. By the way, while I was standing here, Continental Airlines announced that they were suspending all DC-10s that are flying after October 1st. Delta, UAL, obviously all weak, but Continental especially weak, essentially cut in half there. Hotels and entertainment, obviously, logically, another weak spot here. Marriott, Four Seasons, Hilton, Starwood, and Carnival, I put in one of the cruise lines. They are weak as well here. Obviously, less travel anticipated at this point. The cyclicals out there, and I'm talking about companies that basic material stocks, paper stocks, some of the chemical stocks like Roman Haas, as well as Whirlpool, Honeywell, United Technology that are involved in manufacturing overall. Some of the defensive stocks are doing better. Some of the paper stocks like Unilever, Kellogg's, Pepsi are all right. You can see here Eli Lilly and Merck in a somewhat better drug area. Let's go over to Tom Costello, who's standing by over at the NASDAQ MarketSite. Hello, Tom.
Hi, Bobby. Thanks very much. Down 100 points. We're only about 9 points now off the worst levels of the session, and the volume right now is pretty heavy. In fact, 1.5, there you go, 1.5 billion shares on the tape, down 6% on this market. Same story that you're seeing over there, we're seeing here. Airlines and anything related to the travel industry is getting hit pretty hard. BEA Aerospace down 55%. They make products to go inside airline cabins. We've got SkyWest down 37%. Frontier Airlines down 25%. Air Canada, the ADR is down 32%. You know about Continental. You know about United Airlines already. On the bottom, look at this. Travelocity down 35%. Priceline down 43%. Remember, they named or rather on that website, you can name your own ticket price. Expedia, the the online travel service down 28%, and hotel reservations networks down, call it 30% to $26.10. All of that said, where does the NASDAQ stand in the aggregate over a 3-year period? The NASDAQ right now sitting at levels we haven't seen, in fact, since October 15th or so, 1998. The NASDAQ, in fact, did today take out that October 4th low that so many were concerned about before the terrorist attack. We've also been watching the share buyback announcements roll in throughout the day as companies take advantage of the SEC rules, loosening up the rules, in fact, over companies that want to propose or the board has approved buybacks, and they include Akamai as well as Sanmina, Siebel, Starbucks, Cisco. Go to page 2 here. We've got more, including BEA Systems on that page, Vignette, Verity. Takes just a minute to roll. And there you go. Vignette, AD Advanced Digital on the bottom, and Dobson Communication, the second one from the top. So the NASDAQ at down 99 points. The internals here right now, listen to this, 31-7. Decliners over advancers, 31-7 right now. Ted, back to you.
All right, Tom Costello, NASDAQ MarketSite. Thanks very much. Let's take a quick look at what the dollar and the bond are doing. And we'll show you here. We had seen the dollar weaker earlier today. We have seen that turn around vis-a-vis the yen, certainly at 117.34, up about a quarter yen. The euro is stronger than we've seen in quite some time at 92.45, and $1.4663 buys you pound sterling. Let's take a look at the credit markets here and look at the 10-year and 30-year. The 10-year note down about 2/5 of a point, yielding 4.63. The long bond is off 3/5 of a point, yielding 5.42. Here's Holly List now, Senior Vice President of Fuji Futures, live at the Chicago Board of Trade. Holly, what's the best way to describe market action today, and why not a bigger flight to quality?
Well, it was a little bit subdued, if I had to use one word, although we did see some good volume early in the session, and then again here closer to the close, midday, it was a little subdued. I think we're not seeing the markets a little bit higher off of the rate cut that we saw this morning. There are some people thinking that maybe the Fed is done, although you don't get that impression from reading their statement or looking at the funds contracts. And there's also some concern that you may see some inflation down the pipeline, although that doesn't seem the case either when you look at some of the statistics we've seen like PPI and CPI. But gold and crude are looking that maybe there is some talk of inflation down the road.
The U.S., as you know, has petitioned OPEC to undo the million barrel a day reduction that it started at the beginning of this month. Kuwait has already said that it would help make up the difference, but if OPEC comes out with some kind of an announcement that says basically we're with you and we will do that, would that be something of a help to the bond market?
That would clearly be a positive for the bond market, which is much more concerned about inflation, much more, it prices that in much more tighter than the short end does. So if they do ease those restrictions and those production cutbacks, that should certainly help the long end, and we probably could see a retracement, see the market a little bit higher than we are today.
Someone suggested earlier that the long end of the market might be very vulnerable if we see a faster than expected recovery. That said, what's the safest place on the yield curve to be right now?
Well, you'd probably want to be in the short end. Of course, people like going into treasuries because you do have that flight to quality and the safe haven. And in the case we've seen recently, although not today, they tend to go into the very short end. So you might want to be in something like a 2-year treasury. Now, we do get the announcement this Wednesday about the size of next week's auction. And we do anticipate that we're probably going to see a larger amount of 2-year notes auctioned due to the bill passing that they want to increase funding here by at least $40 billion.
Anything else you'll be watching this week in particular from a data standpoint?
Well, people clearly want to watch stocks and see how that's impacting the markets here. That is critical. There is a lot of talk that maybe a low is somewhere near in sight. That would certainly be good news for the market. We do have some economic data coming out this week, CPI, the Fed's beige book, but unfortunately a lot of these numbers are taking on a little bit less relevance because they were all taken prior to last Tuesday. The one piece of data I believe that we get this week, it's the Money Magazine confidence data, I believe Wednesday afternoon. That'll actually have been taken after last Tuesday, and so that may be the most relevant piece of data.
Nice to see you, Holly. Thank you for joining us. Holly List, Senior Vice President, Fuji Futures, live from the Chicago Board of Trade. Shares of major U.S. airlines falling to 12-month lows today, of course, as investors see a grim outlook for an already weakened industry. Many airlines facing serious financial trouble, being forced to cut capacity and jobs, and some on Wall Street are looking for the government to step in. Here's a look at some of the major airlines and how they are faring. I would point out the transports today down 382 points, and this is why. Continental down almost $20, UAL off 12 and change, Delta Delta lower by 16 1/3. Northwest is off 7.22, and AMR is down $11.74 at the moment. Phil LeBeau is in Chicago. He has been following this story. He joins us now with more. Phil?
You know, Ted, I want to give you some sense of how tenuous this situation is for the airlines. Some of the analysts who cover the industry say it's hard to gauge what will happen next for the carriers and the airline stocks because things are literally changing day to day. So let's start first giving you the latest on the airlines as of this afternoon. It is hard to pinpoint industry losses, but a couple of analysts are telling me that it is conceivable the industry as a whole is losing over $200 million every day. That's the industry as a whole. Now, many of the carriers are trying to lower their costs by reducing their schedules to 75 or 80% of what they were flying before last Tuesday. And so far, Continental and Virgin Atlantic are two airlines that have announced layoffs, but it is expected that other carriers will follow with their own cutbacks. All of this comes down to the airlines surviving a cash crunch, and two things will determine if that happens. First, in the near term, the government, will it pass an aid package? If Congress does help the airlines, how much of that money will go directly to the carriers to bail out their losses, and will there be some insurance liability? That is one issue. Also, there is another issue, and this one is really the more important one. How long and deep is the traffic slump? And the key here is when business travel will rebound and when leisure bookings pick up again. Nobody is sure exactly how many seats are going empty because travelers have canceled or delayed flights, but some think the load factor has probably gone from over 70% last week to under 50% this week. Remember, the number of seats filled is the key to making flights profitable, and if you're only filling half the plane, then you're going to lose money. So even if the government agrees to help the airlines with some type of aid, the key to this crisis long term is bringing back the customer.
We don't know what the exact numbers are, but the bookings are substantially reduced. And in the airline industry, the bookings generate the revenues and the operations generate the expenses. And right now there's a very substantial imbalance as the expenses continue on a fixed cost basis and the revenues are at a very subdued level.
Bob Brizzolera brings up a good point about fixed costs for the airlines. Even if the carriers cut flights and cut jobs, they are still facing fixed costs such as aircraft leases and depreciation. So, for example, if a carrier is not flying a plane from Chicago to New York, it is still paying for that plane. And then you also have to factor in employee contracts, which is a whole nother issue. So at this point, it's a tough situation for the airlines, and it's not an exaggeration to say that things are changing day to day for the carriers, and that's why we're seeing the press in Washington, Ted, for some type of government aid package to be passed as soon as possible. That's going to be the next key issue for this industry. Ted, back to you.
Phil, thanks very much. Phil LeBeau live in Chicago. Many people have Merrill on their minds today. Our own David Faber is one of them. David?
Thanks, Ted. Merrill Lynch is one of a number of major Wall Street firms impacted by last Tuesday's attack on the World Trade Center. The nation's largest brokerage firm is headquartered across the street from the former home of the Twin Towers, and its own headquarters building is not currently inhabitable. Joining me now to discuss Merrill and the markets is the firm's president and chief operating officer, Stanley O'Neill. Okay, we're just going to wait 1 second until he can put his IFB, that little piece of plastic we talk about, back in his ear so he can hear me. Mr. O'Neill, nice to have you with us. First off, what about Merrill?
Hi.
Hi, can you hear me?
I can.
Okay, good.
You're a little faint, but I can hear you. Your volume could be a little louder.
I'll try and speak as loudly as I can. Where are most of Merrill Lynch's employees today, given the fact that your headquarters building is not operable?
Well, I'm in Jersey City, and we have most of our trading operations are located here in 3 different buildings. We have relocated virtually 90% of our entire 9,000 population that was in downtown Manhattan at various locations, including here, as well as some in Manhattan, and quite a number in a couple of campuses that we have in Princeton and in Hopewell. So we're in pretty good shape.
Is that going to be the state of affairs for some time to come?
It depends entirely on access to a couple of buildings that we have downtown. Our World Financial Center North Tower is totally unscathed. So the issue in terms of having that building back up and running is solely dependent on having access to the area and having power to the building. which we would hope would be short-term, but we're prepared to operate for a longer period if necessary. We have another couple of buildings downtown that are important to being able to consolidate some of our people back in one place, but we're prepared to operate in this mode for some time to come if necessary.
Have you been given any timetable in terms of when you might be able to return to World Financial Center?
No, I think that's dependent entirely on the city's efforts, and we're taking our cue from them.
Of course, you have brokers throughout the nation. I'm curious, what is your reaction to today's market action?
Well, I think the most important thing is what we have, which is an orderly and liquid market, one that is functioning in a way that we're all used to. And I think that's what we have at the moment. I think we have both buy interest as well as sell interest, and I think we're seeing reasonable transition through the course of the day. Certainly from our retail network, we've seen nothing that indicates any sense of panic whatsoever. People are very calm and moving forward in a very constructive way.
What about, it was a very difficult year already in terms of two important businesses for Merrill Lynch and many other brokerages, namely underwriting corporate securities and advising on mergers and acquisitions. I would think those businesses are not coming back anytime soon. Would you agree?
Well, we were looking at a little bit of a slowdown even before this, but I would say these things are very hard to predict. It's unclear whether there will be some interest on the part of, for example, perhaps some European companies might be interested in valuation levels of their counterparts in the U.S. That might be temporarily depressed from their vantage point. There also may be reasons to accelerate consolidation in certain industries. I think it's a little early to tell. Clearly, I think there'll be dampened activity for a period of time. I don't know that that means anything over the intermediate term, though.
Finally, there's just been a great deal of speculation that some of the companies that have been displaced in New York City won't return. Do you believe Merrill Lynch will return to New York City?
Clearly, our headquarters are in the World Financial Center North Tower. And as I mentioned before, we're looking forward to having access to that center again. It's solely a matter of being able to get access. The building is in great shape, and we're looking forward to getting some of our people back in there.
Mr. O'Neill, thank you for being with us. Sorry about the problems at the beginning of the interview.
That's quite all right. Thank you.
Stanley O'Neill is the President, Chief Operating Officer of Merrill Lynch. Send it back to Maria now, the New York Stock Exchange.
Thanks very much, David. And today we've been talking about the impact that this terrorist attack has had on the airlines and as well on the defense companies. There is some strength in a handful of defense companies today. Let's bring in Kai von Rumohr from SG Cowen into the mix. He follows the group for SG Cowen and joins us now live from that firm. Nice to have you with us, Kai.
Thank you.
What do you make of the performance in the group today? I was just checking a number of the defense companies, and I noticed that it's really a mixed performance. You've got some real winners, but a fair amount of losers as well. What's going on?
Well, actually, if they're pure defense, they're pretty much winners, and I think the reason is that weapons spending had been moving up anyway, and you put the overlay on a weak cyclical market and greater sensitivity to defense issues, and I think the fundamentals look a little bit better.
Let's talk specifically about some names. Of course, Northrop Grumman opening higher today. That stock right now up about 16%. Lockheed Martin also doing well, as is Raytheon. What kind of an impact are you looking for from this increase in spending on weaponry? I mean, how important is this actually for earnings, say, in 2002?
It's very difficult to tell. I wouldn't look for much of an impact in the short term. I think you're seeing an emotional response. If you kind of go back in history, whenever you see a major catalyst shock, the group tends to trade up. For example, in 1979, the entire group was up 60% relative to the market from October to December. This shock has to be even greater. So I think this is kind of partially an emotional response, because this is a group that has some attractive fundamentals in a market where others, look worse today. And we've seen a pretty good start out of the gate today, but we expect a number of these stocks to continue to trade higher.
You look at a company like Level 3 Communications, today alone up 37%. First, before we get some stock picks from you, let me ask you how much you think spending on weaponry will increase in the face of this terrorism.
It's very difficult to tell. A lot of the direct response to the terrorism does not require more weapons modernization. But the fact that we were already in the process of kind of a weapons modernization upswing, you know, I think with greater sensitivity to defense issues, we're going to see that continue.
What would you be buying at these levels?
Well, Northrop Grumman is one we like. We think the stock could go to 130. They're already in an upswing. We think there's a somewhat greater chance there may be add-on spending for B-2 updates or for their Global Hawk unmanned vehicle. And we like the Litton acquisition. We think the cost savings should be building there.
And let me just point out that LLL is L3, not level 3. L3 has had a pretty big run-up. Valuation a concern to you?
No, it's actually not back to its prior high. The two top picks we had this morning were Northrop Grumman. The second one was L3. They've got a broad-based defense business. They've got a bomb detection business that should benefit, offsetting some exposure to their commercial aircraft business. And they're a consolidator, so we think the stock could go higher.
Kai, good to have you with us. Thank you for your insights. Kai von Rumer, SG Cowen and Company, joining us. The market continues under severe pressure today. The Dow Jones Industrial Average right now down 655 points. Let's get a check on what else is happening. Bonnie Behrend and a CNBC News update.
Hello, Maria, and good afternoon, everyone. America remains on a heightened state of alert. Secretary of State Colin Powell, speaking to the press a short time ago, says in the investigation of the attack 6 days ago, all roads lead to Osama bin Laden, who's known to hide out in Afghanistan.
The Taliban, of course, is responding in the way that it always has, that Osama bin Laden and his associates are guests in their country. Well, it's time for the guests to leave.
Afghanistan's leaders are leaving the decision of whether to turn over Osama bin Laden to the Grand Council of Islamic Clerics. A radio report out of Afghanistan says that the decision comes after a day of meetings with officials from Pakistan. Earlier, President Bush got tough, referring to America's tradition of fighting outlaws on the western frontier.
I remember that they used to put out there in the Old West a wanted poster. It said, "Wanted, dead or alive." All I want, and America wants him brought to justice.
Meanwhile, Attorney General John Ashcroft says the government now has 47,000 potential leads and is adding air marshals to commercial flights. Ashcroft says a terrorist threat remains in this country and wants to beef up laws to identify, chase down, and prosecute terrorists. He hopes to see these laws enacted by Congress by the end of the week. FBI Director Robert Mueller says there have been at least 40 hate crimes reported against the Arab American community and warns vigilante attacks and threats will not be tolerated. He's also calling for help for the FBI in Arab and Farsi language, the national language of Iran. American citizens, that is, who speak both of those languages. And baseball returns Monday night, nearly a week after being halted because of the terrorist attacks on the World Trade Center and Pentagon. U.S. flags will adorn players' caps and uniforms. And God Bless America is set to replace Take Me Out to the Ball Game as the traditional crowd sing-along during the seventh inning stretch. Ted, back to you.
All right, Bonnie, thanks very much. Just want to quickly flesh out some of the changes that Continental Airlines is telling us about. They are, at this point, going to stop flying the following routes, resulting in complete discontinuation of service at 10 cities. Cleveland, well, I'm not going to mention the 10 cities where there will be a complete cessation of service, but these are the routes that are currently being cut out. Cleveland to Atlantic City, New Jersey, Houston to Abilene, Houston to San Angelo, Houston to Tyler, these are within Texas, Houston to Waco, and then New York, Newark to Daytona Beach, Florida, New York, Newark to Dusseldorf, Germany, New York, Newark to Houston, Hobby, Newark to London, Stansted, and Newark to Melbourne, Florida. Gordon Bethune, if you've read his book From Worst to First thing he likes to do is take a look at where people want to go and where people don't want to go, and he cuts out those routes. That's how he took the business from worst to first, and they are apparently pairing some of the routes that they believe there will not be the ones that passengers necessarily want to use. Michelle Caruso Cabrera joins us now for a look at some sectors today and how they are faring. It's Sector Watch time. Michelle?
Hello, Ted. The airline sector, obviously the worst performing group today. It is down about 33%. We decided to show you the 1-year and 5-year performance. Today's move, in essence, almost erases all of last year's gains, all of the previous biggest gains that we would have seen over the last 5 years. Lodging is also very weak today, dovetailing with that whole group, down 19%. Take a look at the airline index over the last 5 years. This is a basket of airline stocks and what it has done, down 39% today. And it's really difficult to see this move right here at the very end. But take a look. The airline index is at 71. I mean, you essentially have to go all the way back to 1996 to get to levels that we are seeing in the airline stocks today in the airline sector. Take a look at areas doing well. Precious metals are up. For the first time that they're trading, they're up about 3%. Not a huge move considering, but they are holding on and at least living up to their name for now of being a safe haven sector. That is followed by savings and loans. Take a look at a gold chart over the last 3 years. And I just want to point out that even with the recent gains that we've seen here, they still don't go all the way back to what we've seen over the last couple of years. However, I will point out there's been a big pickup in volume recently because of the situation and the recent attacks. Savings and loans, if you take a look at a number of them, this has been one of the few financial stocks, all these financial stocks doing well. But when you look at the brokers and a number of the bank stocks, they're getting hit very hard. Remember, the savings and loan sector had gotten hit very hard back when people thought the Fed rate cuts were basically coming to an end and that the next phase could actually be rate hikes because there would eventually be a turnaround in the economy. But clearly, the events of last week have changed all of that, and those stocks are gaining today. Ted?
All right, Michelle, thanks very much. Michelle Caruso Cabrera. Let's get a look now at some of the winners and losers on Wall Street today, individual stocks. Here's our stocks editor, Joe Kernen. Joe?
You would expect, Ted, perhaps the NASDAQ active list to be all stocks that are blue chips, household names. Check this one out, Ted. This is pretty interesting, and folks at home. Polycom, number 19 on the active list on 12.6 million shares. The average daily volume, 1 million shares. This company is involved in video conferencing, and not only did the shutdown of the our air system last week cause a lot of people to conduct video conferencing that day, but the idea that business travel could be severely restricted from here on out perhaps has got people piling into this stock, which is a leading maker of video conferencing equipment. But you can imagine last week when companies needed to get together with no possibility of taking a flight to meet either a client or, other people, other associates, video conferencing was used. And many times in the past we've seen companies with a 1 or 2 day pop, the bomb detection systems or the X-ray airport equipment companies. We'll see whether this turns into to anything other than that. This obviously has volume as well as price action. Here's another one, much smaller, but it is a big percentage gainer today, up 44%, ACT Teleconferencing. Elsewhere, I wanted to just update the situation that we were covering before any of this happened concerning Lilly. The drug stocks are up today, but remember that that Wednesday, the FDA panel was supposed to meet to consider this company's groundbreaking experimental drug for sepsis, which is an affliction that kills 30% of the 750,000 people in the U.S. who are stricken by sepsis each year. There was supposed to be an advisory panel meeting on Wednesday. It was canceled. The FDA would like to set up a new panel meeting, but everyone's got to get to Washington. You can't imagine how hard that is to get all these panel members to Washington. At the same time, they hope to get a new date for a regulatory meeting on Lilly's drug for sepsis, Zygris. They hope to get that sometime within the next 6 weeks to be able to, to hopefully get the panel together to consider what could be a really important drug, Ted. Some things can't wait, and hopefully within the next 6 weeks we'll hear. Back to you.
Joe, thanks very much. Quick look at the Dow here, which, as you can see, is down about 669 points. From a point standpoint, no pun intended there, the largest point loss we've ever seen on the Dow was on April 14th of last year, 617 points. But in percentage terms, and it's always important to take a look at whatever point loss we look at, in percentage terms, it was a 5 2/3% loss, which is about what we're looking at here. A little little bit more than that. Just as a frame of reference, when we lost 508 points back in '87, that was a 22% loss on the Dow. So just keep that in mind when you look at point losses. Keep in mind the percentage value of the loss as well. Still to come here on Street Signs, we'll talk to the CEO of Pfizer, which is one of the companies that did a buyback today, and we'll talk more about buying back their stock. Also with the CFO of Fleet Boston Financial, who bought back about $4 billion worth of his stock. We'll check in with Carl Quintanilla at the Bear Stearns trading floor as well. All that straight ahead. Keep it here.
If you have osteoarthritis, there's reason to celebrate. It's Celebrex.
Celebrate, celebrate.
Celebrex specifically targets only the COX-2 enzyme, a key source of arthritis pain. Celebrex relieves arthritis pain plus inflammation and stiffness too. Celebrex should not be taken if you've had aspirin-sensitive asthma or allergic reactions due to aspirin or other arthritis medicines, or certain drugs called sulfonamides. In rare cases, serious stomach problems such as bleeding can occur without warning. Tell your doctor if you have kidney or liver problems.
Celebrate, celebrate.
Powerful 24-hour relief from osteoarthritis pain, inflammation, and stiffness.
Celebrate, celebrate. Come on and celebrate.
If you have any questions or to learn more about prescription Celebrex, please contact your doctor. For more information, call 1-888-CELEBREX or visit Celebrex.com.
The Senior PGA Tour on CNBC. Next, the Charles Schwab Cup moves to North Carolina for the SAS Championship. Saturday and Sunday, 6 to 8 p.m. Eastern on CNBC.
It's only a little scratch.
Here a scratch, there a scratch, everywhere a scratch. And they're all an eyesore. What you need is GS27 Scratch Remover. It gets rid of those surface scratches quickly and easily. Simply rub GS27 into the scratch, then polish to a beautiful finish. The scratch is gone. Would you do this to a brand new car? Ouch! But GS27 removes that ugly scratch quickly and easily. It'll even remove paint scrapes and unsightly rust. GS27 is only $9.95. But call right now and get a second tube for only $5. That's two for just $14.95. Plus, we'll give you this key finder key ring free. Just whistle and the key ring beeps. Order your GS27 now.
Call 1-800-552-9339 to order GS27 Scratch Remover now. Get one tube for $9.95 or double your order and receive two tubes for just $14.95. Call 1-800-552-9339.
Currently, the Dow is off 666 points, the NASDAQ down 105 on this first Monday back to business after the attack on America. And good afternoon, everybody, and welcome back to Street Signs. I'm Ted David.
Good afternoon. I'm Maria Bartiromo at the New York Stock Exchange. It has been a rough one for the markets on Wall Street today. The Dow Jones Industrial Average remains quite weak, down 666 points right now. Worries on the heels of the attack at the Trade Center. Plus, we have been seeing very weak performances from the international markets since that occurred. Here's a look at the numbers with an hour and a half to go in today's regular trading session. The Dow Jones Industrial Average down 665 to a level of 89.39. Transportation average taking a huge hit today. Airline stocks are down across the board as investors continue to worry about the viability of those companies in the face of the terrorist attack. People are not flying, and the airlines are asking the government for financial aid, down 388 on that index. NASDAQ Composite also weak today, down about 105 right here. It is now at its lows of the session. S&P 500 also under pressure, as is the Russell 2000 index. There's a look at the numbers, and as we have been telling you, airlines as well as insurance companies among the hardest hit and most impacted. Ted.
Maria, thank you. Last week's terrorist attacks on America having, well, they are expected to have anyway, a ripple effect throughout the U.S. economy. Few sectors more impacted than the pharmaceutical industry. Joining us now from his New York location to talk more about the impact on the drug stocks, Hank McKinnell, Chairman and CEO of Pfizer. Mr. McKinnell, nice to have you with us today.
Good afternoon, Ted. You're having a busy day.
Yeah, let me give you the opportunity, as I would like to with all the CEOs who come on, to make some general comments, if you would, on the tragedy of last week before we talk business.
Ted, these attacks on New York and on Washington were attacks on all of us. You saw some extraordinary heroism by the fire department, the police, the rescue group. Now it's up to the business community to support the relief effort, to keep our company strong, and to keep the economy strong. And let there be no mistake, we'll be there.
Let's talk about your take on today's price action with regard to your stock, the buyback you did, and the overall market climate in general.
Our board of directors approved a $5 billion share repurchase in June of this year. We've used about $1 billion of that authorization. We have about $4 billion remaining. The combination of lower share prices and lower interest rates makes buybacks even more important if you take the long-term view. We were buying today, but in relatively limited quantities. The stock opened fairly strongly, and it's remained strong throughout most of the day. Once things settle down a little bit and we know more about liquidity, interest rates, and share prices, we'll be buying even more aggressively over the next days and weeks to come.
I was going to ask you, obviously we all know you can announce a buyback, you don't have to act on it, but you do plan to continue to act on this buyback in the future?
We intend to complete this buyback over the next many months.
In what ways do you see your business affected near term and further out as a result of the activities of last week?
Well, I've always believed the stock market looks about 6 months ahead. I guess today the market looks like it's looking about 6 hours ahead. If you look longer term, we see strong fiscal stimulus with a new $40 billion spending package. We see lower interest rates, and we see improving consumer sentiment. So I think if we look a little beyond the immediate fear and concerns, we see a recovering economy, we see a weakening dollar, which has not been given much attention the last few days, which is positive for those of us who export or who do business abroad. So a little longer term here, I see some real sources of optimism, and I do believe this is a temporary phenomenon we're seeing today.
Where your stock today down not too far from the lows, I guess at last check at 38, your 52-week low 34. Overall, the health of your company, what's in the pipeline, what drugs you have coming off patent, what's going to be taking their place. Just prior to this, there was a little bit of weakness. Now where do things stand?
On Friday, we confirmed that we expect to meet analyst expectations for the quarter and for the year. We confirmed that just Friday. Looking at what's happening currently with the weakening dollar, that should help both increase revenues and reduce expenses. And of course, lower interest rates helps us finance things like share repurchase. So I think, if anything, we're in somewhat better shape today than we were 6 months ago. We'll grow earnings this year by 25%, probably another 25% next year, mostly from operations, but also some continuing savings from our acquisition of Warner Lambert last year.
Nice to see you, sir. Thank you for joining us today. We appreciate it.
Thank you, Ted.
Henry McKinnell is the CEO of Pfizer. All right, let's take a quick look here. Intraday, the Dow is at the worst levels of the session, down 685 points here. And you can see on this intraday chart that is the case at 8,921.32, a loss of 683 points right now. That is about a 7% drop. Do keep in mind that those in the know, or those who say they're in the know, were saying they were looking for anywhere between a 5 and 10% loss. Let's look at the NASDAQ, which I also believe is near the lows of the day here, down 106 points at 1588. We're looking at an intraday chart of the NASDAQ down also about 6.25%. Yeah, just about below here at 1589.30. So that's where we stand at the moment. Rick Santelli is at the Chicago Board of Trade right now with more comment on today's bond market activity. Rick.
Well, let's start out real quickly with the equities. We are in the Dow Futures pit at the Chicago Board of Trade, and considering the fact they were open Tuesday and we're down over 250 points, many people have been stopping me wanting to know why the Dow Futures are down less than the Dow Cash. That is the reason. The Dow Cash in the New York Stock Exchange did not open on Tuesday. It's been very orderly, but we are looking at the lowest prices since the opening, and the opening here was a little weaker than the Cash Dow. Some of the selling hit early and the market recovered. With respect to treasuries, of course, the big news today is that the European Central Bank, the Bank of Canada, and the Swiss Bank all joined the U.S. Fed by cutting 0.5 point from their overnight borrowing rates. 3% is the targeted Fed funds rate. That was done at 8:20, basically on the opening with respect to our Fed. What was the repercussions? The Treasury market had it pegged, meaning they had priced the levels not too dissimilar from where they're closing today. We see yields moved a little higher. We see all maturities, 2s, 5s, 10s, and 30s are down a bit, but not down precipitously, really factored in very well. Fed funds are telling us that by the end of the year, they're looking for a 2.5% rate for the October 2nd meeting. They're factoring a 30% rate, 30% chance of an additional quarter, 100% chance of a first quarter, which would bring it down to 275, 100% with a 30% chance of 2.5. Whether that comes to be or not, we'll have to wait and see. There was an announcement that upticked the cash bond a little bit right after futures close here, and that was September buybacks, 2 scheduled for long maturities, are canceled to resume in October. Traders are a little bit skeptical. This money has to come from somewhere. Maybe issuing debt will be reevaluated, but that was the word from Treasury. Ted, back to you in Fort Lee.
Yeah, Phil, real quickly, if you would, are we seeing any insurance companies sell on the long end as had been, we worried about that last week to take care of insurance claims?
Well, Ted, you know, we did see a bit of that on Wednesday and Thursday, to a lesser extent Friday. The 30-year was super orderly. If it was going on, it was going on in a very orderly fashion. There was no huge, wild selling in the long end, just a general decline.
Rick, thanks very much. Back to you later. Rick Santelli at the Chicago Board of Trade. We are now at a new intraday low for the Dow, off 705 points. The NASDAQ down 110 points. It is 243 here in the East. We have the curbs in at the moment. Here's, again, an intraday chart of the Dow, down 7 1/3 points. Beg your pardon, 709 points for a 7 1/3%, the biggest 1-point intraday drop ever in terms of points. And we'll keep you apprised of that as this session continues. About an hour and 17 minutes to go on this Monday. Up next on Street Signs, one of the big stories today on Wall Street is the massive stock buybacks. We started to talk about that. We'll talk more about it when we talk to the Chief Financial Officer of Fleet Boston Financial. His company looking to buy back up to $4 billion worth of stock. We're back in a moment.
Is your cartridge out of ink? Don't replace it. Refill it with the Universal Inkjet Refill System. It works with all inkjet printers or fax cartridges for only $5 per refill. Fill the injector with ink from the bottle and insert it into the cartridge. That's it. Place your cartridge back in your fax or printer. Universal works with any make, model, inkjet printer or fax.
I have a home business, and it used to be such a hassle for me to run out and get a replacement cartridge. Now I have the Universal Refill Kit. It's so easy and inexpensive, and it's there when I need it.
Order your refill kit for just $19.95 to refill your cartridge up to 4 times. Call in the next 10 minutes and you'll get 50% more ink free. Enough for 6 cartridges, a $180 value for $19.95 when you do it yourself with our refill system. And ask about our Color Inkjet Refill Kit.
To order the Universal Inkjet Refill System, call 1-800-472-3333 or send a check or money order to the address listed.
For everything she's been, everything she is, and everything you'll be together. The 3-stone anniversary ring. For your past, present, and future. A diamond is forever.
Some say fellow Southerner Joe Inman is the most energetic golfer on the Senior PGA Tour. That's why we like him. We're Southern Company, and we're all about generating energy, reliable energy, that powers millions of homes and businesses across the Southeast.
Come on.
Keeping up with Joe, however, takes a whole different kind of energy. Southern Company, official energy company of the Senior PGA Tour.
CNBC CNBC knows investing demands intelligence.
Stormy earnings outlook.
Insight.
This California energy crisis, it's hurting everybody.
Action.
Pretty good rally underway right now.
And it's just halftime.
1.2 billion shares, and it's only noon.
Insight with intelligence. CNBC Power Lunch with Bill Griffith. Weekdays noon Eastern on CNBC. Profit from it.
Many U.S. companies have announced company stock buybacks in the wake of Tuesday's attack. One of these is Fleet Boston Financial, which announced on yesterday that it would buy back up to $4 billion of its stock, about 10% of its outstanding shares. Joining us to talk about the importance of company buybacks is Eugene McQuaid, Chief Financial Officer at Fleet Boston Financial. Nice to see you, sir.
Nice to be here, Ted. Thank you.
Again, giving everybody an opportunity just to make some comments about the tragedy last week before we get down to talking about this buyback. Anything you want to say?
Well, Ted, I think if you saw what we saw this weekend in terms of what it took to reconnect the financial markets, it's only a little bit of the spirit that this country has and just how determined we are to overcome this tragedy.
Mr. McQuaid, tell us about the buyback that you announced yesterday.
Well, our board approved late last week our ability to buy back up to $4 billion of our common stock over the next 15 months.
What are your intentions insofar as buying all of that back?
Well, our intent is to buy it all back. We've bought back just under 1 million shares today, and our intent is to aggressively stay after it.
What, if I may ask, what goes into the decision-making process on any given day to go in and do the buyback on that particular day at that particular price?
Well, obviously today the thought is to be supportive of the financial markets, say something about the country and how confident we are that this economy will overcome this short-term strategy. Longer term, we look at things such as interest rates, price of the stock versus where we believe it should trade, and liquidity in the market.
How much, honestly, is a buyback a psychological palliative more than anything that really can legitimately bolster the stock price in and of itself?
Well, I think, one, psychologically, it's doing a great job today. I think corporate America has really stepped up and said we support this economy. We're believers in the economy. I think long-term, you do get a nice supportive effect from stock repurchase.
Let me ask you, if I can, a viewer wrote an email, and I think it's an interesting question, and that is, do you think these markets would have behaved the way they are now, if not in one day, but over the course of another couple of weeks, even if not for this attack last Tuesday? Were they poised to go lower, notwithstanding some critical action such as we saw?
Well, certainly the cyclical trend over the last year or so has been for markets to trade down. But certainly we wouldn't have felt the kinds of pressure we're feeling here, nor would we have had the response that the governments around the world have shown, the flooding of liquidity into the markets, the cuts in the interest rates. I think you've got a unique situation here in the last week.
You have shareholders, certainly. You also have customers. What are you telling them? What advice is going out to your customers?
Well, we're telling our customers now is a great time to lock in some of these interest rates. We think that they're certainly at all-time lows now, certainly lifetime lows. Now is a good time to protect yourself on the interest rate front. Opportunity to start think about capital spending again, to be able to fund those programs, and trying to position yourself for a rebound in the economy a little while out.
Mr. McQuaid, we thank you for joining us today.
Well, Ted, thanks for having us.
Eugene McQuaid, Chief Financial Officer at Fleet Boston Financial, joining us from Boston. Let's take a quick look. We've told you about the airline stocks getting hammered today. That's an understatement. The transport index, Dow Transport's down 401 points. And these are the airline stocks, UAL, AMR, each lower, as you can see, along with Continental. Over the weekend, in fact, Continental, one of the first airlines to come out and announce that it was going to lay off a number of employees. I guess it was 12,000 employees, and cut a bunch of routes. Delta Airlines then following up with similar news, 16 points lower for Delta. U.S. Airways is off 556. Some of the other airline stocks, Southwest is off 4. Northwest is down 720. Alaska Air off 880. Percentage terms, that's perhaps a big drop there, bigger drops likewise for Northwest. British Airways is off 975, and KLM Royal Dutch is off 306. Now, obviously, if fewer people are flying the airlines, there's a reason for that. In some cases, it'll be diminished business travel. In others, it will be diminished travel for pleasure. Let's go to Carl Quintanilla now, who joins us with a special guest from the floor of Bear Stearns.
Thanks a lot, Ted. You've pointed out that the sell-off on the sector has been pretty remarkable. We're here with Jason Ader, who's a multi-time Wall Street Journal all-star analyst. He covers gaming and leisure. And we were talking earlier, Jason, about the fact that these stocks actually have gone lower as much of the market has during the course of the day. What explains that?
Well, I mean, obviously, recent events have had a devastating effect on tourism and travel. It's likely to be that way for the next several months. The uncertainty is weighing very heavy on stock prices today.
But I guess, is this a matter of investors who were sitting on the sidelines in the morning, getting information during the day, and then making decisions this afternoon?
I think every investor came in today. Nobody really wanted to sell shares. They got on the phones with the companies. You talk to anybody in the business, clearly things are real bad, and it's just gotten worse throughout the day. Absolutely.
We were talking earlier about the fact that the airlines are a feeder to several other sectors, namely your sectors, leisure, gaming. Talk about just simply what Vegas, for instance, is going to go through this year.
Well, it looks to us like Las Vegas may lose, at least in the near term, 20% of its airline infrastructure. That's just an incredible loss to a city that needs air support to get customers there. So the earnings impact, over the next several months is just going to be quite severe.
A lot of investors may be looking at these prices and thinking, these are going back to some 10-year lows in some cases. Is it valuation that's so cheap I can't pass it up? Is it worth buying at this point?
Well, it looks like, we don't know what's going to happen if there's going to be, the retaliation that's prolonged. If there is, there's just, lingering uncertainty out there. Our view for investors is really in the travel and tourism space, there may be some real compelling values. Carnival Cruise Line, for example, is at an all-time valuation low. Sit on your hands, wait, let's see how things unfold here over the next several weeks. Clearly, this is a group that will come back. It's just going to take some time.
We've seen a bunch of headlines cross, today, Quintanilla just a few minutes ago, saying they're going to suspend service on some obviously expensive flights. Do you think the government's going to bail out the industry, and how tough of a road is it going to be after that if they do?
Well, I mean, for the airline industry, I can't imagine that there isn't going to be some sort of government bailout. Clearly for the hotel business, the cruise line business, the casino business, they need the airlines to thrive and prosper. So it's real important to watch from our perspective what's going on within the airline industry and the airline stocks.
Jason Ader, he's an analyst, covers gaming and leisure for Bear Stearns. We'll have a lot more later on in this afternoon's coverage of all the news, but right now let's toss it back over to Maria. Maria.
Thanks very much, Carl. And here at the New York Stock Exchange, the market continues under pressure. The Dow Jones Industrial Average near its lows of the afternoon with a decline of about 710 points. When we come right back on Street Signs after a quick break, we're going to take a look at the insurance companies and how they are getting impacted from this disaster. We'll also take a look at one company which is actually trading higher in pretty heavy volume. That's next. Stay with us.
He wants a remote photonic network with ultra-high bandwidth for the new plant, where I'll be relocated. The network? Great. We move there? No way.
You can accomplish anything, even optical networking. Fujitsu, the possibilities are infinite.
Right on target. Now, Grecian 5 hair color targets only your gray hair to leave subtle tones like your own natural color, all in 5 easy minutes. Grecian 5 targets only the gray.
Are you still playing cell phone roulette while you're driving? What you need is the Copilot Speaker Pro. It's a hands-free speaker phone system that plays through your car stereo.
Make sure Charlie Mitchell has a chance to review it.
The Copilot Speaker Pro installs in 3 seconds flat and fits any model cell phone. Just plug it into your cigarette lighter and set a car radio button to 96.1 FM. When you get a call, just press that button and you can talk and listen hands-free.
Go down to 1355 Riverside, okay?
Use 2 different cars? The Copilot Speaker Pro can transfer easily from one car to another, and it's only $29.95. Call now and get this special Samsonite key ring free. No more broken fingernails. Keys detach this easily, and there's even a built-in flashlight. So order yours now.
To order your Copilot Speaker Pro system, call toll-free 1-800-338-0200 or send check or money order for $29.95 plus shipping to the address on your screen. Call now, 1-800-338-0200.
The Senior PGA Tour on CNBC. The stakes are higher. The field is stronger. Some of golf's greatest names compete on some of the world's most prestigious courses. Next, the Charles Schwab Cup moves to North Carolina for the SAS Championship. Saturday and Sunday, 6 to 8 p.m. Eastern on CNBC.
welcome back. On Wall Street today, the market continues to suffer a very weak performance. The Dow Jones Industrial Average right now down about 710 points. That is very close to the day's lows, with just about an hour and 10 minutes to go in today's trading session. In this afternoon's midday call, we take a look at some of the stocks that are severely impacted by the disaster of the World Trade Center attack. Take a look at insurance companies, in particular American International Group. I've been speaking with Hank Greenberg, the CEO of AIG, recently on the heels of this attack. He estimated to me that the attack is going to cost the industry between $20 and $30 billion. Other executives within that industry tell me there are many companies that probably will not make it through. Certainly AIG has one of the best balance sheets in the industry, but there are smaller reinsurance companies that people are certainly worried about. AIG shares today under pressure, as you would expect, now sitting at a 52-week low on American International Group. I did want to bring up one winner in today's trading session, given the fact that there is so much weak performers this afternoon. Take a look at Nokia. The stock is higher in very heavy volume, and there is an expectation that there will be an increase in demand and business for the phone companies, in particular those companies that can handle data as well as voice transmission. Nokia is being looked at as one of those. Nokia has, of course, seen a very bad performance over the last year. It is sitting at a multi-year low, but today seeing very heavy volume and actually showing a gain of about 1.5. CSFB today in their midday call talks about communications companies being beneficiaries of this terrible disaster we've been speaking of. Let's go live now, bring Chris Matthews into the mix, find out what he's working on for tonight's program on Hardball. Chris, tonight
Maria,
at 8 p.m., what are you talking about?
Exactly. Well, here's what we're going to talk about tonight. Are these two front pages on the New York Tabs? I think they tell the whole story right there, which is Crusade in my right hand and the victims, the heroes, the fire department officials in the left hand. Clearly, that's the big story in America, how we're dealing with this tragedy, and also what we're going to do to deal with those people who caused it. And the big story, of course, tonight is going to be the economy and how the president's going to deal with this drop in the stock market. We have one tonight, you and Henry Kissinger in that order, Donald Trump and John Kerry, Senator John Kerry in that order, Ace Greenberg, head of Bear Stearns, and we're going to get into this question as to what we can do about this situation politically as well as economically now.
Sounds like a hot show, and of course there has been such a sense of patriotism and a real unified world, particularly unified leaders in America on the heels of this attack, basically pulling together and doing anything that they can to praise the heroes that you talk about.
Well, that's true. I think it's been red, white, and blue until the stock market opened today, and now it's been green. I'm not sure that the patriotic sentiment is driving the market today, but we'll have to see what the president does tomorrow if this market drops again in the next couple days.
Yeah, we're black and blue here on Wall Street, Chris.
That's right.
Thanks.
Better
We'll see
said.
you tonight,
Thank
8
you, Maria.
p.m. Eastern Time on Hardball with Chris Matthews on CNBC. The market continues down. The Dow Jones Industrial Average now down 718 points. I'm going to say goodbye for now for the first hour of Street Signs. Let's find out what's happening in the next hour. Back to Ted.
All right, Maria, thanks. We'll see you on Market Wrap a little bit later on. Coming up in the next hour here, of course, we'll count you down to the closing bell. We'll talk to Bruce Steinberg, chief economist at Merrill Lynch. Then we'll talk to Liz Ann Saunders, get her take. She is managing director at Campbell Copperthwaite. And Bob Hormats will be here. Always good to get his take on things. Vice chairman at Goldman Sachs International. Back in a moment. It's 3 o'clock.
Closed captioning is sponsored in part by Brokerage America.
Seize the power. Feel the speed. Introducing the most powerful trading system available, DTN IQ 2.0. The new DTN IQ explodes with the fastest streaming market data direct from the exchanges. And it's loaded with all the features that active traders need to capitalize on today's high-volume markets. There's even direct access trading right from your DTN IQ screens through our brokerage partners. Plus, DTN IQ 2.0 costs less than any comparable service. So call now or visit our website for a free trial, and we'll include DTN IQ's new custom scans that uses your trading strategies to analyze the market in real time, tick by tick. Experience the unmatched speed and power to trade the market like never before. DTN IQ 2.0, the fastest way to the action.
We're Pfizer. We're looking for a cure for your father's Alzheimer's, your sister's heart condition, your best friend's diabetes. We're spending nearly $5 billion on research this year and have 12,000 scientists and health experts looking for the cures of the future. Why do we work so hard? Because we have fathers, sisters, and best friends too. Pfizer. Life is our life's work.
Man literally wearing the flag on his back, just one of the many, many signs of patriotism around Wall Street and indeed around everywhere in this country and even in countries overseas. Good afternoon and welcome back to Street Signs on CNBC. I'm Ted David. It's 3:02 here in the East. Give me 30 seconds of your time just to say one thing. I felt it incumbent upon me yesterday to go down to this site, Ground Zero, as it were, to see what everyone's been talking about and not sit here in a sterile environment. Just a hats off and a God bless you to the New York City firemen who watch CNBC a lot, recognized me, took me into some places that the average person doesn't get to see. And these are the real men in America, they and the police and the military people, the New York City Fire Department, who are in the middle of that scene. And they took me as close into that as they could. They gave me a mask and a hard hat and took me in there. My dad died a number of years ago. We all like to look up to somebody and say, you know, that person's going to protect us. That person can make things all right. And yesterday, I suddenly redeveloped a need for a dad, and it was the New York City Fire Department that did that. Those guys are fantastic. God bless you all, and be careful. Let's run through the markets and take a look at where we stand here. We have less than an hour to go in the trading. We're off the lows, I believe. We're trying to trend sideways here, down on this intraday chart about 7 2/5%, 710 points. Let's run through the numbers, and we'll show you. The Dow is down 710 3/4 now at 88.94.75, down about as we see, 7 2/5% on volume of 1.9 million shares. Let's take a look at some of the down movers. United Technologies, which came out with a warning this morning, down 17 2/3, 48.55. GE, the parent of this network, down 4 1/4. There was word before the weekend that General Electric would take a 3-cent hit on earnings because of its insurance exposure. The stock at 35.08. GE also announcing the donation of $10 million to the relief effort. Walt Disney down 4 1/4, 19.34, on the thought that fewer people will travel, fewer people will go to large places such as Disney. Honeywell is off 6.65. And Boeing is down 6.79. Of course, Boeing could be a play either way, a defense play on the upside or a play on the concerns of fewer people using the airlines, fewer orders coming in for airlines. And at the moment, it is down 6 3/4 points. Let's take a look at some of the standouts today. And we find these. Continental Air down 19.49. We know why. 20.15 a share on that. The company announcing today, in fact, 10 routes which are being canceled. The layoff of thousands of workers. The Gap getting hit today, down $2.37 at 12.51. Apparently one of the retailers that some investors are not so confident about. Carnival Cruise Lines down 9.43. 1909. The expectation again that fewer people will be traveling if the economy retrenches and pulls back. L3 Communications, however, this is in the defense sector, and it's up $24 here at 87.05. And finally, a company that makes special security equipment, Envision Technologies, up $5.42 at 8.53 a share. All right, let's run through the other indices, and this one will be troubling. The transport index off the lows, but down about 400 points. 2276.84, about a 15% pullback for the transports. The utilities down 6, 329.42, 1 3/4% pullback there. Let's have a look at market internals, and this certainly will tell the story. Breath negative 26 to 6, 76 stocks are unchanged today. And the number of new highs 78, the number of new lows 523. The S&P 500 is off 53 at 10,039. The NASDAQ composite off 108 points. It had been down more than that, but 6.43% right now on 1.8 billion shares, taking it to 1586.35. The the Russell 2000 is off 20 1/3 at 420.34. Here's the broadest measure of them all, the Wilshire Total Market Index, and it is down about 5% at 504.65, and that's pretty much in line with the percentage losses that were expected. All right, let's take you to the floor of the New York Stock Exchange. Two faces that are no strangers here. Ron and Sana, joined by Art Cashin on the floor of the exchange. Ron?
Thank you very much, Ted. Art Cashin, this is not the scenario that everybody desired necessarily. Some were hoping that if the market sold off hard in the morning, it might come back in the afternoon. So far, it's shown no willingness to do that.
Oh, it's been very frustrating, Ron. I mean, it's been a dreadful day for many, many reasons, but this market action has not been very good. We're still got some time for a late cavalry charge, but the difficulty here is you made a low, you bounced off the low. The people who boycotted the opening, as it were, then came in looking to buy some bargains, and we got a little bit of a flurry. No one expected that to last. But the Dow then made a lower low, and at least NASDAQ has done nominally almost the same thing. Hasn't caused a hemorrhage. That gives us some mild hope anyway.
All right, tell me what you're hoping for here, Arthur. What would you like to see to the extent that you can see anything positive?
Well, okay, the idea is if you didn't do what you wanted to do, in other words, hold the old lows and begin to rally, the fact that you've broken one and maybe two of the lows in the indices and you don't bring in a hemorrhage, at some point if investors begin to sense, gee, maybe they're sold out, maybe most of the damage is done, we'll see. I mean, we've got a couple of things to worry about. We're starting the Jewish holiday season tomorrow. Hopefully it doesn't impact liquidity. So it's going to be tough, but there's still a shot if they can hold here to bring them on a little bit.
A lot of things happened before the opening bell. The Fed and other central banks cutting interest rates. The Fed still pumping liquidity into the economy. Corporations now allowed in ways that we don't fully understand to buy their own stock back at any time of day. Have you seen evidence that any of that is helping or supporting the market, or no?
Well, no. I mean, if the Fed has got to run the Fed, but if I had been doing it as a trader, I might have held off until 11 or 11:30 in the rate cut just to let the selling get out of the way. This way you cut rates and you knew they were going to sell off in the morning, so it almost looked like the rate cut had no effect, and I don't think that's true in the long run. Let's go through a couple of visibility things. Don't hold us on this. It didn't look like there was a lot of short selling. Naturally, I think that's because they opened in a hole and you wouldn't want to short sell them in a hole. The selling didn't appear to have a single unified base. People think it might be some redemption selling from funds, and it might be some insurance companies maybe cutting back.
All right, Arthur, we're going to see you again in 30 minutes. Thanks very much. Art Cashin of UBS Payne Weber down here on the floor. Ted, back to you.
All right, Ron, thanks very much. Back again, as Ron said, in about a half hour. All right, Bonnie Barron joins us now with a CNBC News update, the very latest on what's going on. Bonnie.
Good afternoon, Ted and everyone. President Bush today leading his administration on a hunt for terrorists in last week's attacks. Mr. Bush got tough today, taking a line from America's historic search for outlaws in the Wild West.
I remember that they used to put out there in the Old West a wanted poster. It said, wanted, dead or alive. All I want, and America wants him brought to justice.
And Secretary of State Colin Powell says in that hunt, all roads lead to Osama bin Laden, saying Afghanistan continues to say that bin Laden is a guest in that country. Powell adding, it's time for that guest to leave. Attorney General John Ashcroft wants to beef up and lengthen the arm of the anti-terrorist laws by the end of the week, expanding wiretap authority, extending the statute of limitations, and wants to attack the financial infrastructure of terrorist cells. He also said federal air marshals will be added to U.S. commercial flights. A delegation of Pakistani officials went to Afghanistan with a sharp ultimatum today: hand over bin Laden to the U.S. or expect to be attacked. Pakistan virtually shut down its 1,500-mile border with Afghanistan today, ordering a halt to traffic and trade. But Afghanistan's Taliban leader is saying a council of Islamic clerics will decide whether to hand over bin Laden. Afghanistan airspace now closed, and leaders say they're strengthening defenses, presumably in preparation for a U.S. military strike. Muslim Americans say they've been the target of hundreds of attacks in the past week. And the television networks in the U.S. are considering a telethon this Friday night to raise money for relief and recovery. It would be carried on as many broadcast and cable networks as possible. And Michael Jackson has written, "What more can I give for the attack victims?" and hopes to get an all-star cast to record it. He says his goal is to raise $50 million for relief efforts. That's a look at the news headlines. Ted, back to you.
All right, Bonnie, thank you very much. All right, we had a Fed ease today. The ECB eased also. Let's talk to David Wessel of the Wall Street Journal in Washington and get a little more on that. David, there was talk about the Fed possibly easing before the October 2nd FOMC meeting before this tragedy. What's your take on this 50 basis point move, and Obviously, the market's down 670 points. Might it have been worse if the Fed hadn't moved?
Well, we'll never know that. I think that what happened, I think today at the Fed and the European Central Bank and the other central banks that acted was sort of the end of one chapter. For the last week, they've been trying to make sure that the financial system functioned, and it all culminated with the opening of the market today. They've been doing a lot of work behind the scenes, keeping the payment systems moving, make sure there aren't any bank failures and so forth. I think the Fed clearly hoped that a show of resolve before the market opened would bolster confidence. Who knows where the market would be if they hadn't acted. I'm sure they're not thrilled with where the market has gone. It was encouraging, I think, that they got the European Central Bank to join them. The European Central Bank is much slower to react to events than the Fed and has been reluctant in the past to follow the Fed's lead. Yet today they said explicitly they were doing this in concert with the Fed.
Fed has 300 more basis points of ammunition, doesn't it?
Yeah, but I think they actually have more ammunition than that. I mean, the Fed has pumped in tens of billions of dollars into the markets in the last several days. At a time like this, the target for the federal funds rate may not be quite as important as just their willingness to keep putting money into the system and to keep the economy afloat, and that's what they're doing.
Do you expect that they will, your present point just taken, do you expect that they might ease again even before the next FOMC meeting?
I think it's very hard to say without sort of knowing what the feel of the markets and the economy is over the next couple of weeks. You can bet they're sitting there on the edge of their chairs. I noticed that most of the Fed watchers expect another move by October 2nd, if not before. They certainly are signaling that they will do whatever it takes. They're like firemen. The house is burning, and they're not looking at the water meter. They're just pumping water out there.
Economic data pretty much worthless at this point?
Yes. We know that the economy had slowed to a standstill before this, and the question is how bad of shock to confidence and spending and investment will this be? I think a lot of the focus in Washington now is turning away from the immediate financial crisis, getting the markets open, to Chapter 2, which is why the president will be meeting with his economic advisors today. The fiscal authorities, the federal government, the Congress, is going to pump a lot of money in too, and it's important to see how they do it. Will they bail out the airlines? Will they bail out the insurance companies? How will they have special aid to workers? Because that will affect not only the well-being of those particular industries and their employees, but the general health of the economy.
Take us behind the scenes if you can. If you know, does Greenspan get on the phone with Duesenberg? Do they talk to each other? Is there some conference call that goes on among central bank leaders?
There is a lot of calling going on. I don't know whether there was a conference call among them. The Japanese finance minister last night said he'd been in touch with the U.S., and it's obvious that the other central banks had some communication with the Fed today. We do know that Federal Reserve Chairman Alan Greenspan convened the Fed Open Market Committee at 7:30 this morning. The 5 governors back in Washington, finally. Mr. Greenspan and 3 of them had been out of town at the day the attack hit. The Federal Reserve Bank president's participating on the phone. We know they began with a moment of silence, and it took them only 20 minutes to ratify what Mr. Greenspan wanted to do. Mr. Duesenberg, the president of the European Central Bank, was in the awkward position of having to face reporters in Helsinki this morning after the Fed moved, and he sort of said stuff that didn't quite signal what they were going to do, but they also had a conference call. And so usually at times like this, they communicate, but it's difficult for them to get all on the phone at once. It just doesn't work that way.
David, thanks for being with us this afternoon. David Wessel, the Wall Street Journal, from their Washington bureau today. Intraday, here's where the Dow stands off the lows here by about 30 points or so. But as you will see from this intraday chart, close enough. Down 669.5 points here. The percentage loss there about 7%, 89.35.99. Let's check in with David Faber, see what he's got cooking. David?
Ted, it is certainly a unique day, not a particularly good one for the markets, but also not one that may be a precursor or may at least give us a sense as to what we can expect in the future. I'll have that story after this.
Don't you have some sort of reverse directory? You talk.
There's a different way to look at your money.
What's it say?
ING. It's not an ending. It's a beginning.
Right now, when you buy any 4 Michelin tires, get a pair of Motorola Talkabout two-way radios free during Michelin's Make Contact event. They're great for road trips, on the slopes, or for keeping track of the kids. So make contact now at your participating Michelin dealer.
All vacations canceled? What's it this time? 10 platforms in 20 countries? Bring it on, because I'll get it done. And that guy on the beach, that man's going to be me.
You can accomplish anything, even seamless integration. Fujitsu, the possibilities are infinite.
Coming up, the Fave Report in just a few short moments. Then we'll take an economic look at the world with Bruce Steinberg. The Market Outlook with Liz Ann Saunders and our Roundtable at 56 Penn.
Wall Street today. Outlook for tomorrow. CEOs from Oracle and Goldman Sachs join leading economists and analysts tonight on CNBC Business Center at 6 p.m. Eastern. CNBC congratulates National Geographic Explorer, winner of 5 Emmy Awards. Explore, Fridays, Saturdays, and Sundays on CNBC.
Hi. There's a place you can find most anything. Come see what's in store. The Hudson Mall, one-stop shopping. You'll find everything you're looking for. Everything you need, Hudson Mall. All in one place, Hudson Mall. Convenience, location, we've got it all. Everything you need in one place, Hudson Mall.
McMulkin Chevrolet, one of the Thompson family of dealerships, has given you the power of choice when it comes to your automotive needs for over 42 years. At McMulkin Chevrolet, you'll always be able to choose from hundreds of new and used vehicles. And our low overhead always means low prices. That's just a fact. 2002 Trailblazers are in stock. Come in today and test drive the power of the new Vortec 4200 engine, a power to be reckoned with. McMulkin Chevrolet, just off Route 3 in the New England Automotive Village in Nashua.
Change down, the Dow is about 670 points. Again, I want to emphasize that while this might be the biggest point loss of all time as far as the Dow is concerned, don't let that confuse you with percentage losses. Back in 1987, when the Dow was off 508 points, that was, in percentage terms, 22%. Today, 5 or 6%. I'm not trying to say that that isn't going to take a hunk of change out of some folks' portfolios, but do put the point loss into percentage perspective. Less than an hour to go for market close. What can we learn from today's performance? David Faber has some answers. David?
Thanks, Ted. It is without a doubt a day unlike any other in the long and storied history of our U.S. capital markets. But because of that fact, money managers tell me there is little to be learned about the future from what has occurred in the market today. Days in which the Fed and the ECB cut rates by 50 basis points, where corporations are at least talking, if not actually buying back their shares. And days when trading has not occurred for the previous 6 days, well, you don't get many of those days, do you? In fact, we've never really had a day like this. And that is one reason why money managers tell me they're uncertain if much can be gleaned from the market's performance today. That being said, it is also a very difficult task to try and understand the challenges that lie ahead for the economy and the markets, not to mention our political institutions as they wage a war on terrorism. Questions about things such as consumer confidence continue to circulate. The latest numbers released last week and tabulated prior to the attack were weak. But what Christmas sales will look like? Well, right now people would certainly venture guesses, but that's all they can do. How well the nation's lenders stand up to potential losses on loans to industries that have been severely impacted by the crisis, that too needs to be assessed. Now, the banking industry is well capitalized at present, but bankers tell me they expect credit quality will continue to deteriorate on a corporate level. While early signs from the mutual fund industry show few redemptions, it is likewise too early, say many fund managers, to gauge the full impact of the crisis. Certainly, we will see many companies issue profit warnings about future quarters if their business is connected to things such as airlines and travel, to wit the performance of United Technologies today on a warning about its future. Treasury Secretary Paul O'Neill sounded an optimistic note in an interview earlier on CNBC.
I think we're off to a good start with the special $40 billion supplemental that's been voted by the Congress to help with the immediate crisis here in New York to begin rebuilding and bring back the tip of Manhattan to what we all want it to be. That's a good beginning. We're looking at sector by sector at special cases. Many people have mentioned the huge impact of airlines being out of business for so many days. We need to look at that.
As for looking at today, well, traders tell me they are encouraged by how well the markets are operating, given the damage done by Tuesday's attack. There are the usual complaints about liquidity that arise on days when sell orders far outweigh those on the buy side. But those complaints are not related to breakdowns in trading as much as to the normal difficulty of receiving the quoted bid-ask spread when buyers are scarce. Ted, back to you.
Thanks very much, David Faber and the Faber Report. All right, let's take you now to Bruce Steinberg. He is chief economist at Merrill Lynch. He joined us now for his take on the activities of today and thereafter. Bruce, nice to see you.
Good to be here.
Any comments you want to make about this whole activity and action of a non-economic nature before we move on? I'm kind of letting everybody catharsis if they want to.
Well, having been an eyewitness to the events, it was certainly extremely difficult to, see it and walk away from it as the towers were burning, but I feel certain that things will improve in the future.
Let's talk about the Fed action. Was it enough? Was it just right? Is there more to come? What do you think?
There's certainly more to come. I think the action today was all they could do today. They have to wait and see what the impact of that move is on the markets, how the markets perform in the next few days. And they also have to start getting some actual economic data post the attack to see what's going on. There's certainly more coming, but this was sort of the first installment.
Where was the economy, in your view, before this happened? Was it on the road to recovery?
Well, it was hard to say it was recovering yet, but through the first 2 months of the third quarter, growth was actually okay and it wasn't very strong. But GDP, from my point of view, was probably growing around 2%. Consumer spending was okay. Retail sales for August were okay. That all is different now, even though there was only 20 days left to the third quarter when the attack took place. I'm assuming that certainly this quarter is going to be very weak, possibly even negative. But the economy wasn't as bad as people seem to think it was prior to September 11th.
How much of a role does the consumer play here, either in bailing out the economy? For a long time we were saying the consumer was keeping the economy afloat. At this point, how critical is the consumer? I mean, we're seeing stocks like the Gap off. I understand, Disney because of the travel implications, but why retailers?
Well, obviously in the last week, it's likely that most people were glued to their TV sets and not doing a lot of shopping and feeling pretty guilty if they did go out shopping. And in the very short term, it's clear that the retail sales have taken a very big hit. We'll start to get some clues on this tomorrow when you begin to get chain store results for the week that ended Saturday, and we'll see over the next few weeks what's going on. But probably there was a very sharp fall off in retail activity over the last week. And it's really a question of how long that persists. If we get to Christmas and things are still very depressed, then not only will the third quarter be weak, but the fourth quarter could also be extremely weak. But we don't know yet. We really have to see how people react in coming weeks.
You concerned about oil prices, and do you think there will be a major impact if OPEC, as we asked them to do, rescinds that a million barrel a day cutback that they had announced at the beginning of September?
I think that OPEC, or at least Saudi Arabia, will be as accommodative to the needs of the U.S. and other countries as they can be right now. I do think that oil production is going to be stepped up. While this level of uncertainty as to what our response to these events is going to be is there, it's going to tend to keep oil prices somewhat elevated. But I think that there's probably going to be a lot of oil in the pipeline and that prices are probably headed lower.
Let's talk negative wealth effect here and its effect on the economy as we see a stock market in trouble.
Well, it depends on how long the stock market stays in trouble. I think right now it's not a negative wealth effect, which is depressing consumer spending. It's that people are still in shock from the events they just saw. And if we can get past that, and if we can get some slight restoration of confidence, we may find that consumer confidence itself, after falling for a few months, may start to come back even by Christmas time, possibly. The stock market, obviously no one can know where it's going to go right now, but I do think we're seeing sort of the kind of response one expected today, and I don't think that the market is going to remain that low for that long.
Bruce, good to have you. Thank you.
Good to be here.
Bruce Steinberg, chief economist at Merrill Lynch. Let's take a quick look here at the Dow intraday, and we will look at it down now at 672 points, 673 points or so. As soon as the chart builds, and here we go. We're off the lows, but still down there, 89.31.91. Ahead on Street Signs, we'll check in at the NASDAQ market site. Quick look at the most active issues at the NASDAQ, which is down 108 points right now. And here we go with these stocks, counting them down from 1 through 10, all red arrows as you might expect. Cisco, Intel, Sun, Microsoft, and Oracle. Rounding out the top 10, Dell, WorldCom, Veritas, JDSU, and Applied Materials. Back in a moment.
Wall Street today. Outlook for tomorrow. CEOs from Oracle and Goldman Sachs join leading economists and analysts tonight on CNBC Business Center at 6 p.m. Eastern. Wall Street gets back to business. CEO of UBS Kane Weber and Professors Jeremy Siegel and Robert Schiller talk about what investors should do now. Today on CNBC Market Wrap.
Ladies and gentlemen, Vita Nelson is our guest. She's the editor and publisher of the Money Paper. We're talking about dividend reinvestment plans. Vita, how does one actually get started?
All you need is one share of stock. You can send from as little as $10 or even $10,000 without paying any commissions to a broker. These are the solid companies. These are the companies that have paid dividends for many, many years. And the reason no one knows about these plans is because no one has any vested interest in promoting them. If you pick from among the 873 different companies in our guide to dividend reinvestment plans, you are doing yourself the biggest favor in the world.
And you might even have fun doing it.
Where can I get some information on the Money Paper?
Call now. You'll get the guide to dividend reinvestment plans at a special promotional price. It has every company that accepts direct investments. Plus, you get a free copy of the Money Paper. You'll see how easy it is to invest without a broker.
Get the guide for $9 plus shipping. Call 1-800-281-4422.
John Mapes is 33, mortgage, married, 2 great kids. He wants to protect his family with a $500,000 term life insurance policy. What do you think it'll cost him? $100 a month? 60? 40? Actually, none of the above. John can get a $500,000 policy from a highly rated insurer for right around $17 a month. His secret? SelectQuote. SelectQuote is impartial. They'll search the pick of insurers like these to give you a choice of your best prices. SelectQuote has great savings on term life for women, too. John's wife, Carrie, can get a $400,000 policy for under $13 a month. SelectQuote has helped make term life insurance affordable for hundreds of thousands of people since 1985. How about you? Just call this number or visit selectquote.com.
All right, let's take a look intraday at the chart for the NASDAQ. In point terms, down 110 points, and we're just off the lows again here at 1585.10. I actually can't find anything in the data that I have here, Tom Costello, that would indicate any point gains larger than this one. But again, in percentage terms, we're at about 5 or 6%, right? Tom, you there at the NASDAQ market site?
I am here. Can you hear me?
Yes, sir.
Okay. Let me check on that to find out in terms of point drops what would be the biggest drop. I haven't looked yet today, but I'll get back to you on that. Some concern out there that we haven't seen this market, and for that matter, the Dow, stage a more impressive rally. I've been hearing that concern by traders out there who said, listen, a lot of folks held off on buying on the open, really believing that there might be a buying opportunity later in the day, and thus far that has not presented itself. Let me show you the volatility index as it pertains to the NASDAQ volatility index. VIX, VXN is what we use here. Apparently it's not working, but let me tell you that we had a peak today. It was a dramatic peak. In fact, it went up dramatically and then came back down. As you know, we've been watching this before the incident at the World Trade Center. We've been watching this as an indicator of volatility and options activity and whether it might indicate an oversold condition on the NASDAQ. It went all the way up to 99 today, came back down to 75. Jim Stanton at lowriskstrategy.com telling me that normally at these levels that would indicate a short-term bounce. We got it intraday, but it hasn't held. He says, however, we're dealing with a completely different situation right now because of the new environment we're in. Let me show you some interesting plays that are getting some attention based on the activity that we're seeing now in the security arena, beginning with video conferencing plays with the absence of travel expected in the coming months. These stocks getting a bit of attention. In fact, we have, as you can see there, Polycom. That's a 30% move there. PictureTel is up 13%. We've got Wire One up about 23%. And finally, on the bottom there, Gentner is up about 18% on the session. And security stocks are having a great day here. Let me show you what's happening. We've got INVN, that of course being Envision, is up 174%. They make bomb detection devices. We've got Magel Software up 68%. They make intruder detection devices. You've got Visage there up 130%. They make digital ID systems. The next one there making identification systems, and the last making X-ray inspection and metal detection systems. That's up 63%. Big caps on the NASDAQ, they look like this. We do have some red arrows, as you know, with the NASDAQ 100 right now, showing 28% of the NASDAQ 100 trading at a fresh 52-week low, 28%. And there are some of the big caps. We're now sitting at lows we haven't seen, Ted, since October 15th or so, 1998. As you know, there was a lot of talk last week about whether we might break that April 4th low. It's happened, of course, now, but as one trader said to me, listen, all bets are off. If you're trying to get any type of visibility, that's going to be a very difficult proposition based on what's changed in America in the last week. Back to you.
All right, Tom, thanks very much. Okay. Talk to you later. Tom Costello at the NASDAQ MarketSite. We'll take a short break, and then we'll check in with Liz Ann Saunders, Managing Director at Campbell Copperthwaite U.S. Trust, and get her take on this market. What should you do with your money now, and where next the market's? Back in a moment.
Investing is very much like diagnosis. One will take all of the pieces and put it together to get a full picture about what's happening.
Call now for your free 2-week trial of Investor's Business Daily.
The Investor's Business Daily is very focused. It is very objective. I find that what I learn in the Investor's Business Daily is something that I can't get anywhere else.
You'll also get exclusive access to powerful tools on investors.com.
It's a filter that gives you exactly what you need.
Call 1-800-453-2824 for your free 2-week trial of IBD.
Refinancing your mortgage may be easier than you think. Just log on to ditech.com or call 1-800-71-FIX. Today's low fixed rate with 0 points is only 6.750%. With interest rates lower, now may be a great time to get cash or use the equity in your home to consolidate bills. It's smart money from ditech.com. Apply online or call us at 1-800-71-FIX.
It's a new day for markets and investors. Watch CNBC all day as Wall Street goes back to work and America gets back to business.
It's your life, it's a commercial. I don't get it. You know, childhood sofas, it's very simple, it's memories. Yeah.
See live thoroughbred racing every Friday, Saturday, Sunday, Monday, and Wednesday.
Welcome back to Street Signs, everybody. I'm Ted David. It is 3:25 in the East. Dow off 676, NASDAQ off 111. About 25 minutes to go in the trading day. Back to the floor of the New York Stock Exchange once again, where Ron Insana is once again joined by Art Cashin. Folks?
All right, Ted. We got a lot of information late in the day with the Dow down about 674 points. Art, getting reports about the short sellers coming out now and hitting the market late in the day. Are you hearing the same thing on the floor?
Yeah, I'm hearing something similar, and I would like to believe that it was somebody hedging an alternate position, but I'm not sure that I can make that case at this point.
So to the notion that there was some sort of gentleman's agreement not to short, that doesn't seem too likely this afternoon.
Yeah, I was always suspicious of that gentleman's agreement to begin with. And while nobody was shorting heavily, as we discussed earlier, because they opened deep in the hole, and at the risk they would have a reversal, the shorts would have been suicidal. It is now late in the day, and they might be selling, as I say, to protect some other position that they can't sell, but logic tells me there's enough of it around it almost looks opportunistic.
All right, now the reports I've gotten so far with respect to corporations buying back their stock, scattered buyers. For instance, there were reports that GE purchased 1 million shares today of its own stock, but everything else, people are saying I got a handful of buyers from the corporate sector, not a lot.
Yeah, I think this is traditionally so, though, Ron. You get announcements of buybacks, and people don't necessarily stand there. Some actually may have had some committees to review, even though the SEC relaxed everything. But you're right. It wasn't an across the board, we've got a basket, we're standing here. And that will be even more critically important tomorrow, I think.
Let me get you to explain for viewers who are maybe new to CNBC, given the enormity of today's open and trading session, what short selling is. Why are people concerned about this?
Okay, short selling is someone who assumes that the value of a stock will go down. And therefore, he sells that stock without owning it. He borrows it from someone else to deliver. And if he is right and it goes down later, he then buys it back and returns it to the person he borrowed it from. That's a successful short sale. If instead the stock went up, he would have to pay a much higher price to return the borrowed stock.
All right, let's look ahead to tomorrow. Turnaround Tuesday is the thought that comes to mind given the type of action we have. And to put today in perspective, we should also point out that this is in line with historical developments. That 7% sell-off when John F. Kennedy was assassinated, when Pearl Harbor was bombed. This still is far less than the crash of '87.
Oh, but by leaps and bounds. It is probably within the top 20. But as you and I have discussed off camera from time to time, these things tend to have, for some reason, kind of a 3-day life and then a kind of 3-week life, and then we get back to real life, as it were. So the next 2 days will be kind of critical.
What to watch for tomorrow, very quickly?
Well, I think how they come out of the box. The biggest hope now for the bulls is that they look like they're oversold. Maybe you get a little bit more selling, but no hemorrhage, and people say that's about it. If you did produce a new wave of selling or a rally failed and you had bad selling a la the 20th and 87, it'd be a problem.
Arthur, is there any reason why regulators would not step in under these circumstances and prevent short selling outright if it were in fact to become an issue?
Well, I mean, it's always a consideration, but I think what you then get into, if you want, meritorious short selling versus opportunistic short selling. And there might be some reasons, everything from arbitrage on through, or to hedge another position. You don't want them selling something else and destabilizing that if he can find something that he can get a short.
The market has to be the market. Right. All right, thank you, Arthur. We'll see you again. Art Cashin of UBS Payne Weber here on the New York Stock Exchange floor. Ted, back to you.
All right, Ron, see you later on Business Center at 6 p.m. Eastern Time. Let's get some thoughts now on today's market activity and a longer-term outlook. We're joined by Liz Ann Saunders, Managing Director at Campbell Copperthwaite U.S. Trust in New York City. Liz, good to see you.
Hi, Ted.
What had you expected from the market, and what's your reaction to what it did?
Well, before I get into that, and this does relate to the markets and today's action to some degree, I do want to say, kudos to you in the media, as well as to the leaders of this city, as well as the financial markets, for dealing with incredible grace the activities of today and at the attempt at getting back to normal, because this business is so much more about the people than it is the money. And I think that there's been a tremendous amount of respect shown for the personal grieving that people are going through. And I think it's manifesting itself in how companies are acting too, which you are starting to see in the market a little bit, be it stock buybacks. Our parent company, U.S. Trust and Schwab, made a large donation. My husband's firm, Witt Soundview, is donating all of their trading profits on Thursday. And I think you're going to start to see some of this patriotism carry over into the markets. Combine that with the massive amounts of liquidity that not only our central bank is providing into the system, but European central banks. I think what we're dealing with today is the very natural emotional selling that I don't think is going to be long-lived. And I think we will, I don't know exactly when that rebound is going to come, but I think it will come, and it's sooner probably than most people expect.
Can I ask you a question? I'm relaying a question that a viewer asked, and it may be a silly question, maybe not. Up until this heinous attack, they kept telling us to look for capitulation. Big sell-off on heavy volume. We have it.
We sure do. I think you're absolutely right. You know, there had been some argument that some of the capitulation had occurred over an extended period of time. Certainly a lot of the individual investors that were day trading had really been wiped out of the market. Many more hedge funds active in the market, so you don't really get a sense of that capitulation. But today, you know, our Cashin was just talking about the short sellers coming in. You know, all the discussions that I had today with people I know in the business, and particularly on the trading side, suggested that most of the selling today was actually what they call natural selling and not short selling. It's only in the end of the day that the short sellers came in, which may mean that it might be mutual funds reacting to either the fear of redemptions or maybe actual redemptions, and that is certainly individuals who are bailing now. And you could be absolutely right that this might mark, given the magnitude of the declines, that capitulation that many felt you needed to see before you could reach a floor for the market.
What are you telling clients to do here?
Oh, hang in there. I think that we have always, you know, at Campbell been proponents of a long time horizon, and I don't think now is the time to throw away that long time horizon. Now is the time to have conviction in that long time horizon.
Where do you see the biggest risks still and the biggest opportunities?
It's hard really to pinpoint now. I think a lot of the sort of obvious trades are being made today, buying gold and buying the defense companies and selling the airlines. Those sort of obvious moves don't always tend to be the most profitable over the long term. I think it's still all about strong management teams, strong companies. We're large cap managers. We believe that now more than ever you're going to see the strength of large companies, well capitalized companies relative to smaller companies. I think you know, companies that are still going to be in industries that are growing industries, and I would try to avoid making very, very near-term assumptions about what appear to be the obvious beneficiaries or industries that are hurt through this.
Lizanne, good to see you. Thank you.
Thanks, Ted.
Today's a special day for you?
Yes, it is. Thank you.
Happy birthday.
Thank you very
life
much.
does go on. Happy
Yes,
birthday
thank
to you.
you very much.
Lizanne Saunders, Managing Director at Campbell Copperthwaite. All right, let's check back in with our stocks editor, Joe Kernen, for a look at some stocks to watch today. Joe?
Ted, listening to Lizanne, there are knee-jerk reactions to some of these stories. Nowhere is it better seen than in travel-related stocks, airline-related stocks today. I guess the best example is you look at how well the defense stocks are doing, but knowing that UTX, United Technologies, is involved in aircraft engines, that's calling the shots today. Anyway, let's look at the Dow Jones Transport's intraday chart. It's gotten a little bit worse. We know that the airlines reside there along with FedEx and truckers and rails, but the airlines calling the shots. Here's what I'm talking about. Boeing, one of the weakest Dow components today. One of the reasons the Dow is having trouble making some headway or bouncing at all. Boeing, and I mentioned this is a defense contractor too. What's calling the shots though? Airlines. Also UTX. Down 17 points. That's really sticking out like a sore thumb to a lot of people today, that UTX, with all of its varied operations, Sikorsky helicopter, they've got irons in a lot of different fires, and in this case, the exposure to travel-related or to the airline or building jetliners, that's what's really causing that sell-off. Same with Precision Castparts. The company, it makes a lot of different products, including things that go into to jet engines. That stock down $9. We're going to continue in this theme with travel related. It's not just airlines. We've mentioned Princess, which has not improved at all. It's now down 39%. And Carnival, down $9 now at 19. And if we go on, remember Galileo, the travel services company that is being acquired by Cendant, finally opened after a halt this morning. It was $33 a share in stock that Cendant was going to exchange for Galileo. You can see how far that stock is now from 33. We can take a look at Cendant. This is still under review by the European Union, this Cendant Galileo deal. So if you ask these companies, is everything on track? They'll come. I think they came out and said, yeah, everything's on track, but we're still waiting for the EU. But some, I guess, arbitrageurs at this point, with what's happening to Galileo today, are the spread is at least widening to some extent based on whether they believe this will eventually go through. So there's Cendant, which, you know, I looked at what analysts were saying prior to today, and they said that the company's exposure to travel would be short-term and not that great, but the stock is getting hit pretty hard today. If you look at Galileo, normally you'd want to take a quick look at Sabre Group. That's the only reason I decided to look at TSG, to let you know that that is down 16 points now in the travel-related area. And remember the other acquisition that that Ascendant was making? I decided just to show you that the cheap tickets is down $3.94. That is where the Ascendant announcement was. But today, trading off Ascendant down $4. Ted, back to you.
Joe, thanks very much. Transport's down to 408 points, which would set that up for being the biggest point loss ever and the second biggest percentage loss for that group. All right, what are the immediate and long-term repercussions of Tuesday's attack on the economy? Robert Hormats is vice chairman of Goldman Sachs International. He joins us from his firm's trading floor. Bob, good to see you.
Good to be with you.
Anything you want to say? We've been letting everybody kind of catharsis and say something if they want to in advance of the business comments. Anything you want to say?
Well, I think that when you look at what's happened, there is this, in a way, an emotional selling that's taken place. But I think after a period of time, and I don't know how long that period will be, people will start focusing on the underlying strengths of the American economy. The American economy still has a lot of resiliency, and at some point the decline in the market is going to open up very good buying opportunities, and I think people will take advantage of those. There is a confidence problem now. There's concern about whether there'll be more terrorism. There are concerns about the nature of the war against the terrorists. There are a whole range of unresolved issues in people's minds. But if you look at the economics of this country, the institutions of the economy, the resiliency of the economy itself, we've gone through very tough periods and we've come out stronger than we went in, and I think that's going to happen here. It may take some time, but I think it will happen.
And you raise an interesting point, Tom, and I do want to talk economics and world economics, but I have viewers sending me emails saying, you know what, my retirement account just got wiped out, or it was on its way to being wiped out, and I may have to go back to work, or I may have to delay my retirement. To what extent is this negative wealth effect going to be have a serious impact on the economy as a result of the impact it's having on personal economies?
Well, it probably will, because it makes people more cautious about spending. When they thought they had, say, $500,000 or $400,000 in their retirement accounts, and they find that they only have half that or a quarter of that, they become a lot more cautious about spending. And that's one of the factors that even prior to this terrible crisis was tending to weigh on some consumers, and that is going to be a factor that is likely to continue. It's certainly a negative for consumers, and it's a shock to consumers when they see these 401ks decline so dramatically. It's certainly weighing on the economy, no question about it, in the near term.
We learned all too well that you have to watch what happens with the U.S. equities markets, and then you watch that night to see what happens in the Pacific Rim, and then in Europe, and then back here. From an economic standpoint, here we were being told that Europe was lagging us in terms of its weakness, that the ECB had to do something, and now we're apparently perhaps back in trouble again. How has this reset the whole clock in terms of economic recovery around the world?
Well, certainly economic recovery around the world to a very large degree has depended on the recovery of the United States. One of the problems is that the Europeans and many of the Asians were predicating their recoveries on strengthening growth here so they could sell more into our markets. Now, if our economy continues to weaken, at least for a period of time, it sets back the recovery strategies of other countries, which means they've got to do more to create more domestic demand in their economies to offset a weakening growth of exports to the United States, and many of them have moved relatively slowly to do that. The European Central Bank seems to be reluctant to lower interest rates aggressively, which many people believe it should do. The Japanese are undertaking a restructuring of their economy, but that may lead to actually slower growth while that restructuring occurs. It's somewhat deflationary as they go about doing it. So growth abroad is going to remain relatively weak, and if our economy weakens further, growth abroad will. But I think the other point I'd like to make is the U.S. is taking very aggressive action to deal with this weakness. The Federal Reserve has lowered rates aggressively. Fiscal policy is going to be very stimulative because this lockbox that we were talking about a couple of weeks ago is now open. We're going to probably spend a lot more money on reconstruction. military and intelligence, a whole range of other things might be candidates for additional government spending and maybe even a tax cut of some sort. So fiscal policy here is going to be very positive, and interest rates, lower interest rates coupled with that could help to pull our economy out.
How do you rate the president and all the president's men in this? There are those who are saying this has been the first defining moment for George Bush's presidency. As sad as it may be, however, it has put him on the map as the president.
Yes, that's right. And I think Americans have rallied around him, and they've rallied around his team. He's got a very experienced team. The president has Dick Cheney, an excellent, very experienced guy as vice president, Condi Rice, Colin Powell, Rumsfeld. These are all people who've been through tough times before. And I think they'll be an important source of strength for us and confidence builders down the road. But we're in for a tough time. There's going to be actions taken against the terrorists. And how long that will last, how expensive it will be, how complicated it will be to root these people out. I've been to Afghanistan. It's a very tough terrain. This is going to be, we're in this for the long haul here, and I think that Americans are going to have to dig deep into their sense of optimism and confidence and resiliency to get through this period. But I think we can, and I think we'll come through stronger, and I think the American economy is strong and is going to remain that. And I think foreign investors see that too, will see that too.
The American economy, now I was just going to go to the next step, which is where are the weak links around the world economically where our teetering could cause someone else's falling?
Well, Japan was weakening anyway. People have commented on the fact the Japanese market has done poorly in this environment. It's really been doing poorly for some time. And that's clearly a weak link in the economy well before this crisis. I think the Europeans are in a more difficult position than they were a few weeks ago, but they have the capability with the central bank. If the European Central Bank were to lower rates, that could help. And they do have some room for additional fiscal stimulus, so I think they can come out of this reasonably well over time.
Bob, good to see you under trying circumstances. Thank you.
Good to be with you.
Robert Hormats is Vice Chairman of Goldman Sachs International, joining us from his firm's offices in New York City. Preview what's coming up tonight on Business Center. Full coverage of today's trading. It started with a rate cut and 2 minutes of silence. Business Center takes you through the entire day, keeps you posted on all the news happening in the extended session. It was an historic day for the financial community as Wall Street headed back to work. What was it like for employees returning to Lower Manhattan for big business? We'll hear from a global leader of the financial community, Goldman Sachs CEO Henry Paulson. And in the midst of last week's tragedy, Oracle released its scheduled earnings report, but the company put off its conference call. Tonight, we'll hear from Oracle. And on Business Center, we'll hear from one of the top names in tech, Larry Ellison, on how his company is moving forward. Business Center starts at 6 p.m. Eastern, then at 7:30 Eastern Time. Right after Business Center, join me on the edge. The markets search for footholds on the first day of trading. We'll have all the action and show you what the first day back on the job was like for traders at one brokerage desk. We'll talk live with investment strategist Hugh Johnson at First Albany on how investors may navigate through these uncertain times. We'll also go live to Washington for today's developments, including the Fed's rate cut and Mr. Bush, President Bush, on the economy. And tonight, Mike Hegedus looks at the strength of the American spirit and life after the attacks. All that plus a look at tomorrow's trading in Asia tonight, starting at 7:30 Eastern here on CNBC. We'll take a short break. We'll come back and we'll do the roundtable. Don't go away.
I remember 20 years ago how they turned the racing world upside down. First by introducing a race car with quattro all-wheel drive, and second by having a woman drive it.
How can you provide for the future of the people who depend on you? With the power of Pacific Life. For over 130 years, Pacific Life has improved the lives of millions with investments, annuities, and insurance. Because careful planning today can help them reach their dreams tomorrow. Discover the power of Pacific Life.
Here's a look at the Dow intraday, and we are off the lows here, but off about let's call it 663 points, or 6.91%.
Wall Street gets back to business. CEO of UBS Kane Weber and Professors Jeremy Siegel and Robert Schiller talk about what investors should do now. Today on CNBC Market Wrap.
This month, Adelphia has it all. On HBO, Clint Eastwood and Tommy Lee Jones relive their glory days. Space Cowboys. On Cinemax, Russell Crowe fights for his freedom. Gladiator. On Showtime, Samuel L. Jackson busts out the attitude. Shaft. And on the movie channel, Madonna and Rupert Everett are looking for The Next Best Thing. Plus, you'll enjoy multiple screens of your favorite premium channels. Call today and experience Adelphia.
There's a place you can find most anything. Come see what's in store. The Hudson Mall, one-stop shopping. You'll find everything you're looking for. Everything you need, Hudson Mall. All in one place, Hudson Mall. Convenience, location, we've got it all. Everything you need in one place, Hudson Mall.
4 minutes to go in the trading day, and let's start our closing countdown. Our stocks editor, Joe Kernen.
Ted, 660 points. This is, you could take what happened in Europe and the foreign markets and multiply it out, and in that respect, it's pretty close to what you could have expected. If anything is striking certain people as interesting, it's the action of a couple of these Dow components like UTX and Boeing. I guess it's to be expected given the airline industry's problems, but that is really, those two companies threw the biggest drags on the Dow, as well as what we're seeing in any travel-related stock. It's quite amazing, but you've mentioned the word cocooning, Ted. Certainly what the market is indicating today. People staying at home and boarding up the windows.
David?
Yeah, if there was going to be a buyback program the way many of these companies have put in of late or increased, you'd expect that you might see some of that activity right now in terms of some of those companies at least trying to put a better palette on things as the day ends. But Joe's right. You know, we've had 6 days to prepare for this, as has Wall Street. And in fact, if you spoke to many people, they would have predicted perhaps something like this, or even perhaps even a worse performance for the market given the events. But still, ultimately, everybody I speak to has no answers. There's still a great deal of uncertainty, Ted, in terms of what to expect. We're in, and I hate to use a worn-out phrase here, but we are in uncharted territory with regard to the economy, with regard to how our political institutions are going to respond to global terrorism, whether we will be waging a long-term war, and what that means. So many unanswered questions, but at least we've gotten this day out of the way.
David, does the weakness in the stock market here create a certain kind of vulnerability, perhaps, in certain companies that would make them targets for acquisition?
You know, it's a funny thing. You might expect, given the weakness in certain companies, we'd see a lot of consolidation. But CEOs are confident and not confident, just like the rest of us. And in fact, events like we've seen recently typically will tend to hurt that confidence. So you don't see a lot of consolidation when you might expect it, at least when there's a great deal of uncertainty, Ted, unless it has to happen perhaps by virtue of the government mandating it, as we saw with the S&Ls and some of the banks in the late 80s, early 90s. So unclear that we really will see a great deal of consolidation until things settle down.
All right, David and Joe, thank you very much. Let's go to Tom Costello at the NASDAQ MarketSite, down now about 113.
Closing, yeah, we're going to close at the lows of the session, Ted. I don't know if we can take this shot yet, but I'm looking down below me, and we now have the same group that opened the NYSE closing this market. Richard Grasso from the NYSE, Wick Simmons as well from the NASDAQ, and a show of unity and solidarity. Also, Harvey Pitt from the SEC, pardon me as I take that off the phone. We've also got the chairman of the Amex, and Secretary O'Neill, as they try to put a coordinated, consolidated, unified front on this closing day in the markets. I would point out 2.1 billion shares. This is an active day, but certainly not the heaviest day the NASDAQ's ever had. This is not going to go down as one of the biggest point drops or percentage drops on the NASDAQ, and some concern out there that this market did not stage a rally late in the session. There's an awful lot of pessimism out there, lack of visibility going forward. Right. We've heard that before.
All right, thanks, Tom. Back to you in a bit. Tom Costello, NASDAQ MarketSite. Off to Bob Pisani now at the New York Stock Exchange. Bob?
Ted, they're characterizing this as an orderly sell-off. Certainly that is no consolation to people who are losing money here, but most of the people on the floor not happy about the point drop, but happy that they at least opened the markets, moved throughout the day. It was what they describe as an orderly sell-off here. We are going to have an all-time record in terms of volume. Again, no consolation there. 2.3 billion shares already. That's well above the 2.1 billion that was the prior record here. We had a particularly hard day for a number of groups. Some of the housing stocks overall, many of the cyclicals extremely weak here, and a lot of discussion we will have after the close about the whole patriotic rally here. Ted, back to you.
All right, Bob, thanks very much. Bob Pisani at the New York Stock Exchange. I will see you. That's one of the security guards for the New York Stock Exchange who's ringing the closing bell there. I leave you in the capable hands of Bill Griffith, Liz Clayman and company. Our One Market Wrap.
And thank you, Ted. There is the show of unity at the NASDAQ market site. Many of those people were at the New York Stock Exchange for the open of trade this morning on a day when we did see a wave of selling on the open this morning and this afternoon. But I guess the important point is that they did get the stock markets opened, and that in and of itself was a victory of sort for the U.S. financial markets today.
Real victory for the U.S. capital markets. I think all of us feel that way. And here to give their own opinions, after I say a couple of things, we have some wonderful guests, and I'd like to introduce them all as we move from left to right. Rick Ketchum, who is the president of the NASDAQ Stock Exchange. Secretary Paul O'Neill, Secretary of the Treasury. Sue Kelly, my own representative, member of the House and a member of the Financial Services Committee. Mike Oxley, the chairman of the House Financial Services Committee. Harvey Pitt, the chairman of the SEC. Dick Grasso, my great friend from downtown. And Sal Sedano, chairman of the American Stock Exchange. Well, the capital markets passed their first test today, and we all couldn't be prouder of what they did. It's not going to be the last test, it's just the first test. But everybody who had an opinion to register in the financial markets of the United States, whether they were here in this country or abroad, had the chance to register that opinion today. And you saw the outcome. Markets will be markets, and markets made their judgment today, but at least everybody's opinion was there. As I say, it's not going to be the first test for these markets. I think most of us have learned when you go through an event of this sort that the aftermath plays out relatively slowly. I said everybody's opinion who wanted to put their opinion in the market was there today. I'm sure there were some who didn't register their opinion. Many buyers, for instance, who watched to see just at what levels the market might stabilize and gain some equilibrium. Hopefully they'll be there on another day. We'll certainly be there. Financial analysts will take account of what happened today. They'll look at that vis-a-vis the various forecasts they had previously made, get some idea as to whether or not they were right, and make their decisions. Certain companies who have buyback plans will evaluate those plans vis-a-vis the market action of today. And it won't be until the next 2 or 3 weeks play out that we really get a sense of exactly how people are judging the impact this particular physical tragedy that the United States suffered will have on the markets and their economy in general. All I know is we gave them a chance today, and the financial markets came through with flying colors. So what I'd like to do is turn the mic over to Mr. O'Neill, and Paul, ask you what your views of today's trading patterns were.
Well, thank you. Thank you, Wick. This morning downtown at the New York Stock Exchange, we started the day with thumbs up, and I think we should end the day with thumbs up at the NASDAQ market. If you haven't noticed, there was a question last week about when U.S. financial markets could restart, whether we could actually trade shares even today. If you've looked at the board, you see today between the NASDAQ and the American and the New York, we traded 4.5 billion shares or more, which I believe is a record for these combined markets. So not only did we traded more shares than ever before. And I think to what the Vice President said yesterday, we wanted to put a thumb in the eye of the murderers and show them they couldn't stop our economy. We really did it today.
Mike Oxley?
Rick, thank you, and to you and Dick and everybody.
So the closing ceremonies continue there at the NASDAQ market site on what was, in fact, a historic day for the U.S. financial markets. And we bid you good afternoon. Welcome to Market Wrap for this Monday. I'm Bill Griffith.
And I'm Liz Klayman. Thank you for joining us and for being here with us. As expected, pretty grim day on Wall Street. The Dow suffered its worst day ever in terms of points lost as Americans and investors around the world anxiously monitor how U.S. stocks respond to last week's terrorist attacks on New York and Washington. The White House says it is carefully watching events on Wall Street, and the Fed has already stepped in to support the financial system. That happened this morning, cutting interest rates by 50 basis points. That cut quickly followed by the European Central Bank, which mirrored the move, cutting Euroland rates by 50 basis points as well. Here's how we look to close out the first day of trading after the 4-day closure due to last week's tragedy. First, we'll begin with the Dow. As we mentioned, yes, it was the worst point drop ever, but in terms of percentage losses, no, definitely not even close to the worst one. We had the Dow Jones Industrials down 684 points, ending the session at 8,921. Moving on to the NASDAQ, it was not one of the biggest pointer percentage drops ever. It, however, did take quite a hit, down 115 points at 1579 3/4. Checking in on the bonds, we had both of them down, with the 10-year yield at 4.62% and the long bond yield up to 5.42%. We have our reporters lined up to tell you how the markets responded today. Bob Pisani is at the New York Stock Exchange. Tom Costello live at the NASDAQ. Michelle Caruso-Cabrera will run through the key sectors of the day, such as airlines and insurance, as well as some other big movers, some to the upside. And then Rick Santelli is in the Dow Futures pit at the Chicago Board of Trade. Now, in addition, we have market experts on deck to discuss what happened during the day, including Joe Grano, Chairman and CEO of UBS Payne Weber. Jeremy Siegel, he's a professor of finance at the Wharton School. Also, Robert Schiller, behavioral economist at Yale University. Phil Dow, director of equity strategy at Dane Rasher Wessels. Susan Phillips is a former Federal Reserve governor. And Tom Gallagher, political analyst with ISI Group. Let's go right down first to Bob Pisani, who's at the New York Stock Exchange. Bob.
Liz, it was certainly a day for the record books. Let me give you two records. You mentioned the biggest point drop ever. It was 684. Now the old record, well, it was 617. That was back on April 14th, 2000. But do bear in mind, Liz is right. On a percentage basis, it's not even close. Certainly severe. We're down about 7% today. Is that a lot? Yes, it is. But is it anywhere near a record? Not even close. What's the biggest percentage drop ever? Well, you know what it was. It was October 1987. October 19th, 1987, the Dow dropped 22.6% in a single day. So remember, we were down about 7% today, the all-time record down 22%. It is the biggest volume day ever. In fact, by far the biggest volume day. We're approaching 2.4 billion shares. The old record was right around 2.1 billion shares. Most people described it as an orderly sell-off, and I recognize that is no consolation to people who lost money on the stock market. But a lot of people down here on the floor were primarily concerned with getting the market open and moving through the day, at least in a fashion that could be described as orderly. And if that is your goal and you consider that a victory, then there was certainly a victory today, although, as I said, no consolation to people who lost a lot of money. And here you see the greatest Dow Jones point losses here, the former one, April 14th, 2000. But do bear in mind, it is the percentage changes that are really important. I think we have the sectors today. I just want to run through them very quickly here to show you what lost the most here. Transportation stocks obviously got hit the hardest. They were down 14%. Airlines got hit very, very bad throughout the day. Certainly that was understandable. Capital goods stocks down 9%. And these are the United Technologies, the General Electrics of the world. A lot of stocks were down about 10%. That's the bottom line if you want to know what happened today. Those consumer cyclicals, so we're talking about retailers and entertainment stocks were weak. Basic materials, the paper stocks and the aluminum stocks weak. Tech's down about 6.3%. There's a lot of different debate about where we were today and what does it mean today and what does what happened at the Trade Center mean for the markets. The bulls had a couple of important points. They've been saying it's an important part of the bottoming process for a long time now. For the last several days, they've said we'll find out a little bit more, that stocks are at very attractive levels at this point. This is what the bulls have been saying. The bears have also been advancing several important arguments. There's been a lot of talk about a patriotic rally, but a lot of the hedge funds and so-called smart money that I talked to said, patriotic rally, this is no time to lose your investment discipline, to start investing just for the sake of investing, to not wear your heart on your sleeve. They noted the world world has changed. It is different than it was a week ago. To argue about a bottoming process now, if there was no World Trade Center disaster, would certainly be a valid point, but it's not. The world has changed. Where is the beginning, middle, and end to a war like this? One of the oldest traders down here, Peter Mancuso, specialist for many years, said that the biggest rally he's seen in his life was right after the Cuban Missile Crisis. And yet he noted in the same sentence, this is a different situation. We had a crisis then, but it's a slightly different situation. They're going to be debating this for a long time here. The bottom line, though, no one happy down here, but they are proud of the fact that they got through the day in an orderly fashion. Tom Costello over at the NASDAQ, I think you can say the same thing as well.
Absolutely. A bad day for the markets, but perhaps a victory for the capital markets as a whole. We can tell you that the NASDAQ 100 saw 31% lose to a 52-week low today. In addition, I can tell you that this market did not suffer, or did not see, rather, the heaviest volume day ever. In fact, 2.2 billion shares. And in terms of point and percentage loss, not a record breaker either. Let me show you, though, what the NASDAQ comp is looking like on a 3-year hot chart, because you'd have to go back to October of 1998 to see the last time we traded below 1,600. The big caps, your money likely, traded like this today. We had Cisco, Intel, Microsoft, Sun, Oracle, everything here moving to the downside ever so slightly in some cases, but in some cases rather dramatically, like in the case of Microsoft and Intel. Travel plays got hit very hard today. Anything travel related, with the prospects of people cutting back on their travel plans. That included Northwest Airlines, Frontier, SkyWest, and those online travel agencies like Priceline, like Expedia, like Travelocity, all getting hit rather hard. Expedia really taking it on the chin today. Let me show you those stocks that moved higher. They were security stocks on the NASDAQ. In fact, any company that was involved in making bomb detection devices to intruder detection devices, identification devices, all of them getting a nice run up. In the case of the first one there, Envision 174%, and the third one there, Visage, up 130%. Finally, a lot of companies taking advantage of the relaxed SEC rules to buy back their shares, and they include some of these on the screen: Akamai, Sanmina, Siebel, Cisco, and Transwitch. There were others, but just a quick mention of these. All of those today announcing share buyback plans. We closed at the lows of the session. It was a bad day. We're hitting at levels we haven't seen in almost 3 years, and yet in the macro picture, the financial markets are open. Liz, back to you.
Yeah, and as you say, part of the victory very much so today is that things opened and went rather smoothly. Thank you, Tom. Tom Costello. Now we move to Michelle Caruso Cabrera with a look at what stocks got hit the hardest today and perhaps any bright lights that the market may have seen. Michelle.
Liz, today Wall Street was open for business, but it was a tough session. The day started with a half-point rate cut by the Federal Reserve, which was followed by similar moves from a number of European central banks. There was record volume and stocks did sell off, but not as much as some strategists had feared. There had been predictions for a drop of 10%, which would have halted trading for an hour, but that never happened. Still, floor trader Art Cashin told Ron Insana he would have liked that Fed rate cut to come just a little bit later.
If I had been doing it as a trader, I might have held off until 11 or 11:30 in the rate cut just to let the selling get out of the way. This way you cut rates and you knew they were going to sell off in the morning, so it almost looked like the rate cut had no effect, and I don't think that's true in the long run.
Here's a look at some of the biggest moving sectors today. Airlines were the hardest hit, off 40% as a group. The insurance sector, which we've heard so much about, fell a comparatively small 5%. Brokers 10%. Financial services firms were off about 5%. Hotels fell 20%. Retailers off 6%. Autos down 13%, and semiconductors 8%. Moving on to the next board, areas that managed to do well or at least hold on. Defense stocks shot up about 15%. Pharmaceuticals were flat to higher, which is saying a lot in today's market, and gold mining was up about 4%. Looking at specific names, not a single airline escaped the carnage, even with reports that the government is likely going to bail out the industry. Some of the insurance companies that were hit hardest included Hartford Financial, AIG, Chubb. It's estimated the attacks will cost the industry anywhere between $20 and $30 billion. And fears about the uncertain economic situation led some to believe there will be an even sharper decline in trading and underwriting revenues, which led to a sell-off in the brokers. Most of the defense stocks did well, though, on the expectation that they're going to get a lot more funding from the Pentagon as a result of the attacks. Boeing, however, you can see, did not participate. Boeing also has heavy exposure to the airline industry, and orders for passenger jets are expected to decline. Dow component United Technologies warned mid-session that due to their exposure to the airline industry, fourth quarter earnings will be much weaker than expected. That pressured the Dow as well. But defensive stocks like tobacco companies, select drug companies, and also gold mining companies did see gains. These were the winners of the days. Also helping to keep the market off of its lows, numerous companies announced they would buy back stock. General Electric, Cisco, and UPS all confirmed today that they were buying. There are also reports from mutual funds that investors were not in a panic to sell.
The best advice is the same advice now as it would have been stay the course. It's always been the best advice.
On the redemption front, I just talked to our center in Milwaukee that handles redemptions, and we've only had one redemption for $30,000 because the person was going to buy a house or something.
Bill, that's today's play-by-play. Back to you.
Michelle, thank you very much. Let's look ahead now. Rick Santelli monitoring the Dow futures trading at the Chicago Board of Trade. Rick?
Well, the closing bell just rang here at 15 after 4 Eastern time. Orderly. If traders... Well, that was the closing range. If traders had to summarize their feelings, the words I'm hearing are the markets were honest. They did see some scattered buying, but for the most part, they saw selling. They saw most of the paper, especially some of the smaller retail paper, was on the sell side. The market makers and some outside institutions were on the other side, but there wasn't a concerted effort to prop the market up, and traders thought that was a good sign. It means that there isn't another shoe dropping mentality over the next several sessions. The key, Art Cashin said he thought they should have waited on the rate cut. Many of the people I talked to thought that the timing was good. Not only our bank, but 4 other central banks, the Swedish, the Swiss, the Europeans, and of course the Canadians followed suit, and the Bank of England has a high probability to join. Looking at the day from one giant macro viewpoint, we see that the parking lot of short maturities that have held cash reserves in lieu of the uncertainty of equities were a bit lower. Maybe some money's being equitized, but in terms of the long end, as you pointed out, insurance companies didn't get hit that hard. Treasuries were lower, but orderly. Back to you, Liz and Bill.
Thank you very much, Rick Santelli. The Fed, of course, as Rick mentioned, stepped in today before the market opened to help add liquidity to the U.S. financial system, cutting interest rates by 50 basis points down to 3%. It was the Fed's 8th interest rate cut of the year. Hampton Pearson is standing by in Washington now with more on the Fed cut. Hampton.
Well, let's remember how this all happened. 1 hour before the markets opened, Alan Greenspan and his fellow Fed policymakers announced that 50 basis point cut in key short-term interest rates in the hopes that it would at least be perceived as a well-timed move aimed at boosting both investor and consumer confidence.
If the Fed had not done it, the Fed would have left the money markets out on the limb because the markets had already brought rates down to this level. So the Fed verified what was already in the market, and thereby the Fed wasn't a hindrance in regard to the a fair level opening of the equity markets.
Now, a few hours later, in a truly surprise move, the European Central Bank, which had resisted previous calls for rate cuts, lowered its key interest rates by ½ percentage point.
I was glad to see the action by the Europeans today in moving on their interest rates, and Alan Greenspan's action seems to me perfectly appropriate.
Now, the FOMC is also saying it will continue to supply large volumes of liquidity to the financial markets until, quote, a normal market function is restored. They've also hinted at even more interest rate cuts, citing economic data showing weakness in employment, production, and business spending even before last week's tragic events, leading some analysts to say it now appears that both the economic downturn and the recovery will be steeper than earlier forecasts.
It looks to me as though the economy, was in recession and will go deeper into recession in the fourth quarter. On the other side, these rate cuts around the world and pushing the U.S. economy down like a spring gives you a chance to spring back when you get into 2002.
And when all is said and done, today's Fed action marks the 3rd time this year they've actually cut interest rates between meetings, and the cost of borrowing money is now at its lowest level in 7.5 years. Bill?
Hampton Pearson in Washington, thank you very much. As we continue our special coverage of a special day on Wall Street indeed, joining us to talk about how it went in his view and how the brokerage companies are dealing with the restart of trading, Joe Grano is Chairman and CEO of UBS Paine Webber, joining us today from his trading floor in New York. Mr. Grano, nice to see you again.
How are you, Bill?
How would you characterize today's trade?
Well, I was fortunate to be on the floor for the opening.
And there's been a lot of collaboration throughout the week between the federal sector, public sector, and the industry. And seeing that opening was invigorating. But more importantly, I think today's market activity tells us something different. Not only did the largest exchange in the world get up and running despite the horrific tragedy, but it also experienced record volumes. And the liquidity provision to the capital markets here and around the world is very significant, and I think gives us all a big sigh of relief.
Mr. Grano, what do you make of the numbers that we see here at the end of the day? Is this the day not to take into too much consideration or to give too much weight to at this point?
Well, I think that depending on what your anticipation was, most of us assumed that there'd be an early sell pressure on the market. And then obviously you've seen a rotation out of travel-related securities moving into defense stocks and the like. But this liquidity provision that took place today can't be ignored because many of the trading houses had to hedge the bet to some degree, some short selling as they provided that liquidity at an unprecedented rate. So I think what's important is that the 7% drop is a far cry from the 22.6 we saw in 1987. It was under a lot of analysts' expectations, frankly. I'm most encouraged by the liquidity provision, the fact that our infrastructure held, dealing with an unprecedented volume rate. And by the way, our buys versus sells in the retail sector actually had a buy bias. Of course, the breadth of the market was somewhat disappointing, but the retail investor literally showed calmness and cool and being very collected in this market.
What will you look for now to discern clues about the direction the market goes from here?
Well, if history's any lesson for us, it generally takes a day or two for the chaotic side of this to move to discernible trend. I'd rather not speculate as to what that trend will be. I will tell you this, however. Everybody is doing the right thing. The fact that the Fed has been providing liquidity to the banking infrastructure throughout the week, the Fed dropped today, and obviously the propensities of consumers are going to shift here as, frankly, we go from the unknown to the known, and the emotions of what's transpired to associate some people throughout the country become known. I think that's going to have a negative impact, and the emotional fever will rise because of it. But I believe that the mistake that they made, the terrorists, is that they've created tremendous solidarity, and I think personally that you're going to see a bottoming out here, and you are going to see a springboard back up as we move closer to a normal market.
Mr. Grano, thank you.